Good morning, everyone. Hello and good morning. My name is Kelly Clement. Welcome to day 4 of the Traders Conference presented by MetaStock. So we are day 4 in. We have had 24 hours of presentation so far. We have learned a lot from our different presenters so far. If you haven't been here, you are able to go back on YouTube and watch the previous recordings. But definitely be here for today's presentations. We have an amazing lineup, which I will go through in just a few moments. First of all, just checking to make sure everything's working this morning, and we're looking good. I did want to let you know that we are MetaStock. We are the hosts of this Traders Conference. We're very excited to be presenting this conference to you today and during these whole 5 days. As we get started, I am going to introduce you to MetaStock, who we are, what we do, and by doing that, I'm going to show you just a quick video that will introduce you to MetaStock and what we do here.
Stick around for about 3 minutes, and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the power tools. The power tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar Oscillator System, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Okay. There we go. Welcome again, everybody. My name is Kelly Clement. I am your YouTube host today for the Traders Conference. We are excited for today's lineup. Let me just show you what we have going on today. Let me just bring up my webpage here. All right, so today we are very excited to start the day with Tushar Chande. This is going to be very exciting. This is the first time we've had him in the MetaStock conference, so we are very excited for that. Next, we are going to have Jake Bernstein, always a fan favorite. We're just going to go through the morning's presentations here. Then we have Anne-Marie. She is fantastic. If you've not heard Anne-Marie, she does an amazing job on doing her analysis. And then after that, Mark Leavit. And then we will continue through the day with Vince Vora, then John Seville, and then ending the day with Peter Dala. So great day lined up today. A lot of good education again. Let's go ahead and turn that off. So we are very excited for this lineup. Abdullah, you're asking what the price is now for MetaStock. We have some awesome promos going on. In just a few moments, I'll put a link into the chat where you can talk with our sales staff for the conference promotions that we have going on and how to easily talk with them. It's just actually metastock.com/sales chat, and they can tell you about all the great promotions going on for the conference. We are going to be getting started in about 3 minutes here. So I'm just going to go check in with the presenters, make sure everything is up and ready to go. But again, as you come into the room today, please tell us who you are, where you're coming in from. We'd love to hear where people are attending the conference, where people are attending the conference from. We're here in beautiful Salt Lake City presenting this conference today. Again, my name is Kelly Clement. Jeffrey Gibby is going to be your host on the GoToWebinar side and guiding you through today's presentations. So let me go check in with them, make sure everything's up and running, and we will be right back with you. Okay, looks like everything is ready over on the presentation side, so in about 1 minute here we'll be getting started. Again, my name is Kelly Clement. I will be your MetaStock YouTube host today. I'll be answering the questions on the MetaStock chat. Jeff Gibby will be hosting us through the presentations today, and we will be starting the day with Tushar Chande. We are very excited for this. Again, welcome to the Traders Conference. Tell us who you are, where you're coming in from as you come in today. And let's go ahead and get the show rolling.
Oh, we better do the lights. I feel like this is a little bit light, Kelly. Okay. Oh, so what you're saying is we're live then? I did not hear that. All right. Hello, everybody. Good morning. Welcome to day 4 of the Online Traders Conference. I'm glad you came. As you log in, hello, Matt. Hello, Neil, Anton, Greg, Abdullah. As you log in, say hello. Tell us where you're from. We'd like to hear from you. And we have Kelly was just telling me what a great lineup we have for today. So it's good to have you. I'm glad you came. Let's read this legal disclaimer. Let's get the legal out of the way so we can move on to the good stuff. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins and is not a recommendation to buy or sell, but rather it's a guideline to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information in connection with the company. Good morning, Fortunate. As you come in, say hello. If you're watching on YouTube, like, subscribe. Good karma comes. The first thing I do want to say is thank you to Stocks and Commodities for sponsoring our events. They are a great sponsor. 17,000 articles, 1.3 million subscribers. They've been doing magazines since 1982. I've got a copy right here, and I get one every month. I've got it for the last 25 years in a row. It's a great magazine. So the other thing that's also great is if you take advantage of any subscription today for MetaStock, you're going to get 5 months for free. And if you do 2 years, you're going to get, well, if you spend $300 or more, you're going to get 2 years. This is all given to by Stocks and Commodities. They don't charge MetaStock for it. It's part of their sponsorship. And that just goes to show that they are pretty awesome. And this sun is coming right in my window. So I'm going to, I'll adjust that in a second here. Or actually, Kelly is going to come in and kind of get the sun out of here. So that's pretty good timing, too. That wasn't like that 3 minutes ago. No. All right, CMT Association is the second sponsor we're going to bring up this morning. CMT is a great organization. They've been sponsoring just a few of our events, but we really happy to be working with us. Larry says, where do I find the chat function? You did. That's where you can kind of chime in and type in, and that's where it comes in. Thank you. Good morning, Ari. It's good to see you. Good morning, Terrell from Port Angeles, Washington. Good to see you. There you go. I want to thank Greg for the suggestion to close the Baiynd in the studio. Let's see. We are MetaStock. We've been rated #1 in our software category 28 years in a row. It's a great company to work for. It's a great software program. Our pricing starts at we're going to talk about MetaStock all day long today, but pricing starts out MetaStock for $59 per month is all. We're offering a special where you can buy 1 month and get 2 for free. We're here all day. You can go to metastock.com/conf promo to see kind of the products we're talking about. You can give us a call at 800-882-3040 if you have questions. And you can go to metastock.com/sales chat. So that gets the formalities out of the way. Good morning, Daryl. It is good to see you. Our first guest today is actually, I have a pretty interesting story. Tushar Chande is a gentleman. I've been talking to him for several months now. I think he called me. I'm going to say I think it was way earlier in the year. And he's like, hello, hey, Jeff, this is Tushar Chande. And he started to introduce who he was. And I'm like, Tushar, I knew who you are. We actually have a system in MetaStock that's called the Performance System Stochastic RSI. And that was developed by Tushar Chande and Stanley Krull. But the reason I knew it was who Tushar Chande is if you do system tests in MetaStock, I've been doing system tests for decades, it's always one of the most profitable systems. So we're working on some stuff with Tushar. It's not ready quite yet, but he is a great designer of systems that have I've actually, that stochastic RSI has been in MetaStock for decades, and it's been working well for decades. So and that's a little bit of who Tushar is. We're pretty happy to be working with him. One of the things I'll say about Tushar is he's very, very smart. He's very, very attention to detail oriented, and I really like his newsletters. So there you go. Tushar, how are you doing? Let me go ahead and unmute your microphone. I just remembered I did. And let's get you going today. Good morning, Tushar.
Good morning, Jeff. How are you today? I see you gave me a very kind introduction.
Yes, yeah, well, and it was all deserved. Literally for decades, performance systems, Stoch RSI, it's a great little indicator you developed with Stanley.
And Jeff, just as a byline, this month's Stocks and Commodities magazine, which is a November issue, actually has one of my articles on the cover, amazingly. I don't know which issue you have.
Oh, this is the March one, but I saw that, actually. I saw that in the November one. This is one we just left in, the room.
So, as a coincidence, I come here bearing gifts, an article, cover story in this month's Stocks and Commodities.
Awesome. I think I just sent you the presentation.
Yes.
Or the screen. So there we go. Good morning, Michael. It's good to see you. All right, I can see your screen. I need to get my coffee. I can see your screen. We can hear you. I'm going to get out of the way, Tushar. I'm really excited to see what you have to say. It's your turn. Go.
All right, thank you. Good morning, everybody. Hope you're settled with your coffee and you've turned down the windows slats so the sun's not getting in your eyes. Hello, and let's give a round of thanks to MetaStock for inviting us here, and also for putting on a great conference. To everyone, Kelly and Jeffrey and everyone at MetaStock, they've put on a fabulous conference, and I hope you've had a chance to look in and get some of the great trading ideas from the many speakers they have. My topic today is finding needles in haystacks using highly selective trend following and counter trend strategies. So in the future, you will want to find opportunities that'll help you succeed as traders. And I will show you tools today that'll put you, a good step towards achieving those goals. A little bit of housekeeping. This is my disclaimer. Essentially, it's a reminder that it's do not underestimate the randomness of markets, and that past performance is not necessarily indicative of future returns. So this is just a disclaimer. You can read it. Now, I write a weekly newsletter. You can find it at chandeindicators.substack.com. So I hope you'll tell your friends and family and pets, if they can read, to sign up and come along for the ride. We talk about current market conditions, trading ideas, stocks, ETFs, crypto, whatever and of course, if you want me to cover something, don't hesitate to write. If you have a question, just hold it till the end. I have a lot of slides to go through, or you can send them to me by email at q@chandeindicators.com. This is the header of my site. I have a robo-advisor if you want to build retirement portfolios and play around with that. There's a stock finder and an ETF finder that are tables to help look for opportunities if you're an investor, a short-term trader, or a medium-term trader. And some of it is related to what I will show you today. All right, so with that as an introduction, let's get started. So I'll use the next 9 slides or so to set up the talk, to kind of give you a picture of what I'm trying to do and how what I will show you can help you in the future, because ultimately that's where you're going to be trading. So I think the problem that we all have, and I'm an average trader, all average traders have, is that there's way too many opportunities. So if you think of each exchange as a haystack, there's these gigantic haystacks with hundreds and thousands of opportunities every day, and we simply don't have the time or the capital to take advantage of them all. So our goal, our challenge in the future is to find opportunities or needles in the haystack that best fit our style, our approach, our goals, our capital requirements, and so on. So I think the problem is that too many opportunities. How do you find the ones that give you the best chance of success? And my proposed solution is actually quite simple. You start with robust tools, and I will show you the ones that I would like to use. We run them through the MetaStock Explorer and apply them to the gigantic haystack. And we want to crunch and munch it down to a teeny tiny bale of hay, maybe a few wisps of straw that you can then feed into your trading process, which could be discretionary or systematic. And I'll sort of nudge you towards the systematic end of the pool, if you will. So that's sort of the schematic of what we're trying to do. And what are these robust tools I keep talking about? So there are two types of tools, and we're sort of asking two generic questions. The simplest tool just says, show me everything that's trending, either trending up strongly or trending down strongly. And we will do that with something called a trend meter. The trend meter is a multi-tool. It combines many different tools into a single object that gives you one number, and it gives you, more importantly, a way to make an apples to apples comparison. So you can compare something in London to something in New York or Mumbai or Johannesburg. You can compare bonds to stocks on the same consistent scale. You can use them on across time frames. You can use it on a daily data or weekly data or intraday data, and it always means the same thing. So it's scalable. And then the second approach is to take a systems approach, where you try to find price patterns or stocks that meet specific criteria. And I've broken it down into long-term systems for the investor, and then the volatility breakout system and the swing system for someone who's a short to medium-term trader. Now, don't get bogged down in these verbiage that I use, because you can use these on any time frame. So if you think it's not moving fast enough, you can use a shorter time frame. If you think it's moving too fast, you can use a longer time frame. So that's the overall approach. Is it trending? You have one tool. Give me like a systems-based thing with entries and exits. You have other tools. And we'll look at these in detail. And ultimately, as I'm sure you've seen many times, we'll use the Explorer. We'll pick a particular system. For example, here I chose a volatility breakout system. I applied this to the NASDAQ stock, so a big haystack. And this is what we're looking for, a high rejection rate. So we started with about, say, 3,900, 4,000 stocks and boiled them down to 80. And imagine the savings of time and effort and heartache if you can focus your efforts on just a handful of stocks, so you can manage the opportunities in a way that best meets your goals. Well, at this point, you'll say, yeah, that's great. I have the robust tools. I have a trading process. We're good to go. What are we missing? And I want to remind you that because of the randomness of the markets, there's a very important piece that's missing. And what is that piece? That piece is confidence. So remember, this trading requires confidence. The market will test your beliefs every single day. It'll create conditions that will challenge your beliefs. It'll ask you, what do you believe? Tell me. And you can only trade what you believe. And for the robust tools, I'll explain the entries in detail, the exits in detail. I'll show you the failure modes. So the combination of this knowledge will give you the confidence to use the tools effectively in your own trading. And the market will constantly create conditions that will test and challenge your confidence in your robust tools or whatever tools you use. So this is a very fundamental and important area where I can add value, give you the confidence to trade. So the formula is simple: tools plus confidence is success. And I will be really adding value in this box here, where I will explain the details of the tools so you can apply them with confidence when you see the results of the output and feed them into your trading process. Now, I love stick shifts, so I just want to sort of use this as a guide. This is from a very, very old car. So if you're stuck in reverse or in neutral, you're not moving forward, and you will literally have to shift gears and choose a trading system or a trading process in order to make the trading decisions to get ahead and be successful. Now, not every trade will be a winning trade, so I want you to think of my tools not as for one trade or two trades, but for hundreds of trades, for thousands of trades. So you can either make large number of small bets or small number of large bets. And for for the average trader like you and I, it's really a large number of small bets. And that's really what the pros do. The difference between the pros and the amateurs is that the pros make a large number of small bets. So you're making hundreds and hundreds of trades. And to do that, you have to be decisive. You have to get in gear. And trading is analysis and action. So remember that. All right, let's take a breath. You're going to say, well, that's great. You showed me all these tools. What does it mean? Show me on charts. So I'll use the next 9 slides to kind of put the tools on the charts so you get a visual. And then after that, I'll dive in and give you more details. So right now, we're just in the setup phase. We're just trying to kind of give you a visual, give you a sequence and a sense for what we're going to do next. So this is the Chande Trend Meter in the upper panel, Tesla in the lower panel. Question is Tesla trending strongly? So as a reminder, the trend meter is on a scale from 0 to 100. I've drawn lines at 90 and 20, but you can use any combination you like. And if you just focus on these 2 purple lines, this is mid-November of 2020. Tesla was consolidating in this triangular formation, and then it was going to be added to the S&P 500 index. So there's this big rally leading into its addition to the index in this general area and a follow through, because all the index funds would have to buy it. And then it consolidated for a pretty long time, possibly made a double bottom. So if you just look at these 2 purple lines and you come up here, you see Tesla trending strongly. The trend meter is above 90 and flat, pretty much going across. So it's very easy to interpret. There's nothing magical. We're just saying if the trend is strong and going higher, it'll be above 90 and flat. Conversely, if it's going lower, then it'll be below, or it'll be close to 0 and flat. And there's a little example over here. So the trend meter is a tool to just answer the question, is it trending? And see that when it's not really doing anything here, the trend meter is also sort of going sideways. And a little dip below 20 here, so you could see whether this is a double bottom, ask whether this is going to go lower, and so on. So you can trade with the trend or against the trend using the trend meter. Remind the scale is 0 to 100. Okay. So that's fine. Now show me a system. So here's a system. Again, Tesla. This is the same triangular consolidation we're talking about, November 2020, strong rally. Then there was this big consolidation, and then we had this rally up again. Now the volatility breakout system is a single bar test. There was a big jump up, it got in here, followed the trend, got out here, which is really only 3 days after the absolute high of the move. Brilliant, couldn't do anything better. Here, there was an announcement that Hertz was going to buy 100,000 Teslas. Tesla popped. We captured the pop. It goes up, but then you see it reverses pretty rapidly because Elon Musk was selling 6 billion in stock or whatever. And you can see that the exit strategy was a little slow in getting out. So this is an example of how A, we're looking for a single bar action, and B, if you have a trend following exit, it's not necessarily going to give you the best exit every single time. But that's for another story. Key thing to remember, very selective, only 2 signals in 15 months. You can put some other system that just gives you like a signal every 5 days, and we don't want that. Well, if I go back to this chart, you say, well, that's great, but there are all these trading opportunities here, and you didn't do anything with those. Okay, fine. So this is Tesla with the swing system. And you see we've captured some of those other trading opportunities. So obviously it got in early on this big move up. And again, the same exit strategy, so no problem. See here, there was a sell-off, we bought the bounce, sell-off, we bought the bounce. 7 signals in 15 months, so it's a bit more, but still very selective. And of course, if it gets trapped in a trading range, it could get chopped. But this is an example of a different logic, a different entry system that capture a different type of price action in the same stock. So you have to think of systems as being able to respond to and capture different types of price action. And this is Tesla with the long-term system. So this is again the same big move up in November, December of 2020, 2021, big consolidation. This system did absolutely nothing in this entire period. And then we got an entry signal, long-term entry signal, market went higher, and then you see we got out not too far, about 1, 2, 3, 4 days, 3 days after the absolute high of the move. So again, we had no idea where this was going. Unless you're an insider, you had no idea that Hertz was going to make this big announcement. But the system was able to detect that the long-term trend had started. So we are on board, and we just went along for the ride without knowing where it was going. We got out here. So that's Tesla with a long-term system. So the same price pattern or the same window of time could be traded with 3 completely different and unrelated entry systems or approaches. And that's the sort of thing I want you to remember so that you can apply this machine over and over again. Now, I don't want to give you the impression that these are only applicable to US stocks. This is an example from London, VPC specialty. This is a volatility breakout system. You see, we've got a single bar jump. So we've met the criteria for a potential entry using the volatility breakout. So this is simply an example of using the same rules without a single change, not one change, no optimization or anything like that on a completely different haystack. So we're just trying to find needles in a different haystack. Sorry. This is an example of Mumbai Federal Bank swing system. So if you follow from left to right, we got this. There was weakness, we bought strength, weakness, we bought strength, weakness, we bought strength. Again, weakness, we bought strength, weakness, we bought strength. So beautiful trends. We got, we were able to pick the swings in this federal bank in India with not a single change in the rules. So the same rules are being applied to a different haystack, and the rules respond and recognize to a particular type of price action. This is State Bank of India, also from Mumbai, long-term system. There's some reference material. We don't really care. We got in here. It went around. Our exit is here. We're just going to keep following along. We got stopped out. We don't know what it's going to do next. Gets along again. Keep following the system. Now we might have gone stopped out today. I haven't checked. But the idea is that this is a mechanical process, and the advantage of that is you always know what to do. So if you think of a discretionary trader, they'll say, "Oh, I'm overwhelmed. I don't know what to do." As a system trader, you always know what to do because the system tells you what to do. It tells you where to get in, tells you where to get out. So this is an example of applying a long-term system to a completely different exchange, a different haystack, and finding a good opportunity. One more example, this is from Nikkei 225 Recruit Holdings. Here I put it in there to show you that the selectivity was 99, almost 100%. So you just knocked out a whole bunch of 224 stocks, and you just have to think about one stock. What could be easier? Again, same thing. We got an entry. We're long. The market goes. And remember when this thing rallies, the stop rallies. When this goes sideways, the stop kind of goes sideways. It rallies again. We are moving up. Now we've come close. So that's the kind of repeated process that we are trying to identify and follow. We don't have to use any discretion. Only discretion is, do you want to trade this thing or not? So obviously that's something on your side in terms of, because that's tied in with the money management, and I really don't address that because I don't know what your constraints are. Okay, let's summarize. Systems capture different market action, and the base, this is Tesla again. The base here is the swing system. On the right-hand side, we have an overlap of the swing system and the long-term system. On the left-hand side, we have an overlap of the swing system and the volatility breakout system. So what I want you to remember and recognize is that different types of price action can coexist in the same stock at the same time, and each system captures different types of market action. And these types of market action have been shown to be profitable over time, though obviously on any given period of 1 month or 6 months, you can find more winning trades and losing trades, or more losing trades and winning trades. All right, let's take a breather. I'm letting loose a fire hose of information. You're wondering what's going on. I'm swamped. So let's take a quick review in 6 slides, kind of try to put this system side of the view together. So the columns are the price trend. They're rising or falling. The rows are trading strategy, trend following a counter trend, and we have a 2x2 matrix. This is a 2x2 matrix. So when the prices are rising and we want a trend following strategy, we buy the breakout. So this tells you how the strategies fit together. What's the logic in fitting these guys together. And then when the prices are falling, we're using a counter trend approach, we buy the dip. So buy the breakout, buy the dip. You probably see this in the media all the time, buy the dip, buy the dip. It's almost like a food commercial. But the point is, this is how it fits together. There's a 2x2 matrix. When prices are falling, you want to be counter trend, you buy the dip. Now remember, the parameter sets are the same on all instruments, no optimization. These two words are very important. I'll explain those in a minute. Same thing, but this time we're going to put in the system names. So again, we have rising prices, trend following. This is where the long-term system sits. And then falling prices and counter trend approach. This is where the swing system and the volatility breakout system sit. So now you see how these systems fit together. And you can see now, if you visualize the Tesla chart, you see that prices were falling, they were consolidating. When they broke out, that's when we use these swing system. Then there was a long uptrend on the right-hand side of the Tesla chart in the recent past, and that's how we traded with the trend following system. And clearly, the trend following system can ignore falling prices other than to exit. And similarly, the counter trend systems can ignore a breakout or anything like that, because that's not what they're looking for. So this just gives you a system view of how things fit together. And remember, no optimization. Now, what does that mean? This is a very important slide, so I want you to focus on this slide. This says robust rules philosophy. So no optimization means that the same parameters are used for everything. So if you're an equity trader, you might build a system around the quarterly expiration of the options. If you're a bond trader, you could build something with buy in the middle of April and sell at the end of April to take advantage of tax season or unemployment reports. If you're a bean trader, you have old crop, new crop, and so on and so forth. If you're a energy trader, is it in contango or whatever. But we don't do that. So we have no market-specific information. We don't know anything about the internals of that market. Because of that, we have universal application. We can use it on any exchange and any instrument. This is an incredibly powerful approach that allows you to trade many more haystacks. It broadens or increases the height of the haystack that you can explore. Now, I've shown you that the entries are trend following or counter trend, but the exits are all trend following. And why? Because of top scholar. Take our profit slowly, cut off losses at once. So if you remember nothing else, absolutely nothing else from my presentation today, remember the two words top scholar. They'll help your trading more than anything else. Take our profit slowly, cut off losses at once. So if you listen to all the great value traders, this is what they are doing. They're taking their profits very, very slowly over decades, but they cut off losses at once over a few years because their whole time frame is so extended. So just remember these two words, top scholar. So this is an important slide, kind of philosophically, what are we trying to do and how everything fits together. This is a slightly different view where I've tried to show you how the entries and exits are connected. So the columns are entry strategies, and the columns are exit strategies, and the rows are entry strategies. So when we test with the Chande Trend Meter, there's no exit attached to it. It's simply an entry condition. The long-term breakout works with the long-term exit, and you've kind of seen the red lines along the way, or the red dots. And the swing entry and the volatility breakout work with the short-term exit. So that's kind of how the entries and exits fit together. So it gives you a sense for what we're doing from a system design perspective. So these are the robust tools for exploration. We can ask the question, is the market trending? We do that with the trend meter. So that's kind of a very simple way to stratify the market or the opportunities. Or you can go a systems approach, a long-term system if you're an investor, and a volatility breakout and a swing system if you're a shorter term trader. And we're back to this chart again as a reminder. We want to use the robust tools, we want to leverage the explorer. We want to crunch and munch and explore through the haystack and find a few needles in the haystack for our trading process. It's as simple as that. Robust tools to needles in the haystack. All right. So let's take a deep breath here. At this point, what we've done is I've shown you the philosophy of what we're trying to do. Then I've applied the tools sort of on the chart. So you have a schematic view, you kind of know what they look like. And then I showed you how the system sort of fit together. So now I'm going to spend the next 40 slides or so to about 10, 11 slides per to go through the trend meter, the volatility breakout, the swing system, and the long-term breakout system in great detail. So you'll understand the strengths and the weaknesses, the failure modes, and so on. So when you use them, you can use them with confidence. So let's start with the trend meter. You remember this chart. This is the same Tesla chart. Looking between the purple lines, when the Tesla is trending strongly, trend meter is up high and flat, or it could be low and flat. Scale is 0 to 100. And I've drawn lines at 90 and 20, but you can draw them at 70, 30, 80, 10, whatever you feel like. Now, the main challenge in designing the CTM is that it's very hard to find consistent answers when you use technical analysis tools to ask the question, is this market trending? Is the stock trending? So if you think of the same time period, different tools give you different answers. Different parameter sets of the same tool will give you different answers. And if you change the time period, the same tool and the same parameter set will give you a different answer. So it's just really hard to get consistent answers across the board if you use multiple tools to answer the question, is this object trending? Then the other problem is that how do you combine these choices? Like which tools to combine, which parameters to combine? Do you combine multiple parameter sets? And then how do you get consistent scaling? Because some of them on a 0 to 100 scale, some of them are an open-ended scale, some of them give you really high values, some of them give the low values. And then how do you weight all this thing? If you have 20 of these things, how do you weight them so that the combined indicator responds in some sensible way, is not too slow, is not too fast, and so on? So designing it is a non-trivial problem, but I've solved it for you. It uses 4 different time frames from 25 to 100 bars in steps of 25. And I've used bars because you can use it on intraday or daily or weekly, monthly, and so on. It uses 5 different classes of tools. I use bands, channels, returns, oscillators, and patterns. And there are 28 internal comparisons, components, equations. So it's a very complex calculation inside, but I've made it breakout friendly. So if the market is kind of going sideways, it's not going to respond as quickly. But if it breaks out, it'll respond more quickly. So in terms of sensitivity, it's more sensitive to breakouts. So it's a complex calculation. The most important benefit is apples to apples comparison. So it's the only benchmark that you can apply like a scale and say, is it trending? And if it says it's 90, it means the same thing on this exchange versus any other exchange, on this type of object versus that type of object, and on this time frame period or some other time period. So it allows you to make an apples to apples comparison. So it makes finding needles in the haystack dramatically easier. All right, so it's based on closing prices. Already the scale is 0 to 100. It will, quote, look like other oscillators because it's based on closing prices by design. But I've shown you the internal computations are completely different. An important feature is no input parameters. This is a really important strength of this indicator. So it's plug and play. Just put it on your chart and off you go. And I've shown you that it's flat at trend extremes, right? We want it to be flat. When the thing is trending up, we want to be 90 or 100 or 95. There's no doubt in your mind that it's trying to go up. And you can use any time period. But just remember that this is a snapshot. That is, you're looking back in time, so there's still some ambiguity about whether the trend will follow through or not. In general, on the whole, it'll follow through, but it could also reverse. So it just depends on what the market. So there's randomness in markets. So just remember that. Tesla again, but this time a weekly chart. And if you look between these two lines, strong uptrend. And you see the red line, Tesla is up high and flat, just like we would expect. I have the green stochastic line. The stochastic is sort of a range location oscillator. So over X time period, if you're at the top of the range, you get high values. If you're at the bottom of the range, you get low values. So for example, here you can see that the Tesla is at the bottom of the range here. So you're seeing low values on the stochastic, but not on the CTM. And the RSI is sort of a balance between momentum on up days versus down days. And you see that it bounces around a lot. And I've used default values for stochastics and RSI. So obviously, if you change values, you'll get a different picture. The point here only is that if you change time frames, like a long time frame like weekly, is very good for stocks, and CTM is high and flat. That's the message I want to get across. So here what I did was I scanned it, right? I used a scan. I used CTM greater than 90 because I've shown you the charts, and this was the day of the scan when I started writing the stock, and I applied it to the S&P 500 universe. The rejection rate was 84%. Remember, this is an entry only without an exit, so naturally this value won't be in the high 90s always. So these were the stocks that came up, and I sorted them by the CTM, and the first stock on the list was Cintas, and this is what the chart looked like. The orange line here in the upper panel is CTM. You see it's at 100, so clearly, and if you look below at the prices, yeah, it's trending. So there's an intuitive connection between what your eyeball will tell you when you look at the chart and the trend meter. So you can think of the trend meter as quantifying your eyeball. If you show a chart to 50 people, they'll all tell you, yeah, it's trending. Just look at the chart, man. And this is what the CTM is doing. It's just quantifying what the eyeball will see. One thing I did was on Friday, I looked through. So if you just look at all these names on the list or all these symbols on the list, I said, well, what happened between the 19th and the 12th? I kept doing this until I stopped when I got bored. So you see, on average, everything was up about 5.6%. And of course, the market is moving higher, so let's not get too excited. And about 70% were profitable. And what I want to point out here is LHX. So LHX is
Hey, Tushar, I think we might have lost your audio. Yeah, no, that's true in the control room as well. We're not able to hear Tushar. So let me see if we can kind of sort this out real quick. Tushar, we can't hear you. Can you hear me? Oh, yes, but can you hear me in the control room?
Tushar as well.
Okay, all right. Let me. We're working on it.
Muted.
for that. Okay, we'll just step back for a few minutes and a few slides and resume. So we were.
Tushar,
Yeah.
sorry about that. Thank you for being the person that had technical difficulties. It's nice to get it out of the way early in the day.
Yeah, I have these new headphones, and I thought I'd change the setting to make it. The thing is that if it doesn't get the weird design is if you don't get audio on the headphones, it thinks it's not running, and so it goes off. And I tried to change the setting, but well, it didn't work.
We gotcha. It's no big deal. Things
I know
happen.
It's hard to believe, but I'm human.
Yeah. Well, we all are. You're back on. We can hear you. And
okay. Well, sorry about that, and thank you for your indulgence. Well, we'll start from here. The CTM scan greater than 90. We're just using CTM as a scan. The first name on the list was Centers. This is what the charts look like. The orange line is the CTM. Clearly, it's above 90 or close to 100. And you see that the CTM was the market, the Cintas itself was trending higher. So it's very easy to see that it's trending higher, and your eyeball is confirming what the calculation is showing. And then what I did was I looked at all these stocks on the list about 3 weeks later, and I said, what happened to that list? And I went down about 17 deep, and I stopped when I got bored. On average, they were up about 5.5%, 5.6%, and about 70% were profitable. So a couple of things to remember. First of all, of course, the underlying trend was positive, but even in that underlying trend, there was a stock that was down about 9%. But there was Xilinx, which was up about 36%. So the performance is uneven because markets are random. And because CTM is giving you a snapshot standing on this bar and looking back and saying, yeah, it's trending, but that doesn't guarantee how long it will continue to trend. So that's part of trading and the uncertainty and the randomness of markets. I applied this to the Mumbai Sensex 30, and the top 4 stocks were State Bank of India, Reliance, Infosys, and Larsen & Toubro. This is just to emphasize that you can use it on any exchange. And if you just look at Reliance, CTM is in the upper panel. See nice breakout here in Reliance, and CTM is up near 90 and across. And if I jump to Infosys, nice little trend here in CTM, sort of high in 90 and across. So the idea is that this is the visual connection between what you see in the chart and what the calculation is showing you. This is CTM less than 20, the opposite scan. Here I did it on the European Dow Jones Stock 600. The worst stock yesterday was Idorsia. You see that stock is trending lower with great determination, and the trend meter is below 20 and is flat near 0, or in this case it was 5, but flat near 0. So the signature is when the trend is strong, it'll be flat going across either a high value or a low value. And the contrast, the reverse of this is Xilinx, CTM greater than 90. You see Xilinx is trending up beautifully, went above 90, close to 100, and then straight flat all the way across. So the CTM is a way to quantify what your eyeballs will tell you when you look at it and say, yeah, this is trending, and sure enough. So just to reinforce that message, CTM close to 0 or flat across when it's trending down strongly, and then CTM flat across and high when it's trending up strongly. So that's the signature of the CTM. All right, so that wraps up CTM. Let's look at the volatility breakout. So the volatility breakout is a 1-bar hurdle. We just have this 1 bar, it jumps up, the next low of the next bar is significantly above the high of the previous bar. And this gap size, the double-sided yellow arrow shows that you can write any formula you want to define what this gap size should be, what this hurdle width should be. And I've used a 20-day average true range. And then then you can enter again above the jump up bar or the gap up bar, and you can write all sorts of algorithms for where this entry level should be. So that's sort of the construction of the volatility breakout. And then going back to Tesla, you can combine the breakout with candlestick patterns. For example, this is a doji cluster, and I'm sure there's some pretty names for this formation. This is again a longer term view. 1 bar jump, we enter above the bar, we go through this whole process and get out here within a few days of the absolute high of the move. And you see that if you look at this ribbon below, alternate areas of strength and weakness, strength and weakness, strength and weakness. We ignore all that because we're using a very slow trend following exit that gets it out here. So that's the volatility breakout system, a single bar hurdle. This is Crocs, earnings report, big jump up. And we are in above the bar of the jump up bar or the gap up bar. We follow the system, we get taken out here approximately flat. So that's one of the challenges with the system. It's not a guarantee that the market will follow through. This is MGTX, Mira GTX. Look at this chart for a second. This chart, and there's a big downtrend. There's a double bottom or a complex bottom here, a retest of this low, a double bottom comes up and then, rallies massively out of this channel. Big jump up, we are in. So same formulation. This is a bar. I'm sure there's some candlestick pattern here that I don't know. Big jump up, we are in above the bar. And then this is an example of the caddy, if you will, the write up that comes with it, that gives you the trailing stop and sort of a commentary to help you along. And then this is a chart a few days later where this was a jump up. We got in here and the market followed through. So this is an example of the volatility breakout system. Another example, Silicon Labs. Again, we got in here, went sideways, just like the previous example with Crocs. But we have another example here of the same market, big jump up, we're in. And again, the commentary will tell you where to place a stop. So we're looking for 1 bar jump in prices to look through the market to find needles. So that's the volatility breakout system. Now we can talk about the swing system. The swing system is sort of related to the volatility breakout system, but it doesn't need a 1 bar jump. It just needs a certain movement away from our reference level. So this is Cintas. You've seen this chart before. This is our stop as our reference level. Then we say we have an entry hurdle that could be, there has to be some distance away from our stop. And then once we get a close above that, then we again have an entry barrier that we can set anywhere we want. So signal line, stop line, we want a certain gap between the signal line and the exit line before we take the signal. Now here I did a scan. You see a high rejection rate. I did the swing system on the S&P 500. Rejected 93%. First stock on the list is Abbott. So let's look at Abbott. So this is Abbott with the swing system. You see the market or the Abbott sold off. There was a jump up. We bought the strength after the weakness. So this is a signal line. That's the exit line. We get a certain gap up. We get a close above that. Then we want to enter above the bar, above the close, and so on. So you can see we can write many different ways to write this. We can find many different ways to write this formula. But I want to show you this reason for a different reason. So this is the trade on the previous slide. This was the entry. Here we go. Look at a strength, weakness, weakness, strength, weakness, strength. But look what happened here. So the philosophy of the swing system is we are going to buy a little bit of strength after weakness, but the weakness could reassert itself. And in this case, the stop was here and the market gapped down below because there was still a lot of selling that came through. So gap risk is an important failure mode of this strategy, and you need to be very diligent about placing your stops. And I use the principle through it, do it. So if I'm through my stop, I'm out. I don't want to wait to find out what happens next. So gap risk. Another risk, I show you Verizon with swing system. You see in this red box, you have a sequence of losing trades. So this is a risk with both the volatility breakout system and the swing system because of their design. You're buying strength after weakness, but the weakness could resume. And here it kind of trickled down, so it would bounce up, get us in, and then take us out, get us in, take us out. 7 losing trades in a row. So it's important to realize that this is a failure mode for both the swing system and the breakout system, the volatility breakout system. It's important to realize that you need to scan so that you have lots of other markets you can think about. Because if I started trading here and this happened to me 7 times in a row, I'm probably going to say, I'm never going to trade the system again. It's just stupid. But it was only on this particular stock. So there are obviously other stocks, other opportunities, other needles that could be trending beautifully as it was doing over here. So broaden the horizon, look for lots of needles, but be aware what the weaknesses of a system are. Sealed air, look at this entry here, beautiful swing move up, weakness, strength, and we have the commentary on the side. Now I want to point one thing out in this particular chart. See here, it came very close to getting stopped out. It came close to getting stopped out here. So you have to be diligent in the placement of these stops, and you can't get ahead of yourself. You cannot assume that, oh, it's coming close. If I get out, I might save a few, bucks or whatever. So just kind of follow the system, which is a lot harder to do than you think. Again, I want to give you examples from all over the world. In this case, this is Axis Bank from Mumbai. Look at this beautiful trend, weakness, trend, weakness, trend. And then you get chopped here. So this is another pattern. You may get a series of winning trades and then a couple of losing trades. And an example of the same rules being applied without any deviation to a completely different market or exchange to produce very similar results. This is Vanguard Total Bond ETF. You can apply it to anything. Look at the strong sell-off, rebound, we got it, sell-off, rebound, we got it, get hacked, got a sell-off, rebound. So the concept, the idea, the system, the price pattern can be found in many different places and many different areas, but you have to recognize its limitations and strengths when you use it. SPY ETF swing system, look at all these beautiful swing trades, just one after the other. Sell off, rebound. So swing system is a very interesting system for counter trend traders. Swing entry, short-term system, and kind of give you a sense for how it fits. So by definition, now we can look at the long-term system. So let's take a little break. Deep breath. My goodness, too much information here. All right. So long-term system needs a very strong persistent trend. So this is when you want to be a long-term position trader and you're willing to hold it forever, so to speak. This has a high level of smoothing, so it'll be very slow to enter. You're going to say, my God, it's taking forever to get in. It has a very slow exit, so will not catch the absolute top of the move. And you need patience to sit through reversals. Like it'll come back down and you can't get ahead of the stop. And I have a bigger, longer discussion of it on my blog. He applied the long-term system to the Bombay Stock Exchange, 5,050, only 140 to survive, 97% rejection rate. That's what you're looking for. You don't have time to trade all 5,000 stocks. I'm going to pick ICICI Bank because I like banks and I like that bank. Here's ICICI Bank, long-term system, entry band. We got a signal we're in. Market, goes down, whatever, we don't care. We're following along. Here are my stops. Sudden move up, stops move up, and look where we got out. The stop is here, price is rallied, we are over there. So it's a very nice stop, and we got out 1, 2, 3, 4 days after the absolute high of the move. Can't do anything better with a mechanical system. And look, when we started here, we had no idea what prices were going to do. So you have to be patient and just sit there and sort of be long the patience futures, and that's not easy to do. This is an example of Frankfurt. We've scanned, and the first stock again, 280 out of 15,000 or something, 98% rejection rate. First name is Bioenergy. You see, it just got in. We're long. We don't know where it's going to go, but you have to keep following them. But the same rules can be applied to another exchange without a single change. Fortinet example shows you what happens when you have a great trend. You see here, just keeps going and going and going. Came very close, getting stopped out. So you have to be patient, can't get ahead. And finally, you get knocked out here. So that's the value of having a system. It keeps the emotion out of the process. This is ARC Innovation, fabulous move during COVID. But you see the problem, it goes up, reverses, takes you out. Goes up, reverses, takes you out. Finally, a great move up and a good exit. So this is one of the failure modes of this process where do you place your stop? And the stop placement is critical. And only you can decide what level of retracement you're comfortable with. This is an example of AMN Healthcare. Rejection rate was almost 100%. And this is the value of putting the stop. So I started here, kind of went slowly up, little jump up, and then see what happened here? A rapid reversal. And it got out here about $8 above the low. So this is the value of diligently placing your stop because you simply don't know what the market's going to do. I have no idea why it went down. When I looked in the news, it said they had a new CFO. Well, maybe. So it just tells you that you don't know what the market is going to do, so you have to follow the process. So this stop is calculated from the highest high, and this distance can be adjusted to what you want. So the period, this formula, the white stop has two properties. First is the period. I'm using 100-bar channel as a reference. And the stop price is the highest high minus some multiple of some volatility measure. And that multiple is by default set to 6. Larger the number, wider or looser the stop. So you can imagine X minus Y. So if Y is bigger, you'll be further away. And you adjust Y by changing K. So this is AMN again with the 4X and 6X stop. Purple dots are the 4X, so obviously it's closer, and it would have given you a better exit. And the red dots are the 6, which is the default, and it got out here. Not bad, but there's more wiggle room for the stock. But what's the right value? Well, here you might say 4 is better. Back to RK, and what you see here, see we got out with the red dots, we got out here and there, we have stopped out, but the 8X multiple, which is a wider stop, would have gotten you in here, and you'd have gone all the way to the top and gotten out over there without that much of a gap to the 6X multiple. So the point here is that we don't know what the right value is going to be for any individual trade. So you sort of have to decide what level of retracements you're willing to sit through, and maybe a looser value like 10 or 12 might be even better for you. So that's your choice, but the system obviously allows you to pick whatever. And I use 6 as a default, averaging over hundreds of trades. That seems to be something that I can deal with emotionally and sitting through these trades forever. So this is back again. We've finished with a long-term system. So I've given you the big picture, then I showed you on the charts, then I sort of fit it together in terms of how the strategies fit together, and then I went 10 blocks at a time, slides at a time, gave you a very detailed breakdown of all of those. Okay, so it's time to wrap up. Robust design philosophy, same parameters for all, any exchange or instrument, top scorer, take out profit slowly. We have trending, Chande Trend Meter, systems, long-term system, volatility breakout system, swing system. This is where I add value. Robust tools plus confidence equals trading success. If you don't have confidence, you can't trade. Believe me, you will not be able to trade if you don't have confidence, and the market will test your confidence every single day. This is what we're trying to do. Robust tools, gigantic haystack, find the needles in the haystack. If you have any questions, please send them to me here. I have a robo-advisor, a stock finder. This is what the stock finder looks like. It's a table for the long-term investors, short-term investors, medium-term investors. You can click on any of these to sort. Yesterday, KFRC was on the top of the list if you did buy all of them, and look what the chart's doing. So it's a good tool to help you find trading opportunities. I hope you'll all subscribe and ask your friends and family to subscribe to my weekly newsletter at Chande Indicators at substack.com. It's free. And these are some of the topics: the hot list, the MetaStock, MetaBand system, the rebound for seasonality, XPX 400, end of the year, market confirms key low, chasing Adobe, sort of tutorial, some market information, some projections. We're just having fun with it. So to summarize, these are all the indicators I've built. Thank you very much. I know I ran over a little bit. I apologize for a little glitch in the middle, and
You're
I'll
okay.
send it back to Jeffrey.
Hey, I did go and I looked, Chande, and I don't know if you can see the camera right now,
Yeah.
but I did this.
Oh,
I
wonderful.
did pull your Stocks and Commodities magazine article from November. So there you go. Also, like our sponsor today, look at all these beautiful magazines. Tushar, great job. We are, just so you know, just so everybody's aware, we are working on getting the development of the indicators done for Tushar Chande. I'm very excited to get it done, and I anticipate we'll have them soon. We don't have them yet, but I'm still glad we had you come in, Tushar. Great job today. And I would recommend you guys sign up for his newsletters at chandeindicators.substack.com, or you can click on the link I just put in there. So
Thank you.
Thank you, Tushar. Appreciate
Thanks.
it.
Bye.
Okay. Bye-bye.
Bye, everybody.
All right, let's go ahead and kind of switch everything around a little bit. I hope you're enjoying yourself. I thought he did a good job. Really good to have him in here. Okay, let's see where we're at here. Okay, all right, and of course we are MetaStock. If you haven't heard of MetaStock, we've been rated #1 in our price category 28 years in a row. It can help you. I love the scanner. I scan every day. It can help you test trading ideas. I'm trying to move my forecast, get real-time alerts, commentary, signals. Pricing starts at just $59 per month. You can find out more by going to metastock.com/sales-chat. We can send you some information. We can help you get set up for that trial. Give us a call at 800-882-3040. Do want to say thank you to CMT organization first. CMT has been a sponsor of our event for the last several. They're a great sponsor. We appreciate their support, and it's a great organization. Very, very proud to be affiliated with CMT Association. And then our last sponsor, Stocks and Commodities. If you do any MetaStock subscriptions today, you're going to get 5 months from Stocks and Commodities. I actually think I grabbed 5 magazines. Yep, you get this many magazines for free. In addition to that, if you spend more than $300, you can get a 2-year subscription. So in any case, they're a great sponsor. We appreciate them as well. Another person we appreciate is our next presenter, Jake Bernstein. Jake and I used to live in the same kind of area in Northern California. I had a lot of opportunities to go and work with him and do some events up with in the Elks Lodge with the Trading Options for Profits group in California. We also went to dinner a few times. I consider Jake a very good friend. One of the things that Jake opened my eyes about was I really like the way he looks at seasonality. I think he's going to talk a little bit about that today. I like the way that he looks at COT data. And I really like the work that he's done on technical analysis and technical systems. I like his 3-bar MAs and stuff like that. Jake has a lot of experience. He comes from a great heritage. We're happy to be associated with Jake. And Jake, we're happy to have you here today. How are you doing?
Oh, Jeff, it's great to be here. Thanks for those kind words. How are you doing?
Great. You still up in Northern California, I bet?
Yeah.
Central California.
I'm in the middle of the forest right now. I've even got an internet signal. Isn't that great?
That's great. Yeah. Bonnie Doon is I love that area. It's awesome. All right. I can see your screen.
All right.
I can hear your voice. And
Cool.
I think you just hit.
Can you see me full screen?
If you hit, I think present yep, there you go. Perfect. You're good.
All right. Let me get my pointer.
Everything's ready?
Ready to go.
I'm going to get out of the way. Your turn.
Okay, hold on 1 second. Just let me get rid of this little subscreen here. One moment, please. Okay, still see my screen?
Yes, sir.
Okay, good. So first, let me say it's an honor and a privilege to be here working with the best guys in the business. I've known you for a long time, Jeff. I've really enjoyed my relationship with you guys. And the one thing about MetaStock that is really perennial is you guys really care about the customer. So I've never had an issue that we haven't been able to resolve with the customer, and the software is just great. So I want to thank you all for letting me be here today, and I can do everything I can to support what you're doing. Regarding Stocks and Commodities magazine, if anybody wants to find out more about me, there was a big interview last September with Les Masonson, who interviewed me. I think it's about a 7 or 8 page interview. And what I'd like to do today, which is really difficult to do within the course of 1 hour, is to tell you everything that I've learned about trading in the last 52 years. It's going to be a little bit difficult to do that, so I'm going to cover the highlights and the most important things. Not necessarily in order of importance, but specifically what I do, why I do it, and so forth. But let me give you a little dose of reality. And again, you may find me a little bit harsh. You may find me a little bit too honest. You may find me a little bit too direct. But when you get to be my age, 75, There's no time for screwing around. There's no time for sugarcoating anything. You just have to tell it the way it is. Let me say this. With a powerful tool like MetaStock, if you haven't been making money in these markets, there's a problem. These markets that we've had for the last 5 or 6 years have been absolutely perfect, not in terms of 100% accuracy, but perfect for traders, perfect for investors, perfect for day traders. I've never seen a market like this before. And if you can't make money in this market, there's a problem. You have to find that problem and you have to fix it. Great trading software like MetaStock will only go so far. It can give you the tools, it can give you the vehicle, but you're the one who has to drive the vehicle. And if you're not driving the vehicle the right way, you're going to screw up no matter how good the tools are. The last speaker, Tushar, talked about confidence. You have to have confidence. Well, where does confidence come from? I thought that when I wrote my first book in the 1980s, The Investor Quotient, Psychology of Trading, that I knew where confidence came from. You can't learn confidence. You can't get it in a book. You can't get it by laying on a psychoanalyst's couch. You can only get it from discipline. How are you going to have discipline? You can have discipline if you like what you're doing. And you're only going to like what you're doing if you have confidence in it and if it works. So if the strategy is vague, if the rules are unclear, and you have to go looking to one person and another and get their opinions, or you have to interpret anything, that does not work for 90% of the people unless they're psychic. So when I made my first trade in the summer of 1967, there was very little valid information available. I searched for 15 years to figure out ways to make money. And I discovered the reason I wasn't making money is I wasn't following rules. The reason I wasn't following rules is I had no rules. I didn't have any rules because nobody wrote down the rules. They always say, when it gets close to support, buy it. Then take your profit. But where? So none of that stuff worked for me. As I said, if you have a problem, you have to find the problem and you have to fix it. Don't waste time. The good news is there are ways to fix those problems. I'm going to show you some of those ways today. So let's go to the next slide. And by the way, can you imagine the new trader? A lot of new traders come into the trading business lately, especially with Robinhood, and they go to the internet and say, I want to find information on how to trade. Oh, go to the internet. If it's on the internet, it's got to be true. So they go and they put in a search, and I put in the search feature, teach me how to trade. Put in that search feature in Google and you get 170 million, that's right, 170 million hits in less than a second. So you look at all this stuff and you say, oh my God, what the hell am I going to do with all this stuff? Where do I start? How do I begin? Who's right? Say, well, they've got you're going to do is research. How are you going to research? Where are you going to begin? There's so much to do. The small trader and the new trader are overwhelmed. So let me give you some initial comments. Everything I do, and by the way, my first job right out of college was working in a mental institution with psychotic patients because my original occupation was clinical psychology. I do the same kind of work now. I work with patients. Fortunately, they're not mental patients, but I get paid a lot better. So everything I do is based on patterns. It took me 15 years to discover that patterns are not fictional. If you can put a pattern on the computer, you can test it with some powerful software like MetaStock and get the answer. Does a key reversal work? Does it have particular predictable validity? What percentage of the time does it work? We need structure, not on-the-fly decisions. We need strategies that are based on rules. We need strategies to maximize profits. We have to have focus, by which I mean you can't be all over the place. If you do a scan, for example, you scan maybe 10,000 stocks, you get 3,000 stocks back, and you sit there and you say, well, I'm great. My computer scanned everything for this pattern. Now what do I do? if you have to pick and choose without a process, you're going to lose money. You need to become a specialist, not a generalist. You have to have a process. I'm going to show you some of that today. So fortunately, everything that I'm going to do today, you have available to you on MetaStock with my indicators. And if you don't have it on MetaStock, they can certainly do it very easily. So let me answer a question that no one has asked yet. Why do I do this? What enjoyment do I get out of this? Well, I enjoy the process. I enjoy teaching. I enjoy when people get in touch with me and say, Jake, you changed my life for the better. You helped me become a trader. You helped me become a better trader. You helped me realize what I was doing wrong for all these years. So today I'm going to share a bunch of things with you that I learned in the last 52 years. I'm going to be 53 years in July. As an example, when do you take your losses? People say, well, I get into a trade and I'm going to risk about $600. And I say, well, what do you mean about $600? Well, maybe 600 or 700. Well, do you know your stop in advance? No. Why not? Well, because I'm not sure. You're not sure. Are you trading a strategy? So look, your strategy has to give you your exact stop. I like to take my losses before I make a trade. What? Here's what I like to do. If I'm looking at a trade that has a certain amount of potential loss, I'm going to deduct that potential loss from my account and say, am I okay taking this trade? So I assume that taking a trade is like buying a brand new car. As soon as you walk off the lot, you're down $500 to $1,000. I like to know the worst case scenario before I make the trade. If you take your losses before you make your trade, that's the best thing to do, because you won't have an unpleasant surprise. You'll know what to expect. And if you can't take that loss before you make the trade, this trade's not for you. Really simple. So look, some people appreciate what I do. Most people don't. Most people are only in it for the money. I'm not in it for the money. I've made a ton of money. I'm very happy about that. I want to change your life. That's it. So I get letters like this. Sometimes you can read it while I'm talking. And these are the kinds of letters that I get, which really does it for me. So when you get old like me, you look back on your life and you say, what have I done to leave a profitable, improved legacy when I'm gone? So if I can get a letter from someone, maybe 2, 3 a week, that gives me praise for helping them, that's what I want. And sometimes I get letters like this. In fact, this one I just got a couple of days ago. So these are the things that do it for me. Let's ask the question, why not give my work away for free? Easy. The more free things you give people, the less they appreciate it. People don't appreciate something if you get it for free. So with all of these free webinars that are going on like this one, people will get ideas, but they won't really appreciate those ideas until they start to use them, or they'll discount those ideas and say, I got it for free, what good is it? So I'm very, very happy to give things away for free. But if you really want to learn from me, you're going to have to pay me. It's really, really simple. Let's go forward. I'm going to share some very powerful ideas with you today. So who am I and why listen to me? I'm just going to click these off very quickly so we don't have to waste time. So as I said, I'm a real trader. I've written 40 books, actually 45 books. I've written the 5 best-selling books on day trading, 4 of them for McGraw-Hill, 1 of them for Simon & Schuster. We're going to talk about day trading in a little while. I'm a real trader. I trade what I teach and I teach what I trade. And my trading is purely technical. I don't care about earnings. I don't care about reports. I don't care about supply demand. I only care about the technical indicators, and everything I do has been tested and based on computers. So I can give you numbers for everything I do. I've taught thousands of traders all over the world. I've been at over 860, actually now about 880 seminars and webinars. I'm a board member of the Foundation for the Study of Cycles. I've been on Wall Street Week, CNN, FNN, CNBC, etc. The good news, hey, I'm not a broker. I'm not a trading advisor. I'm just an educator and a trader. Everything I do is 100% objective. So for example, if I teach you the rules for a particular methodology, those will be the rules. If I say, this is the process, that will be the process. That'll be using. So if I can teach 100 people the exact same methodology, and then we go off individually without consulting one another, and we come up with the exact same conclusion, that's what I'm looking for. That's what does it for me. I'm not interested in interpretation. I'm not interested in looking at a chart and say, it looks like it wants to go up. What the hell does that mean? How does the market know what it looks like and what it wants to do? So who are my clients? Individual traders, top newsletter writers all over the world, and believe it or not, some of the biggest banks and hedge funds in the world are clients. My list of clients reads like a who's who, but forget about that. Let's just go forward. I want to get to the real stuff. So you can come back and read this later. There's one point I want to several points I want to emphasize here. Number one, I teach specific methodologies, by which I mean fact-backed, rules-based trading. The facts are clear. When you open one of my indicators on MetaStock, you will see the indicators, and with the beauty of MetaStock, the indicators are explained so that you know exactly what you're doing. So my methods are specific. There's never, and I do mean never, any interpretation. If you have to interpret anything that I'm telling you, there is a problem, and it's either mine if I'm a bad teacher or yours if you've got a learning disability. So there's no interpretation. Here's the most important thing. I want to create independence. I don't want you to depend on me. I want to teach you what I have to teach you and set the birdie free from the nest and say, go, be successful, develop my indicators and make them even better. So the most important thing is this. We have to focus on the right issues. And how are we going to do that? We're going to focus by having very specific numbers. Everything I do is about the numbers, by which I mean, because trading is a game of numbers, we need to know what the numbers are at all times. In other words, I want to know where to get in, where to get out. Give me the number, give me the time of day to get in, give me the size of the position, give me the stop, give me the risk, give me the historical performance, give me the entry date, the exit date, the entry price, the exit price, the stop, the trading stop, everything completely mechanical. Guess what? We've got computers, and because we have computers, especially here not too far from me, Silicon Valley, we know exactly how to do this. You might find this interesting. Jeff mentioned a couple of meetings that we had attended to in Silicon Valley, some investors groups. I was speaking to one of those groups. There's maybe 70 or 80 people in the group. They were all software engineers. And I said, hey guys, look at this pattern. You know what we can do with this pattern? We can put it on a computer and we can back test it. And one of them raised his hand and he said, that is an incredible idea. I'm thinking to myself, what's wrong with these people? Why don't they understand what's so obvious? So, excuse me. If you don't know the numbers of the strategy you're using, you are unlikely to win in the game. So I'm going to give you an example of what I mean by numbers, because I realize that right now everything may be just a little bit vague. So let's go back to this. Oh, teach me how to trade, and you're ready on this one. If you just do teach me how to trade, you get 170 million hits, right? Okay, so let's go. Or if you want to teach day trading for beginners, sure, let's check that one. There's only 60 million possibilities. And of course, you can buy the day trading book for dummies. Maybe that'll help you. So let me, oh yeah, by the way, these are, sorry about that. We've had some fires here lately. So these are the day trading books that I've written. And by the way, something really interesting occurred to me. I haven't day traded until recently. I haven't day traded for about 5 years. I've been position trading, short-term swing trading. Then suddenly I got a call from my book agent who placed this book for me with, I think, Simon & Schuster. And he said, I've got a royalty check for you. I said, you got a royalty check for me for what? He said, for your book. I said, what book? He said, The Ultimate Day Trader. I said, I thought that book was out of print. He said, all of a sudden, people are buying that book. I'm sending you $2,000. Made me realize something super important. There's a whole new crop of day traders who want to learn how to day trade. That's the good news. The bad news is they don't have the tools to do it, because small traders take small profits and big losses. They like to hang on to their losses till they grow hair on them, and they like to take small profits very quickly and get out. A lot of traders lose their discipline after 3 consecutive losses. Tushar was talking about 7 consecutive losses. You know what? A new trader comes into the game and says, I'm going to make this trade. They lose money. They say, I'm upset. I wish I could have made money, but I've got discipline. I'm going to try it again. They try it again. They lose money. They say, wait a minute. I've lost 2 times in a row. That's not fair. I'm going to give it one more shot. They try it a 3rd time and they lose money. And they say, that's it. I'm changing my system. I'm changing my strategy. I'm going to go back and see, what did I do wrong? What could I have done differently? You need to know the facts. The facts are that even some of the best trading strategies in the world will lose money 7 times in a row. If you don't have the psychological makeup to lose money 7 times in a row, or if you don't have the money in your account to lose money 7 times in a row, this game is not for you. So big money is made in big moves. Big moves take time to develop. And day trading is not the key to success for most people. Why? Number 1, they don't have the methods. Number 2, they don't have the time. Number 3, they don't have the tools. Number 4, they don't have the intelligence. Number 5, they don't have the patience. And one of the things that I learned about trading through being a clinical psychologist is this. You have to be clinically dispassionate from your trades, by which I mean you have to be able to approach each trade without any emotion whatsoever. The emotion of the trade is tied to the potential risk. If the risk is real low, it's going to be simple. Begin with low risk and you won't care. A very famous trader told me once a long time ago, in order to make money trading, you have to not care. Think about it. So let me go through this quickly and show you something else. So by the way, I started day trading again just to see what it was like. And these are my trades from yesterday. So you can see there's a whole lot of trading. These are all very small trades, just trading one contract, just retesting what I trade. Because one thing that I'll tell you is this. I will never teach you anything that I'm not willing to put my money on myself. So if I teach it, it's because I do it. So let me cut to the chase. These are the absolute best trading tools ever, in my opinion, based on my experience. Let me explain them to you and show you some examples. The moving average channel, which I will show you. Divergence, the commitment of traders report, seasonality, and what I call the 8 open close. These are my 5 key methods. They've made me a lot of money. Why? Not because they're perfect, but because they're clear, consistent. Let me show you what I mean. So let me give you a dramatic demonstration of an indicator. We're going to look at the commitment of traders' net long positions. The commitment of traders is a report that comes out of the US government every week that gives you a list of the 3 major categories of traders: speculators, hedgers, and small speculators. It tells you what percentage of the contracts they own long, what percentage of the contracts they own short. The only interesting information out of this report for me is COT, commercial traders. What is a commercial trader? A commercial trader is the largest trader in the business. Arthur Daniels Midland is a commercial trader. Banks are commercial traders. Sovereign wealth funds are commercial traders. Hedge funds are commercial traders. Feed companies are commercial traders. Oil companies are commercial traders. I think you get the message. And by the way, I'm going to show you some commodities, but remember, for practically every commodity, there's an equivalent or similar ETF. So let's look at this chart. This is a big picture chart. Soybean meal prices. When the line is red, It indicates that commercials are hedging. They're selling against their positions. But when a line is green, the net positions is long. So in other words, if there was 100 commercial traders that controlled 100,000 contracts, the green means that of those 100,000 contracts, more than 50% were long. The normal behavior of commercials is to be hedged, to be short. The abnormal behavior of commercials is to be long. The only time commercials will buy a futures contract is when they think prices are going to go up. So I want you to look at this. Here's the bottom, here's the bottom, here's the bottom, here's one, here's one, here's one, here's one. And take a moment and look at this chart. I'm going to make it simpler for you. Check this out. And by the way, you can do all of this in MetaStock. I put a red arrow pointing to the green areas. Every one of these green areas indicates commercial buying activity. So what does that mean? I want you to look at it and be serious about it. You will notice that after every one of these green areas, prices moved up. Not just a little bit, but one heck of a lot. So the key to getting the big moves is to use commitment of traders the right way. Let me show you another chart. Same chart we showed before, so let me go back to this one. Here's a chart of the E-mini NASDAQ showing commitment of traders. I put a red line, vertical line, at every location where the COT commercials were long the market. So you might say, well, wait a minute. There's two sides to the market. There's the long and the short. Why aren't you showing the short? I'll tell you why. The normal behavior of a commercial is to be short the market, but not really short, but hedged. They use the futures market to hedge against their long position in the underlying security. When they're buying because they expect the move to be up. I want you to look at this chart very closely, either now or later, and notice the correlation between up moves in price and positive COT. Check it out. Take your time. Let's go to the next chart. How about this? Here's the natural gas. Natural gas has had one huge up move, and in fact, one of the biggest up moves in a long time. I want you to look at the chart. For months and months and months, commercials were not net long natural gas. Then they started buying here in March of 2021. And throughout this entire rally, they were buying natural gas. Why? Because they didn't have enough supply. Since their job is to balance supply and demand, and our job is to understand the technical side of the market, this was what I call a setup. It said natural gas prices are going to go higher. We need the next step in my equation. The next step in my equation is a trigger. So the setup says something is going to happen. The trigger says now is the time to do it. So let's do this. Setup is a pattern. It could be any kind of pattern. Reversal, key reversal, head and shoulders, cup and handle, support, resistance, breakouts, blah, blah, blah. The good news, there's thousands of patterns. The bad news is 99.9% of them are totally worthless. They don't predict the future. They don't predict anything. Why? Because they need a trigger. So if you go to a computer and you ask the question, how often has this pattern had predictive validity? You'll find out that most of them are 40 to 50%. Those very few ones that we know, we use. But a setup in and of itself doesn't mean anything. A setup needs a trigger. A trigger is a specific configuration based on price. It says, okay, now the setup, which has been 67% probable in the past, is going to trigger, and it's going to be 77% probable going forward. So once you have a trigger and you've taken a position, I'm going to show you specific examples if I don't run out of time. We have follow through. Follow through consists of three parts. Number one, where are you going to be wrong? What's your stop? Number two, what is your first profit target? The first profit target is extremely important because it says take some money off the table. You're out of the danger zone, and use a trailing stop to lock in profit and reduce your risk effectively to zero. Excuse me. So these are the three aspects of what I do. Everything I do needs to fit into the setup, trigger, follow-through model. If there's nothing else I can do for you in this presentation, this will change your life. If you look at every trade you make and ask the question, what's my setup, what's my trigger, what's my follow-through, and you can't answer those questions, then there's a problem. You will probably lose money, and that's out of sheer dumb luck, and that's not a good way to trade. I'll expand on this momentarily and give you some examples. So setup, trigger, and follow through. So, and by the way, don't take this lightly. This took me 15 years of anguish to learn, and since I learned it, I've been doing just great. Since I've been teaching this to people, it changes their lives, and I've been doing that for a long time. Take this list from the PowerPoint and make this list available to yourself every time you trade. These are the things that you need to know before you make a trade. Not after you make a trade, but before you make a trade. You want to know which market to trade. You want to know whether to buy or sell. The exact time or price to go in, to get in. The average profit, the average loss, the odds of success, the stop-loss ratio, the profit-to-loss ratio. In other words, how much money are you making when you're making money, and how much money are you losing when you're losing money? Is the ratio in favor of the win? You know, you could be right 90% of the time, and if you're losing more money on your losing trades than you're making on your winning trades, you're still going to lose money. Complete track record, average profit, average loss, largest profit or largest loss, maximum drawdown, maximum upswing, number of consecutive losses, number of consecutive profits, and on and on and on. I'm not going to bother reading to you. I want to show you a specific strategy that takes care of all of this. Let me show you something. Oh, by the way, Palladium. I want you to look at what has happened in Palladium just in the last couple of months. For the first time in about 15 years, commercials have gone net long the Palladium market. What? Why? The why question is really simple. Because they think prices are going to go up. How do they know that? If they're commercials in the Palladium business, they know their business. They know how much Palladium their customers are buying from them. They know how much Palladium is coming out of the mines. They know how much Palladium is being used. And they're getting ready to fill the demand from their customers. So because they can't get enough Palladium out of mines, they have to go to the futures and lay off their risk by buying the futures. So within the context of what I do, this is a setup. It tells me that a big bull market is coming in Palladium, but I still need a trigger. In order to get my trigger, I have to wait for a timing indicator. Once that timing indicator is triggered, I get into phase 3 of my process, which is the follow-through. So one of the methods that I use for trigger is the moving average channel. The moving average channel, which as I say, is in my indicators on MetaStock, consists of 2 moving averages, 10 high, 8 low, and Williams accumulation distribution and its moving average. Very simple, very easy to understand, gives you buy and sell triggers. So once you have the setup, you go to a trigger and you take the next trigger. The moving average channel gives you the stop, it gives you the risk, it gives you the profit target, it gives you everything you need. If you're not sure about how to do that, you can find information about my moving average channel at my website. Let me go forward before I run out of time. So these are some moving average channel charts. 2 consecutive bars above the top of the channel signals a buy, which is triggered by Williams accumulation distribution and its moving average. Very easy to do. Now, it's been said that moving averages don't work in sideways markets. I think you would agree this is a sideways market right over here. 2 bars above the top of the channel setup, trigger, support, resistance, support, resistance, support, resistance, swing trade. And even here, buy at support, get out of the top of the channel resistance. Of course, I realize I can't answer all the questions at once, but I'm just going to do my best to power through this and take questions toward the end. So let's go forward. I want to show you something much more powerful. People talk about Bitcoin. How did this big move in Bitcoin begin? Easy. Same pattern. 2 bars above the top of the channel, Williams above its moving average, and bingo. Let's go forward. This is the timing trigger chart for Palladium. I know there's going to be a move in Palladium. I know it's going to be big. I know that on the basis of the COT commercials, but I need a trigger. The trigger hasn't happened yet, so I'm waiting. Why am I using a weekly chart? Because big moves take time to develop, so I use a weekly chart. Let me go forward, and let me show you something else. Recently, we had one of the biggest moves up in this history of soybeans right over here. This is a huge move. Prices practically doubled. What preceded that? Commercial buying activity for a period of about 6 or 7 months. They knew this was going to happen. They were buying, and lo and behold, they got their follow through. How about this one? Seasonals. Let's talk about seasonals. We've got seasonals in many different aspects. Daily, weekly, monthly, key date. Let me show you what I'm talking about. If I go to the Dow Jones and I look at the Dow Jones every year from 1950 to 2021, so we're talking about a lot of years, and I make one chart that shows what the Dow Jones has done on a weekly basis through that period of time. This is the chart that I get. It's called a seasonal chart, available at seasonaltrader.com. It says those weeks that have green arrows up are high probability moves in the up direction. When you see a cluster like this, October, November, December, you know that for the last, 70 years, this has been the seasonal pattern in stocks toward the end of the year, the period of time that we're in right now. We can refine that search by going to the computer and saying, okay, if you like this period of time, find me exact dates. By going to the computer, I can generate charts, trades like this. Let me show you what I'm talking about. I say to the computer, show me trades that have been right 85%, 80% of the time or more in many years. So going back over 50 years, buying the S&P October 26th end of day, getting out January 16th end of day, risking 12% stop close only, has been right 85% of the time. That's what I'm talking about when I say I mean numbers. We can do this for every futures contract, and we can do this for many different stocks and get some spectacular results. But you'll notice there's 146 pages of these trades. What do we do with that information? Easy. I program the computer to put the best trade in the first position. Going back to the list I gave you before, the entry date, the exit date, the price, this meets every qualification on that list. When to get in, when to get out, whether to buy or sell, when to buy or sell, and so forth, and the complete result of this procedure. So if I go to this chart right over here, let me show you this one over here. I know for this particular stock, 3M, are now in the most bullish period of the entire year. In fact, the month of November shows 1, 2, 3, 4, 5 weekly arrows up in a row, all indicating high probability trades. When I talk about high probability trades, I'm not talking about 100% accuracy. I'm talking about high probability, by which I mean in excess of 75% accuracy. So let's go forward again. Check it out. Here's a shorter term trade. S&P long, October 10th to October 22nd. 71% accuracy, or if you wanted more accuracy, like 73% accuracy, you could 74% accuracy, you could find it. The beautiful part of about this whole thing is this. Let me show you. We can see the entire history of this trade right over here. Every year from the start of trading in futures. And by the way, if you're interested, I have 2 webinars coming up. This one right over here, 5 golden keys, which would be 5 weeks in a row, 90 minutes each. And I have my annual forecast coming up on 4th of December. And most of my forecasts, annual forecasts, have been correct for the big moves. So I'm going to paste these links in a little bit later. So let me go forward. So here's another trade, October 28th to November the 2nd, has been right 87% of the time. So I want you to appreciate the fact that my work is statistical, because markets are statistical and they're based on numbers. We need to learn how to use the numbers. And if you're not using numbers, you're not going to make money. And let me say one more thing. If there's a trading strategy, system, method, indicator out there, I have tried it, I've tested it, I've had it programmed, I've had it put on computer, and most of the stuff I totally reject. So while the Elliott wave theory is a nice concept, while Fibonacci is a nice concept, I have not found them to be effective for me. Not to diss anybody's work, it just does not work for me. This works for me because it's statistical and it's numbers based. So let me show you something else. I see my cumulative profit, and let me familiarize you with the mistake the traders make. Here was the trade as it was at the end of last year, October 28th to November 2nd. On this trade, if I hit my first profit target, which is right over here, I take out 1/3 of my position and I ride the rest of it with the trailing stop. So here is what the trade did as of last year. The mistake that traders make is they look at the chart and they say, well, it's going to be different this year. I say, well, what's going to be different? They say, well, it's going to be different because we've got an idiot for the president. He's barely functional. We've got trouble in Washington. We've got trouble in China. We've got trouble in Taiwan. We've got trouble in Korea. We've got trouble in Poland. We've got trouble in Uzbekistan. Blah, blah, blah. That's all BS for me. Here's the only thing that counts for me. Am I okay with the risk of 2.5%? And do I have a trigger? Those are the only considerations that I take into account. Let me go forward. Here is the trade that I'm very interested in, and let me explain it to you. You probably won't believe me, and I encourage you not to believe me. And by the way, don't believe anything anyone tells you in trading until you see it yourself. Check this out. Buying the Dow Jones or the diamonds, end of day October 27th, getting out end of day January 14th.
About the profitability, and you're on the Goldman Sachs slide.
Okay, gotcha. Okay, cool. And I've got about what? Got about 10 minutes left?
Yeah, correct.
Good. So, timing trigger. Here's the trade in Goldman Sachs. The statistics were very clear, but remember what I said. Setup, trigger, follow through. This is only a setup. I need a trigger. What do I use for a trigger? Easy. I use what I call 8 open close. 2 moving averages. 8 period moving average of the close, 8 period moving average of the open. These are simple moving averages. In a downtrend, the 8 MA of the close will be consistently below the 8 MA of the open. So on this day we were supposed to make the trade did not trigger because the 8 close was not above the 8 open, therefore no trigger. If we go back to the list, Medtronic, again, no trigger, no trade. And then the last one, Edison, let me show it to you, find this interesting. EIX, October the 14th, and here we go. This was October the 14th, and it's triggered. So let me back up a little bit. I want you to appreciate the difference between what I do and what most people do. I'm not saying that what I do is better. All I know is it's better for me. If you can trade successfully on vague information, without a structure, on gut feel, with interpretation, because you're psychic, wonderful. Keep doing it. and send me a letter and tell me how well you're doing. I respectfully submit to you that most people can't do that. If you follow the rules that I'm giving you, or if the method that you have is rule-based, it will work for you. Let's go forward a little bit. Let me show you something. Here's a chart going back a while of the Russell 2000. In the last few days, Russell 2000 made new all-time highs. What preceded that move? Very big buying by commercial traders right over here. Let's go to another one. Here's a close-up of the Russell. And so let's take a look at Bitcoin. As you know, Bitcoin's been going crazy. Why? Because commercial buying by hedge funds and so forth has been very, very big. So let me review for you a little bit. Notice this huge move in gold. What preceded that move in gold? Commercial buying right at the bottom. Let's look at another one. Silver. What preceded this big move up in silver? Commercial buying right at the bottom. But remember, net long by commercials is a setup, it's not a trigger. We need a trigger. So how do we do that trigger? We go to our weekly charts, use the channel for a trigger. And it's very specific. Here is the moving average channel in wheat and precious metals, showing buy setup, buy trigger. And if you're not clear on the rules, you can get them from me at the website. Let me go forward. Here's another one. Short-term trades, sure, S&P, May 23rd to June the 5th. Very simple, very specific. And remember, it gives you everything you need. The entry, the exit, the stop, the profit target, the timing, everything you need. And the entire history, 1 year after another. Check this one out. Even after teaching people seasonals for all these years, because I started teaching seasonals back in the 1980s, last year, this trade produces its biggest profit ever. So, in answer to the question, hey Jake, if everybody knows this, is it going to stop working? The answer is no. If everybody knows it, it's not going to make a difference because people are still going to find reasons to not do the trade or totally screw it up. So that's the move last year. Here's another one, platinum. And another one, close-up of the platinum. And what happened in copper before this big move up? One of the biggest moves up in history, right over here, preceded by commercial buying for the better part of a year. So while all this is happening, we're just sitting back, looking at our charts, waiting for a trigger. And by the way, all of these stocks, Southern Peru Copper, FCX, the Copper ETF, COPX, and so many others, were all tradable for huge moves based on this setup and the trigger. So let me see what else I've got for you. I want to say one more thing before I'm done. Very important. People say, always learn from your losses. It's true you want to learn what you did wrong, but you're not going to know what you did wrong unless you have a list of processes that you do. As I suggested, the 19 things that you need to know. Because if you do that, you'll know exactly where you went wrong. But here's the thing I want to tell you. You want to learn from your profits. In other words, people say, whoa, I made $500 on that trade. I'm done with it. Don't do that. Go back and examine the profit. Ask the question, what did you do right? If you know what you did right, you can repeat the process. Remember, there's a million things you can do wrong. There's only a few things you can do right. Learn the things that are right, and the things that are wrong will take care of themselves, okay? All right, so let me tell you a couple of more things here. I want to strongly suggest that you attend my year and forecast for the next year. And let's see. Jeff, how can I paste the link into the chat?
We're still here, don't worry. It's a link, you can actually paste it into the area that says chat, or I can type it up for you and put it in the same place.
That would be good. So there's one link for the Golden Keys webinar, which is 5 consecutive sessions, and one link for my forecast. Okay.
Yeah. So I can see it. See Conta, CC dash. Let's see. Let me make sure I've got this right. 3F8 VA vein. Okay. Conta.
VA1N.
Yeah, I got it. I read it as vein though because
So my goal to help you become a better trader. I can do that. I've been doing it for many years, and I'm a real trader. I really trade. I trade what I teach, and I teach what I trade. So, Jeff, it's been a pleasure. I'm happy to take questions if there are any.
Okay, I'm just seeing conta.cc. So I thought you should. We did have a question a little bit earlier about where you're getting the data for the institutional. So I thought you might be able to talk a little bit about the FTC report. Well, I'm trying to figure out what this link is.
You guys do that on MetaStock. It's a COT, Commitment of Traders report. The Commitment of Traders report comes out every week. It's usually a week old by the time you get it, but it's very powerful information. It gives you everything you need. It divides the groups into commercials, speculators, and small speculators. And as I say, you guys get it on MetaStock.
Yeah, and we do. Any futures package with whether it's real time or end of day, as long as you have futures access, will have that data. We do have a question from Ricardo for you. It says, please tell me the green indicator. Is this available?
Well, the green indicator, so what we're doing is, let me go back a little bit. So what we're doing is this. Hold on a second. Let me go there. Don't go away. Yeah, this green indicator is very simple. We're just taking the net commercials long positions and showing it as green. So normally the commercials, the COT will be red on the bottom and green on the top. Green indicating net longs. If there's nothing here, it means they're net hedged. I'm not showing the net hedge because that doesn't help us. The only thing that helps us is to know when commercials are long. And I believe, as I say, when you bring up the COT indicator on MetaStock, it can show that way.
Okay. And so to kind of show that a little bit too, these are indicators that you can actually download. I did put a link in. I was still talking about CFTC. Are commercials for buying gold available? Thomas wants to know.
Yeah, the COT is available for every futures market. So right now, the commercials are not buying gold anymore. They did buy it about a year ago, and they've been very smart to do that.
Okay. And I will say that as part of the add-on, we actually look at CFTC the same way Jake does. So we've actually taken Jake's calculations and put them into the add-on as they're part of the add-on. So there you go. Sammy wants to know if you have any specifics for divergence criterias.
Yes, here's what I will do. Not only am I going to be teaching divergence with my 5 golden keys, but the divergence is really easy. We measure divergence with momentum 28. So if you take the momentum indicator, make it 28 periods of the close, that is where our momentum comes from.
Okay. And then Ricardo, just answer your question. Jake, thank you very much. Just answer your question again. As long as you have a futures data from package, you'll get the COT data. There are some templates that make viewing that data a lot easier in MetaStock that I built. That's a free download from our website. If you want some help getting that, just contact us. metastock.com/support chat would be able to get those to you. Jeremy wants to know, I think we have time for one more question, Jake. Is there an indicator that is similar or the same as Williams accumulation distribution?
Yeah, that's a good question. You can use momentum 57. You can use momentum. You can use momentum 28 and a 57 period moving into momentum. If you're not clear on what I mean, just drop me a line. I'll explain it to you very clearly.
All right. Thank you very much, Jake. Appreciate it. Always a pleasure having you in here. We should have you more in here next year, or in here more next year.
I should use MetaStock more because it's a powerful tool. Thank you very much. I appreciate it, and thank you everyone for attending. Good trading.
Thank you.
Remember, it's all about the numbers. If it's not about the numbers and you have to interpret anything, you're going to screw up. Thanks, everyone.
Thank you very much, Jake. Good to have you here. All right. And then let's go ahead and do that. Absolutely, always a pleasure to have Jake in here. Let me go ahead and I guess I better make myself the presenter here. And we'll talk a little bit about his add-on. So let's go ahead and show my screen. We're going to do this, and then we're going to do this, and then we're going to go do this. Okay, cool. And this should get us to where we're at. Absolutely. Jake is, I consider Jake a really good friend. I love the way he looks at seasonals. He does a great job. In any case, so we did create a version of Jake Bernstein Setup and Timing Triggers 2.0. We just updated it. I think we finished the update late 2019, so it's a fairly new update. It does have full integrations in with MetaStock, so it's got an expert advisor, it's got explorations, it has system testing in there. One of the things that's kind of unique about it is he's got a breakdown of different systems. So if you're a stock trader and you do a lot of stock trading, we've put all of the technical systems, including the moving average channel, the MAC with advanced, or the ADMAs, the momentum moving averages, all of these are put together, all of these have been updated, and all of them, in addition to having systems that you can apply to a chart and see the buy and sell signals for. Of course, they have scans. They also have system tests, so you can actually test them and see how well that they performed. In addition to that, we also put all of his commitment of trader systems together as well, and that's available as a download. The thing I like about Jake is he's very specific about when he trades. He wants a setup, he wants a trigger, and he wants to follow through. And I feel like we did a really good job in kind of duplicating that and showing that on a chart as well. So there you go. In terms of this particular add-on, the normal price of it is $499. Here at the event, we're actually going to knock $100 off of that. It's going to be $399 as a one-time cost. That's going to include a free trial of MetaStock if you need it. It's going to include a comprehensive user's manual, and we're going to back it with a 30-day money-back guarantee as well. So you can try it out. If you like it, if it helps you make better trades, you can keep it. And I would encourage you to try this out. It's a great little add-on. $499 normally, $399 here. We'll also include a money-back guarantee with it as well. So there you go. Now, I want to say thank you to our sponsor, Stocks and Commodities Magazine. Thank you for being a sponsor of the event. And the CMT. CMT is a great association. We've been proud to be associated with them for the last several events. You can find out more of them at the cmtassociation.org. You can also give them a call at 646-652-3300 if you'd like. So there you go. And of course, we're MetaStock. MetaStock's only one. The Reader's Choice Award for stocks and commodities, 28 years in a row now. I love it because I can go in there, scan the markets, find the ones that have an opportunity right now, right away. You can also test trading ideas. You can forecast. You can get real-time alerts and commentary and signals. And it starts at just $60 a month. So you can also, the special we're doing at the conference is if you pay for a month, you can get your second and third month for free. So there you go. Our next guest, let's see. Jeremy says, thank you, Jake. We've always loved your presentations, and I've enjoyed your book. We always love them, too. Sarah, Jeremy also want to know how they can get a copy of the recording. The recording is available right now. We are streaming to YouTube live and in real time. So if you go to youtube.com/metastock, you can go watch Monday. You can watch Tuesday, but don't leave now. You can watch all the so far up to today on Wednesday, and we'll just keep them all up there live. Well, all you need to do is go youtube.com/MetaStock. I'm going to type this out for you. /MetaStock. And make sure, it does help a lot. We do appreciate it. If you just like and subscribe, you can also ring the bell while you're doing it. You'll get notified of when we're doing awesome events with really, really awesome speakers. Now, speaking of awesome speakers, our next presenter is Anne-Marie Baiynd. Anne-Marie actually is another, they're the same intro, aren't they? Is another good friend of mine. Actually, with Anne-Marie, we do a lot of market recaps with her where we will actually bring her in. She does a really good job of kind of looking at charts. One of the things that never fails to surprise me is we'll be like, we'll talk about a stock and she'll be like, oh yeah, that company released earnings and it was a little bit high. And it's just some random stock that I would never know about. One of the things I love about Anne-Marie is, one, I've gotten a lot of stock picks that are pretty awesome from her. Two, she never surprises me. She never fails to surprise me with kind of like her just depth of knowledge in the market. I'm really, really impressed by her. So Anne-Marie, let's go ahead and bring you on here. How are you doing today? Hello?
Great. I am doing very well.
Cool. Let's see. We can see you're coming through. Did you want the presentation? I know you want me to drive charts for you, and I absolutely am happy to kind of help look at charts. Did you want the presentation at all, or should we just start at MetaStock?
Yeah, let's just use MetaStock overall and just get ourselves comfortable and jump right in. I loved listening to Jake. I thought his sensibilities were extraordinary, actually, right? And that's really something that you'll hear from a lot of folks that have been in the market a long time. They really sit in the land of common sense. Yeah, that makes sense, right?
Yeah.
And many of us try to outthink the market, and that's never a good thing. Never a good thing. So the first thing I'd like to do is say thank you so much for having me on. The group of folks that have been in the webinar series have been extraordinary. And so I count myself fortunate to be part of them. And I'm really looking forward to talking about not only my strategy that I love that MetaStock has here, but any strategy that you buy, it's obviously very solid because it's coming from MetaStock. But on top of that, just like Jake said, nothing ever gives you 100% of the information that you have that always gives you 100% for buy or sell. And so that begs the question, is there something else that I can do that allows me to say, you know what, I have added strength in making a decision here? And so the one thing that, you know what I would really love? If you could change this moving average to a 5 typical price, simple.
There you go. I can do that. We do
Right.
have that with
Look at that. That's fantastic. So my goal today really is to have you feel very comfortable about whatever system you're buying here, because it is extraordinary and they take such good care of us. They really, really do, as people who work on the strategies and a customer, just bar none. There's nobody above them. And so when you do buy and you're getting yourself settled in, and Jake made that comment, he said, hey, listen, if you're not making money and you're using a good strategy, it really boils down to the fact that you're not following rules. So the question might be, how do we become comfortable psychologically if we follow a rule and the chart stops us out? So here's the very interesting thing. statistically speaking, people are much more comfortable making mistakes on their own, and they'll give themselves a much greater leeway than a system that gives a mistake. They're far more likely to judge a system much more aggressively than they might themselves if their triggers say buy and it stops out, or a system says buy and it stops out. And that's because we expect systems to be more robust than our own thinking. There is a truth to that, but because the market works in probabilities, we have to realize that the most important thing is really setting up yourself and saying, okay, this tells me to buy here today, but if I buy today, what's the risk? And that's something that I loved hearing Jake say over and over again. Listen, what you read, what you see, what you hear, none of it matters. What really matters is, can I take the trade at this level and handle the risk? And so let's take a look at Ford. Ford has signed some fantastic agreements in the last several. Is this a daily chart? Yes, it should be.
It is.
Yeah. Mm-hmm. Yeah. And so Ford has signed a great deal of very good EV relationships over the last year or so, and you've seen it steadily climb. And so the question is, well, gosh, if I take a look at other EV companies, they're just moving straight up, like Lucid or, RIVN, which obviously is pulling back now. A lot of other things that are moving at a much more rapid pace than, say, Ford or GE. And that really comes because of who's participating here and the volume of stock that is sitting out there. So we know that certainly something that's like Ford or GM, they're owned by tons of pensions, lots of IRAs, lots of spaces. So they're not going to be as effective from a meme perspective, or people running out and buying whatever is the hottest in this particular space, but it is very strong. One of the things that we learn when we're trading and we're looking at a moving average is if a moving average is moving upward, like we see right here, and it begins to flatten out, it means that price is taking a breather. And when price takes a breather in an upward trending formation, probabilistically speaking, it tends to break out in the direction of motion. So our chart here has a buy zone, and it's got a support edge sitting on the edge of it. And so if we look at the bottom of that support, really where the wicks are from the low of this last sell zone, exactly, we're going to see somewhere around 19. So if you're looking at something like this and you're thinking about, how do I want to participate? Your participation has really a lot to do with how long are you going to hold the trade for, and what do you hope to accomplish? So my favorite thing to do in spaces like this is think to myself, would I like to own Ford at 19? And if that is the case, then I can do two things. I can put a buy order, a limit buy order down there, and wait for it to come into that 19 area, or I can sell a put. If I sell a put, and I've already agreed that I want to take possession of that particular stock at that space, I can say, you know what, I'm going to sell that 19. Maybe I sell it in January if it comes in to see me, and I'll collect, it says $1.05 right now in the space. So really, if you collect $1.05 and the price comes into 19, you really get it for $17.95. Let's say, however, the market jockeys around and there might be a fade and you are a little bit nervous about what might happen. Let's take a look at the weekly chart and see what the signals tell us from there. All right. So from the weekly perspective, our buy zone was all the way down at about 1350 maybe. And this really is where they put out their first big notice on who they were acquiring from an EV perspective. And that really started that run. Now you'll notice that we're fairly far away from a 5 simple moving average. So you might say to yourself, gosh, 5, that is a really small moving average to look at. You're going to see a lot of wiggles and moves around. And the answer to that is yes, absolutely there is. But also, if that chart has a 5 that is moving up, the area near that 5 or the area near the breakaway from the last close test of the 5 really gives us that really gives us our area where we go, you know what, this chart could fade and it could come in to 17 or 1750. And we could say, you know, maybe instead I want to look at my 17 or 17. I don't think they go halfways. Yes, we look at our 17 puts. Now, what's the implication there? The implication is I don't want to buy the top because I'm managing risk, and it's all the way up here at almost 20, but I'm afraid of missing out on the run. And so this is that one thing that, again, I'm going to refer to Jake. What an incredible presentation. Really, hat tip to him. His thoughts are always about what does the system show us and how much risk am I opening. So if I look at something and I say, wow, my support edge is 17 and I'm up here at 20, but I don't want to miss out. When we jump into a trade like that, that's really what we have to look at. We have to say, hey, can I manage $3 of risk, which is a 15% drawdown? Now, for some of us, we might go, you know what? That's okay. I'm going to do that because, listen, once this EV starts kicking in, everything's going to start moving. And Ford and GM, because they have the deepest pockets, they're going to come out. And that innovation that sits with all the new guys is going to slowly gravitate into this area. And it's going to be something that we'll be able to hang on to over the long run. So that might not mean much, but for someone like me that runs very short cycles of trading, I am not going to ever buy the highs there. I'm going to use the puts, the short puts in my IRA or in my regular account that say, hey, I might not get this order in right now, but at least for participating, I'm going to be able to pay for an engagement of sorts. All right. So what I really wanted to talk about was the following. How do you know, and let's use my system here directly from the last sell zone that turns into a buy zone in 2 weeks. We see it at about the May region, it looks like.
Right here?
Yeah, exactly.
Okay.
So this is a region that we look at and we see, wow, this one tells me to sell, and then 2 weeks later, it moves into a buy formation. So if you're waiting for that sell zone, my sell zones will come up as this candlestick is being created. But let's say worst case scenario, because really it's the only sell zone or buy zone that is not, it's going to leave us as a wash. Essentially, we won't make money, we won't lose money. It's just a wash. And so we can see from all the others, the buy zone tells us where to stop. It tells us where to re-engage. And then the sell zone on the far end near August tells us where to get in, tells us where to stop. And then the current buy zone all the way down here is telling us that we can stay long. So we have 1, 2, 3, 4, 5 triggers, and one of them is a wash. And so that's about 80% if we're looking at the particular chart that we have here. So the question might be, is there something in this formation that tells me, you know, this sell zone might have some trouble? And the answer is something that I said at the very beginning of the conversation, and it is when a chart has very strong upward motion and the moving average turns a little bit sideways to flat, what it's telling you is that it's going to resume the upward trend. Now, in this case, what it did was come in and test the support edge. So if you wouldn't mind drawing a line on the horizon at the bottom of the sell zone event that had the bad trigger.
Right here.
Yes, right there,
Okay.
exactly. Look to the left and have a look at the last region of support and resistance on the left-hand side of the chart around February. You're going to see that that area left, the other left, yes. Yeah, there we go, your other left. Around March, you'll see that that sell zone comes right into the support for the sell that turns into a buy is shown in the February formations that give us old resistance and new support. Look above to the end of February, right there. That line that you draw immediately when you have a sell zone in a big formation, you look out and then look to the left, and that support ledge is going to tell you if it doesn't lose that support zone, you need to wash your hands of that short. You can always get back in if it resets. But my philosophy is this: if I've got an upward trend that flattens out, the first thing that I'm going to estimate is buying pressure coming to the mix. That is huge in terms of understanding what's going on. Something else really fantastic about this system is, let's go to the top of the sell zone that gave us the wash and draw a line across the horizon right there at that price point.
Right
at
here?
The top of that, right at the top of the candle, that this down a little, right there.
Right here.
Yes,
Gotcha.
right there. Now
Oh,
notice.
wow, look at how well that worked out.
Exactly. Now, funny thing, that actually happens on the daily, the weekly, the 4-hour, the 5-minute, whatever cycle you want to run with this particular system. You're going to figure out what needs to be done when you look to the left and you see what price action has done in the past. Old resistance that triggers the sell is going to be new support if you break the high. And that is something wonderful. Now, let's say you're looking at a chart and you're like, I haven't seen new highs in a while. I wonder what's going to happen. If you wouldn't mind drawing a Fibonacci for us from the last swing high to swing low. And that would mean we would want the high around June 4 to the low around September, yeah, whatever that is. Fantastic. Now, have a look. Here's the 1618, very, very important. But using a Fibonacci will also give you that range expansion. Now, Jake said, hey, listen, Fibonacci's just aren't my bag. Don't use them, don't like to use them, just because it doesn't fit within his system. But so many things are breaking out to brand new highs these days, prices we haven't seen or haven't seen in years. Using this mechanic of swing low to swing high, you'll figure out exactly where your target action is looking. And so something that you can look at is when you see your buy zone, you can say, all right, as long as I'm tracking and sitting above this 5 simple moving average on my weekly, I'm going to see if I can get to my 1618, and I'm going to watch that as a potential new support area. Now, my thought is it really moved aggressively to the upside, and today they've got something else that said that they created a new relationship with some chip makers to come right in. And I believe that since that was a little bit of news before all the chip makers came out and had fairly good returns, and of course today NVIDIA is just going off the rails, it's doing so well. This is the area where we go, you know what, for 3 days, I've been sitting right around this zone. And let's say you're carrying 500 shares. When you get into this 1618 and you keep dancing around a zone for a couple of days, trim your position, go to half size. Now you might say, well, if I go to half size and it continues to run, I'm going to miss out on all those gains. That's true, but a trader who lives to trade another day or has a portfolio that manages risk well will always trim when we come into a congestion event after a pretty good run up. And this thing has run from profit. So let's take a peek at something else, maybe something that folks are very eager to look
I don't
at.
think she even realized we were done. All right. Hey, Anne Marie, can you hear me?
Yeah, I can. I
Our
did
internet
notice
is-
that you went boop. I did.
So did YouTube, unfortunately, because we're running it through our internet here. But GoToWebinar probably heard the whole thing. So that's
Yes.
good. We should probably,
Yes.
well, we haven't really had a lot of issues till today. So did you want to look at a different stock?
Yes, let's take a look at a chart that maybe folks are thinking about, or maybe you're thinking about. Things that are moving fairly dramatically, or that you like them. We can use this Fibonacci and show, even if you use things like Bitcoin, anything, just
Is it our
anything.
choice?
A-
Monty wants us
anything.
to look at ATOM, ATOM, ATOM. I'm
ATOM.
good. Yeah.
Okay, great. I don't know these guys, so that's great. Altamira. Perfect. All right.
We
So
are
now
still on the
let's
weekly.
go. If we look at a weekly, we can see something very interesting occurring. We'll go to the daily, but we'll look at this
Okay.
weekly first. And what we
Okay.
see is this chart is actually consolidating. And one of the things that we're seeing is higher lows across the board. So I really like the way this chart looks. And it's just triggered a buy zone on the weekly. And so here's something very interesting. Let's put that horizontal line right at the base of that buy candle.
Right here. That's where you want it.
Exactly.
Okay.
Yes. Now let's go to the daily. I am just like Jake. I love to look at the weekly chart to tell me what's going on. The daily chart says much of the same thing. It's resistance to support to resistance to support. One of my favorite places to trade is the sideways formations, because I can trade support to resistance significantly, and it looks very nice from here, but it's not a place that you have a holding pattern for a long trade, or literally you'd be sitting here, well, a little bit better than break even if you were long, and if you were short, you would have been stopped out. The last buy zone is still very active, but you'll notice the sell zone has shown up on a weekly chart that gives you a buy. So the question is, if I am thinking this is a long-term breakout, where would I want to engage in this chart? And it's always the same. You want to go to your last sell zone, that not the one at the top there. Yes, exactly. And you want to look for any resistance diamonds nearby, and you want to move, yes, right there. At that 25 area, that tells you where the real breakout action is. Interestingly, you can also see that's true by the volume that begins to rise, especially on the big break to the north. And you can see that really happening. So many times we look at a chart, we go, wow, that looks really, really exciting. I really want to get involved. I don't want to wait. If you look at this, where this chart is right now, it said, hey, listen, here's my sell zone. I had a breakout area for 4 days. I traded sideways, but did not break support. And I stayed above the 5 simple moving average. If you move sideways, you want to take some profit. Most definitely you do. But there's no reason to get out of a trade long unless you start trading below that 5. And the sell zone actually comes very nicely here with this 5. I like sharing this 5 simple moving average with folks because it's simple, no pun intended, but it's also an easy way to go, wow, if this is moving up, it means I've got steep trend. And when you've got steep trend that breaks, you know that the chart is going to come back and test support. So in my mind, this support action event looks like 25.50 to 27. So if you're looking for where do I want to buy this, you want to think to yourself, well, I'd like to see it come to the original area that my buy trigger on the weekly started, and that's down here at 27. So you can put a limit order here, and your stop might be 25. Or using my favorite thing, ATOM, correct?
Mm-hmm.
Yeah, I would look at, say, the puts. Oh, lovely volatility sitting here. I would look at the 25 Januaries, and the vol is about 90%, which is fantastic. That means I'm going to get, let's say you love this and you go, hey, I want to trade these guys. I want to hang on. These guys are breaking out from something big. If they come back into the support zone, I want to buy them. That premium is $2.55. So if you actually come into the 25 and you're put to the stock and it becomes yours, you have actually purchased it for $22.45, which is fantastic, right? $22.45 puts you all the way back down at the daily buy zone for this chart. Very, very nice area. So one of the things that I like to focus on, that I see that traders have a really tough time with, is patience. And you can look at a chart and be patient, and that's going to give you a lot more buying opportunity in the long run. And so a while ago, I talked to Jeff about lithium, and
I was going to ask you if you didn't bring it up. While we're switching charts, I think I'm going to help Kevin out a little bit. Kevin is complaining that he can only see us and our faces. And Kevin, I'm assuming that you're watching on like your phone or like a tablet. And in GoToWebinar, it's going to allow you to alternate between what we're showing on our screen and our faces, but you have to swipe left or right. And then that will get you to be able to see the chart. So Kevin, just a little, and also if you're watching on a phone, it's a handy thing to know. If you're tired of looking at me, swipe left and you can look at the chart instead. All right, go ahead. Let's go ahead and get lithium.
All right. Okay, so lithium has been on a tear, right? And
yes.
And now it's starting to sit underneath this 5. Now remember, anytime you get under a 5, the first thing you need to think to yourself is, where is support? Can my trading find me a support ledge that looks really good? So let's go to the weekly, right? We always want to see how the weekly formation is setting up. All right, so the weekly has a buy trigger right around the 85 zone, right? Somewhere at the bottom of that candle, if you wouldn't mind drawing the line. for us? Yes, perfect. Notice if you look to the left, it's a breakaway formation. There's a sell zone and a resistance area, and it breaks away. So you might say, well, Anne-Marie, didn't you just say that you don't like buying the new highs? If this says buy, what are you thinking? So here's what I think. I look to my chart and I say, where is the 5 simple moving average? And if it is under me as support, I know that I've got buying pressure. And notice the volume continuing to rise as the price rises over 1, 2, 3, 4 weeks, right? The moving averages have dipped a little, but because it's a 5, what you're always going to be looking for is old resistance and new support. And that's going to give you the area, even if it says, hey, sell, your thought must be, what is the broad signal telling me? Well, the broad signal is bullish. Overall, everything in the chart is moving up from left to right. So I need to look to the left to find my last diamond or my last trigger. And so if we do that, we go down to see where the sell zone support is. Look over to the second to last resistance diamond. Right there, right?
Okay.
That's going to give you the approximate region of where that sell is going to start finding buyers. And you can see it. Oh, it's fantastic. It works every time like that. It's a very systematic trading system. You have to get used to looking to the left. And when you look to the left, you're going to find out what you need. So let's again go swing low to swing high. And that looks like February's high at the sell zone there to maybe April's low. And let's do Fibonacci.
Right here.
Okay,
yes.
Great. Now, here is that 1618. We're above it. How about putting the 200 Fibonacci in there?
Sure. I can do that with
Thank
my
you
software.
very much. All right.
So right here.
And there we are. Take a look at it. If you want to know what I like using as my go-to Fibonacci levels, I use the 200. I use the 250 because although 50 is not a Fibonacci number, it's a number that a lot of traders like to use. So it's going to be our next upshot in terms of motion. And then we're going to see it up to the edge. But right now, we see a 200% retracement. That means from the last support zone that we had way back in April, this chart has moved 100% in terms of price action. It's moved twice as large, right? And so we can see 55 to 100 or close to 55 to 100. It's almost twice as far. And so when a chart moves 2x and it's an ETF, that is a place where you think to yourself, well, you know what? I need to settle down a little bit, see what's going on. So now that we've done the weekly assessment, let's go to the daily again. And thank you so much for taking care of this for me, Jeff, doing all of it. Fantastic. So now you can see, hey, I'm sitting here and I'm looking at price action that says, hold on, I've got a little bit of a sell zone. Remember, it's the 5. So what is the 5 telling you? When you get under it, it says look to the left to see if you can see support or resistance. And what we're going to do is see if it matches our Fibonacci's or if it matches the triggers that we're seeing in the software strategy for target-rich trades. And really, we can see right down here about 89 is where the support action could be. So for me, looking at this chart that is really ablaze, I will look at lithium, and I will say one of two things. One, I think I'd like to buy some at 89. My support action looks like it's about 86. So that's only $3. 3 divided by 89. If you don't have a calculator at your desk, I'd get one. I don't do simple calculations very well in my head, but I think every trader should really have one. They're very, very important. So you can easily assess your risk. Do assess the risk that the market tells you to assess. Don't give yourself some arbitrary number like 2%, because the market really doesn't care about that. The market has its own ideas about what risk ought to be, and we can tell that from the participating traders. And so if I say, you know, I think I'd like to get involved at about this 89 area, I will sell a put. And that 89 put will give me, in December, it gives me $1.80. That means that I really got it for $87.20. Maybe it doesn't fill and it continues to move up, or it comes down and it doesn't quite get there. Just because I'm focusing on the chart, I want to get paid for my focus. And so I still get $180 per contract for participating and looking at this chart carefully. So if you don't like doing the short put, you can also do the short put spread, right? Or you can simply, the short put spread is also good, but the short put allows you to participate in your IRA. So the question might be, where will this chart really start to give trouble if it's going to break down? It's going to lose 85. And so the thought process should be, okay, if I sell the 89 and I get it, and my actual price is $87.20, and my support ledge is right around 85, that's really $2.20 divided by 87, and that's, 2.5%, right? That you end up, if you take delivery on that stock and it stops into the space, you're going to have a 2% loss. Here's the real story. The real story is not, hey, how much money can I make? It's, if I expose myself to upward revenue stream or upward proceeds from profit, what's the risk of being engaged? All right. If I tell you, listen, I'm going to pay you $7 million to walk a tightrope across the Kuala Lumpur Twin Towers, and you have no tightrope, you have no tightrope experience, are you going to take the walk for the $7 million? Not unless you have a death wish, because it's 99% that you're going to fall, and maybe 1% you're going to make it across, because those are the tallest twin towers in the world.
Muted.
So it's not about what you can make. It's about what you could lose that you want to focus on as a trader. And when you look to the left with these kinds of mechanics, you're going to see exactly what you need to see to make a trade.
All right. Question while we're looking at this one, if you'll indulge me. But let's
Please.
say that hypothetically you've owned this, maybe you have a position on this. How do you manage a stop on it? So I hear what you're saying in terms of, if it goes down to this level, this is where I want to buy, and it all makes sense. Let's say just hypothetically you own some positions of that, you're fairly comfortable with some profit. Where would you look to have your stop? Obviously, the trend is still kind of, on the weekly, looks really good. On the daily, it's a little bit of a mixed bag. At what point do you say, okay, well, this is time for me to get out?
Okay, that's a great question. The flip side of that question is, what is the purpose of holding lithium? Is it to make a profit or to hang on to something long-term that might be able to, end up being much, much higher? And so the question might be, that? And the answer would be, well, both. I want to hang on to some and I want to take some profit. And so now you start thinking about trading around a position. So let's pick the worst case scenario. Let's say you got in at 95 and your exposure is I don't know. Let's say you have 100 shares. We'll make it nice and easy. Easy math. So you have 95 and your chart is now at, where are we in lithium? 93, right? So you're a little bit underwater and you're looking at it and you're thinking to yourself, well, my old resistance is at 89 and I've got a fairly bullish chart here. What if I sell the 100 calls, right? My thought, if you're looking for something to hold, you have to think about balancing risk. So if you're saying to yourself, you know, I see that this thing is 90 for my support. I bought it at 95. It's now at 93. I'd like to see what happens when it comes down into this support zone. And if it does, and it doesn't bounce, I'm going to have to make a decision. And so my first thought would be, well, it looks like it's in a fade into 90. So I'm going to sell the 100s, or I'm going to sell it right at my 95s because I'm nervous or whatever, right? The 100s are going for 280. The 95s are going for 450. If you sell the 95s, I mean, that's great. If you bought it at 95 and you sell at 95, and then you get told to relinquish it because it moves to 96, you still make $450. So because I tend to look at my positions in a more complex fashion, it's a little bit tough for me to say, this is where my stop would be. But I would say the following. This basing formation has been a basing formation all the way down into 78. And now it's breaking out from a weekly congestion zone up above this area. So my thought is it should not get below 87. If it gets below 87, I think it's a place that you go, hey, I need to reassess. But in the meantime, since it's below that 5, sell the strike above it. Sell it in January. You know, you get to use a lot more from an options perspective if you do something like that. It gives you cushion that you might never anticipate needing or wanting.
I want to, what's not hard for me to say, Anne-Marie, is I just want to do a reminder that the work we're doing here is for educational purposes. We're not recommending that you buy or sell anything. Just to, you know, just, we don't know what your risk tolerances look like. We're giving our opinion as best as we can. Cover the lawyers back there.
That's exactly right. And I'm just telling you what I do. This is how I work with my positions. The first thing I will do is, okay, how can I cushion my fall if I'm going to have one? And if I am interested in cycling through a position, you know what? I'm going to think about beefing the sides up of my revenue. So that's definitely it. And so, you know, thank you for that very good reminder, simply because, you know, I am telling you just what I do as a trader. Ooh, nice. Love all of these oil ones. Yeah.
Kelly's behind me in this room right here, and he will be grateful that I said that. So let's go ahead. Yeah, CVX. Let's look at CVX. Greg was asking about CVX, and we have a few more minutes. So maybe we can look at this.
We'll be very quick. This is a beautiful chart. Of course, we know that oil is running off the rails right now, right? We have a few warning signs. The buy zone was way down here at the end of September at the 95 area. We got told to take some profit. How do you read this? You look at the profit to take when the resistance sign shows up, and then when the support ledge comes in, you can say, you know what, I'm buying some more and opening myself up in this space. So we've had resistance, and oh, what do you know? This is an abandoned baby. This very big doji style formation 1, 2, 3 days ago at the very top of the high, right? Notice it gaps up and then gaps down. That is a usually very negative pressure event, but what happens when we lose a 5? We're looking for support. So here's the thing. This move down was so significant that it immediately stopped us out of our long formation. And so the long that we've had from about 95 to 116 is now gone. And so the chart is in a little bit of a sideways pressure event. That's what you always look for. Yes, beautiful, right there. That's great. So that support zone looks all the way like it's at 112. So let's say you're in the stock and you're saying to yourself, oh my goodness, I just got in. I thought this was a breakout. That's the area that you might consider, hey, maybe I wait for my support to come in to see where it was. Now, traders have a tendency to like round numbers, so it actually might be 110 rather than 112. But you are looking at something that gets very, very green and then immediately stops out. There's just no, that's just a big fade. And it tells me that people are really looking at this near that 120 area saying, you know, it's time to take a breather. I also suspect that oil is going to do a little bit of fading. So in the broad scheme, I think we've got ourselves a little rotation. Let's peek at the weekly.
Okay.
Thank you so much.
Thank you so much.
All right, so our buy zone and our stop are virtually in the same space. This is all around that 90 to 95 area. And we have our resistance zone that says, hey, listen, you want to take profit. So both the daily and the weekly have said, listen, you want to take some profit. We can see old resistance as new support from this area, but it really is near that 110 region rather than where it's sitting. So you might want to give this a little bit of room. My philosophy is always this: if you run 3 days in a row and you might test new highs, but you close down near the prior regions, it's always a place to take profit, always a place to reposition a stop on the move up. For the last few moments, I want to say this to you. When you trade and you're using technical formations or using systems that say this is a sell zone, this is a buy zone, you're going to be very benefited if it's a buy zone, you look to the left and you look for support. And if it says, hey, it's a sell zone, you look to the left and you look for resistance. Looking to the left of a chart is very, very useful about telling you what is potentially on the right-hand side of the trade. And we know from looking at the left side of Chevron, it's that it easily could move up, but there's a ton of chop between 125 and this 120 area. It should pull back because oil is likely to give us a little bit of a fade, especially as folks pull the strings to try to make oil pull back a bit. And I believe that the oil guys are going to have that happen to them as well. Thank you so much for having me. If there are any super fast questions, we can ask them. Otherwise, you know, always my pleasure. Please,
Always
as a
great to have you
trader,
on here.
Thank you so much. As a trader, don't think about what am I going to win or what am I going to buy after this big win. It's if this goes wrong, where's my support? Because learning to trade for another day is going to keep you in the trading space much longer, and it's going to make you far more profitable because your losers are going to be much, much smaller than your winners.
All right. And Anne-Marie, if somebody wants to kind of get in touch with you, follow you, what is the to do that?
Thank you for asking. You can find me on Twitter at Anne-Marie Trades. You can also find me at The Trading Book. Those are basically the spaces that I hang out. And, you know, ask questions anytime you like about the strategy, about trading in general. I love working with traders simply because when I began, I was a very bad trader. And it took a long time for me to get good. And so part of that for me is hoping that most don't have to deal with that, even though we do have to get punched in the face once in a while. We don't learn unless it hurts somehow.
Thanks, Anne-Marie. I appreciate having
You're
you.
welcome.
It's always good. We'll see you next time, okay?
See you soon. Thank you so much.
My
Bye-bye.
pleasure. Always a good time. And as you've noticed, we've actually been kind of using her software the whole time too, which is what's drawing the buy zones, the resistance zones, all that kind of stuff is getting populated automatically. I will also say real quickly, and we always kind of run a little bit long, but with this, it is a full integration into MetaStock. So if I want to go in and get detailed instructions about any of these signals, I can just come in here. We have a feature in here that's called the Expert Advisor Commentary. I'm going to go ahead and open that up, and it's going to analyze any bar I want to actually analyze on the chart. So you can see right here, we're looking at the very latest bar. It's going to tell us what our current trend is. Right now, it is bullish. Our last support region is near. Our last resistance is near, and give us a little bit of pre-programmed analysis in terms of what the current state of the chart is. So also some other really good information that she put in here in terms of a checklist of things that you can look at to kind of have a better trade. And of course, scanning. And as a trader, you know, you can say that for 4 days straight here. What I love the most is the ability to go in and scan. So if I want to find any stock that maybe started a buy zone or started a sell zone today, I can come in here. There's going to be a matching scan. I can scan the optionable stocks that I want. I can scan the ETFs. I can scan just the Dow or the S&P, which is what I do. And I can find the stocks that have an opportunity. So I can catch them more here as opposed to when they're actionable, when they're ready to go. So I love this. It's been a very, very popular add-on, and we'd love to have in because, you know, she just loves to look at charts, and I have a lot of respect for her. She does a really, really good job. So with this, with the Anne-Marie add-on, you're going to have real-time signals. You're going to have a detailed commentary breakdown. You'll be able to do full market scanning. It does have a system test. And she helped us put together a very, very good user's manual for this. Here at the conference, we're going to do a special. The product price is normally $500. Here at the event, it's going to be $399. We're going to back that as we do with all of our products with a 30-day money-back guarantee. That's kind of like a guarantee, but a little bit more rooted. We'll give you a money-back guarantee if it's something that's not helpful for you. If you've not tried our award-winning software, we will include a trial of MetaStock with the data that you need to run it. And we'll even have somebody help you install it and spend some time with you if you're a brand new MetaStock user and need some help. I do want to say that our support team is right here in the office. We keep more people in support than we keep in ourselves and in our marketing team. And they do an awesome job of helping customers out. So, and that's one of the things, I mean, Jake said it at the top of the hour. One of the things I'm proud of is how good our support is and how good of a job we do. So I do really feel that part of the reason I've been here for so long is not only is the software really good, the support of the customers is great. All of our people are here in Utah. If you have questions, if you need help, it's unlimited support. We're here to help. You can take advantage of this offer by giving us a call at 800-882-3040. If you have questions, you can chat in. You can also chat your order in, metastock.com/sales-chat. You can also go to metastock.com/conf for conf promo, and you can sign up that way as well. Give it a go. If you like it, it'll help. And if it helps, it should pay for itself. And it does have a money-back guarantee, which is a pretty good risk reward, I think. So there you go. Again, the phone number is 800-882-3040, metastock.com/conf promo for the URL there. I did just talk about MetaStock. We've won the Stocks and Commodities Reader's Choice Award 28 years in a row. Try it out. If you like it, you'll like it, and you'll keep it. We're going to go ahead and say thanks to Technical Analysis of Stocks and Commodities for sponsoring today's event. They do a great job. They've been sponsoring and supporting the conferences and the events that we've been doing for almost a decade. We've been doing these summits and these conferences for 9 years now. They're a great sponsor. They're a great supporter. And if you do a MetaStock subscription today, you're going to get 5 free issues. You're going to get this many free issues just as part of it. If you spend $300 or more, you're going to get a complimentary 2-year subscription. So it's a great magazine. We appreciate their support. And we also appreciate the CMT support. But I'll talk a little bit more about them after our next great speaker. So I hope you're all doing well. To answer your question, let's see, who was it? Jeremy. Yes, the recordings are available. Right now, we are streaming all of the videos to YouTube. So if you have, if you want to go, if you go to youtube.com/metastock, all of 3 days so far will be available for free. Like and subscribe. It does help a lot, and we do appreciate it. Mark Leavit is our next guest. I remember that if you remember last year, we had this little thing called the coronavirus and a bit of a market crash. We actually had Mark on, and we were doing a webinar back there. I had to actually look at the exact date, but one of the things that he was looking at, and one of the videos that was titled is like, it's time to bottom fishing for stocks right now, or something like that. He was actually pretty good at calling it pretty close to the bottom of the market. He's a very, very good technician. He does a lot of volume and volume reversal analysis. So with that being said, Mark, how are you doing today? All right, Mark, yeah. I can see your mic just went on. We can hear you.
You can hear me, good, okay.
Yeah.
And do you want me to do the video?
Yeah, I'm gonna go ahead and make you the presenter right now. So I should ask you if you want to think. Do you remember that webinar?
I remember we were trying to pick the bottom, right?
Yeah. Yeah, it was a pretty good timed webinar. Good job.
I think we had a title for it. What was the title we were looking for? Catching the bear market bottom or something?
I think it was Fishing for a Market Bottom was the title you used for it. And I think it was right around the market bottom. So.
Well, you're a good technician too. What can I tell you?
All right, so I can see your face. You look good. Okay. I can't see your presentation, but you should have a little screen on there that says, do you want to share your screen?
Okay, so I'll hit share my screen. Let's see if the PowerPoint comes up.
Got it. First try. So, and then
let me put this up here. Okay, you see that?
All right. Yeah. You know, I'm going to get out of the way. It's your turn. Go.
Okay. How much time do we have, Jeff?
I'd say do about 50 minutes. A little bit longer if you need it.
50?
50 or 55 will be fine.
Oh, I don't have that much material. You and I are going to be talking about a lot of things. But thank you. Right. I thought it was like 20 or 30 minutes, but I just crammed a bunch of charts together on a PowerPoint. And I guess what we could do, Jeff, is since you got the live MetaStock there, and if we have questions, we can spend a lot of other time, looking at the individual requests. So
yeah, we can certainly.
Here we go. So basically, I was invited in to talk about where my VR signals affect the major markets, and I put a bunch of little individual stocks here. And what you're looking at the screen here, just the homepage of my newsletter, vrtrader.com, Leavit VR newsletters, and we have a bunch of stuff. as you can see there. So, and we do have a special offer we'll talk about, next. But we also have our book, The Trader's Book of Volume. Jeff, are we giving away the book as a special offer or no? I think we were offering the book as a special giveaway, so I'm not quite sure what the parameters are for that. But it's also in Chinese, by the way. And it was nice. 2019 Timer of the Year. I think I was Timer of the Year back in 2006 or 7. So I've done okay. I consider myself a survivor, forecasting the market. We launched a letter. I'm dating myself now, Jeff. 1979 is when we launched the original volume reversal newsletter, which now is VR Trader, and we do our forecast for the whole year. And my key indicator is a volume reversal, which is really the focus of this. I do a lot of stuff. People that subscribe to me know that I'm into everything from when the next asteroid's going to hit the Earth, to lunar cycles, to earthquake activity, to volcanic activity, seasonality. I throw a lot of stuff into the soup, having done this for many decades, trying to time the market's seasonality, like, for example, where we are during the various equinoxes and solstices and so forth. So I was particularly influenced by some astrologer friends of mine decades ago to take a look at the lunar cycles. So I find that, in fact, we have a full moon coming up here tomorrow. Sometimes we see change of directions around lunar cycles. So I do a lot of stuff, but my primary focus is my volume work. And what I found is you've got to look at a lot of indicators, and volume is great, and I use it for my trading. But to get a bigger perspective of things, you have to try to be a little more comprehensive, and that's what I try to do in the newsletter. So what I've done here today is we're just going to show a bunch of examples of the major markets, just how my little VR indicator works. This is a proprietary tool. It is available on MetaStock. I'm honored that Jeff had called me back in 2010, 11. I think it was 2011 when we launched the indicator on MetaStock. And there's no question about it. MetaStock's the best platform out there, been around the longest, and greatest support staff you could ask for anyone. So thank you for Jeff for that. So again, it's on MetaStock. It's called the Volume Reversal Toolkit. If you go to the website, there is a little video, and it I explain, the use of the indicator and the little pop-ups that go along with it when you hit little points on the chart. So rather than get into all that, the video is probably the best place to go. But we're going to look at here in the next 20, 30 minutes or so is just some examples that I pasted up on a PowerPoint. So what we're using is what I call the sequential volume reversal. We have 2 or 3 versions of the volume reversal on the program, on the application. Sequential means that I just show every volume reversal that comes up. I just want to see all of them. We have a directional version that filters out repetitive volume reversals, and we have a 2-day version that shows what happens 2 days after you get a volume reversal. But for this presentation, I'm focusing more on the sequential volume reversal, okay? So I'm just put up a bunch of examples here. It's a lot. It's not so much to throw at you because I'm very simplistic at what I look at in my trading. This is my screen, essentially, except that, I fine-tune this a little bit where I try to color code the bars, and hopefully we'll get that fixed here on MetaStock in coming, weeks or months. I'm hoping we can do that. But for now, I just put up a 50-day moving average, which is the blue line, a 200-day moving average, or weekly if you're using the weekly chart. Many of my clients will use 5-minute charts, 30-minute charts at any time frame. It tends to work, but I'm focusing mostly on the daily chart. And then what you're looking on the screen here is global ex uranium. I'm just picking one sector since uranium has been hot. But basically what I do is you look at the screen, you see these little negative VRs, little positive VR, and this is my volume reversal. This means that we've got a rally day on more volume, on increasing volume, and our negative day on the negative VR coming down. There are more sellers than buyers. And these become what I really call my trading tools if you're trading day to day. And what I look at also is a short-term stochastic, which you see here on the bottom. And it just pretty much gives me a little momentum indicator. You could pick any momentum indicator you like. I just put a 533 stochastic down there as a little confirmation. What I like to see is volume and the stochastic move together. But as you can see here, and we have maybe 20, 30 examples here, is that when I get a negative VR, you tend to come down, and a positive VR, you tend to go up. And if it doesn't move right away, you have to use your stops. And that's essentially what I do. If I have a positive VR and it takes out a low from the previous day, I'm out. If it's a negative VR and it takes out the high from the previous day, I'm out. But generally, we get follow through after the VRs, as you can see. And just a great trading tool. And again, I created this many decades ago. Doesn't mean this is a great complement. It's really to anything else that you might be using. I tend to use it almost exclusively. I'll look at the news. I'll look to see what's going on, if there's a news story and that kind of stuff. But as a general rule, if I'm following a particular stock or ETF, in the case of this GlobalX, and I like it, and I see a positive VR, I jump in. And then you have to make a decision. What kind of trade do you want? Do you want to wait until the negative VR comes in? If I circle an example down here, this was back in April. In theory, you could be long all the way to the point you get a negative, but then another positive comes in. So you have to make a decision on what you're looking to do. I tend to be very short term. Jeff knows this. I have long-term views, but for people that subscribe to my Trading Ace newsletter or my Platinum, I could be taking a trade, the same day or the next day, and just taking the trade. And part of my philosophy comes from my days as a floor trader years ago when I was on the Chicago Board Options Exchange. Trader friends of mine literally didn't take home any positions. They cashed out every day, took their checks from the clearing firm, and they said to me, "We're here to make a living. This is like a job. We want to get our cash every day and come in fresh the next day." And they took it to the extreme where they literally would not carry positions overnight. So I guess I've been influenced to a certain degree. I'm sitting there during the day. We have a nice trade, put the money in your pocket. So I look at it as more of a way of making a living than in terms of an investment program. And I should say that I'm not a investment advisor. I'm not registered as an investment advisor, and I don't give financial advice. I have to give that disclaimer. I'm just a technician, educator, trader, and this is what we do here at the VR Trader. And you look at the indicators and you decide how they fit in with your strategy, whether it's short term or long term. So moving on, I put up the spiders SPY because everybody wants to see how they work in different markets. And as a general rule, it's a good trading indicator. That it doesn't work every day, obviously, but you can just see in the last several trading sessions, we had a negative VR, we dropped for a couple of days, and a positive VR, and we went up for 2 or 3 days, and then we had a negative VR. I think it was the day before yesterday, and then we had sold off early. So there was some follow through, and again, it's a tool. Back here, you could see the implementation of the negative VRs, how it indicated the market was going to be dropping. So again, if you're using it on a day-to-day basis, there's some really nice signals where you'll get a negative VR and a gap down the next day, for example. There's no way of predicting that, but definitely you want to know where your stops are. So, and as a general rule, like let me circle this little positive VR here. This was back in early November. If I'm buying on that VR, I don't want it to go any lower than the bar before it. That's like the low of the day prior to the positive VR. That tells me that whatever accumulation came in, the move momentum is not really there, and it's a bad signal. So as a general rule, that's the sort of guidelines I use here. I'm sorry, I have I had the spider and I hit the button for the ETH. I'm sorry, I just saw that. So this is the Ethereum that I was talking about. Let's go back to the spider. That's what I showed you a moment ago, and I hit the button. So anyway, there's a lot of interest in Ethereum. Good technical signals here as a general rule. The most recent one was negative, and we've seen the ETH under some pressure here the last several days. But prior to that, we had some nice positive signals. So if you just scan the chart, you can see here we tend to get follow through after negative VRs and follow through after positive VRs, and that's really what I'm trying to do here is trade the darn thing, since there's so much volatility in the crypto market. This, of course, is one of the blue chips. And this is another chart of ETH. I believe this is the weekly chart. I'm just showing you the daily chart just to give you another time perspective. And you can see here on a weekly basis how going back last June, July, for example, negative VR, and it drops for several weeks, and then positive comes in late last summer, and then we take off to the upside. In fact, on the weekly chart, there hasn't been a sell signal yet, even though the last couple of days have been a little sloppy. So it's always good to take different time perspectives on it. And this, this is a way of looking at it using the MetaStock ability to switch your time frame. So as a general rule, if you think you're in a big uptrend, as it showed for many weeks, then of course you want to check with your dailies as well. So here's GBTC, everybody's big favorite, Bitcoin. This is your daily chart. Most recent signal was, I believe this is day before yesterday, a negative VR, and you've been under a little bit of pressure here. And you can just see prior to that, positive VR and an uptrend. Negative VR down here drops for a couple of days, but then a positive VR comes in and it takes off to the upside. A negative volume reversal here, and you tend to be under pressure for several days afterwards. Actually, a gap down occurred. So again, it's a short-term trading signal. This is what I do, and you got to have it. I mean, I don't know what tools you're using out there. This is not something that's widely available. We can talk about a lot of name indicators. They're nowhere to be found, and there's only one other place, and the main place is MetaStock. And if you want to see the volume reversal, you got to sign up for it and complement it with your other tools. Okay, let's move on. This is the GBTC, I think, on the weekly chart. Okay. You can see here all the negative VRs that came in. This is, of course, last year before the market came down, of course, but warned you it was going to drop. But sure enough, you get a big buy signal here last fall and another one here, and it's been rattling ever since. Of course, that's the weekly chart. We look to the daily. So let's look at GLD. We're trying to focus on different markets here. This is what Jeff asked me to do. Most recent signal GLD was actually a negative VR a couple days ago. Now everybody's bullish on gold. Actually, for most of the year, I've been bearish on gold, and my gold bug friends don't like me very much. I originally predicted at the beginning of the year we might even see 1,500 on the downside. All we got to was 1,675. Looks like we've hit some type of bottom. But it's really interesting with gold and silver. They tend to fill their gaps very quickly, and you have to be really careful if you're trading. If you're just a gold bug and you think gold's going to 3,000 or 10,000, then my comment is irrelevant. But for example, here you have this upside gap. Okay, so we got to go back here. I just hit the wrong button. All right. Let's see here where we are. Chart. Okay, you had the upside gap here. 4, 5, 6 days ago. As a general rule, these gaps are filled. So if I see a gap up and now you got a negative VR, my feeling is GLD or gold's going to pull back and fill that gap. So many times you see it. Here's a downside gap, not an upside gap. This occurred back in mid-September. And then sure enough, what happens? It rallies back up and fills that gap. Okay. So this is just what I've just noticed even way back here. If you look in August, all these downside gaps in GLD, sure enough, it comes back and be filled. So if you're trading gold or GLD, you get the 1 day or 2 day trade, you got to be aware that it tends to fill gaps pretty soon. And if you're long GLD, like for example, the last few days, you got to be careful that yes, you may love gold, but maybe you should wait for a little bit of a pullback, and hopefully you get a negative VR or positive VR to confirm your entry point. So again, this is the daily chart, and what we got here, we got the weekly chart on gold. And darn thing, if you just look at it here, basically for months, it's just a lot of negative VRs in gold, GLD, and it just keeps coming down. And finally, showed a positive VR this, past several months. This is of course a weekly chart, and then it started to trend up a little bit. But then we start getting these negatives again. So I'm trading them. I'm not in gold right now. I was trading Nugget and JNUG, the double leveraged ones, and I said wait and watch because we had some gaps that might be filled. Too much bullish sentiment out there. Maybe I'm wrong about that. So I'm not jumping in whole hog. I'm just trading it in and out. And we did just a couple of days ago with the JNUG and the other inverse ETFs, AGQ, for example, the silver one. But we just took quick trades after a day or two because I'm just nervous about the market, and I'm not so sure gold's going to run big time here. But again, we'll take it a day at a time. And remember, I'm not investing. If you're looking to me to be an investor, you're looking to the wrong guy. I'm looking for short-term trades. And again, I like to take some perspective here looking at these charts, and I express my opinion, but ultimately it's what I see on the short-term trades. I think this is just a repeat of the other chart. All right, so it's IYT. This is your Dow transportation ETF. Get a function of what's going on here. Basically, it had been down. This is on the weekly chart. It had been down for many weeks. Finally turned up. I think I have a daily chart of it here. Yeah, so this was a little clearer in getting you back long the Dow Transport. So many were concerned, as you know, in recent weeks, that the Dow Transports were diverging negatively from the other major indices. And there's the old Dow theory rule that you want the transports to confirm. But the Dow Transports basically have been down, all from April all the way through, so it looks like the end of September, early October, yet the overall market continued to do relatively okay. But then it turned, and we had a lot of negatives in here, as you can see, a lot of negative VRs. It's in the downtrend, but finally we got a nice positive VR here back late September, early October, and it's been trending up nicely until a couple days ago. I think this is from yesterday, the day before. Got a negative VR here. So it might have topped out after this little run. It may be a day or two trade. I'm not in it at the moment, but I look at my my screens. But the bottom line is you got a negative here after the big run. But it was warning you during this whole downtrend. You can see the preponderance of negative VRs. Even when a positive one came in back here, it was immediately overruled by another negative. So good, good indicators here for the Dow Transports. This is the daily. That's another one. Let's see what I just showed you. That was the I have two of the same chart that both show the negative VR. Well, Lucent Transports has been hot. This is the I think the truck company. I think they're based here in Phoenix. I'm based here out in Phoenix, and this stock had a big run up into I think the 50s or 60s about a year ago, and then just went sideways for the longest time. But as you probably know, in the last 10 or 20 days, it just exploded to the upside. And just prior to that, we had two positive VRs here, signaling an uptrend. Doesn't mean I would have stayed with this whole uptrend, of course, but it definitely gave a nice confirmation that some type of trading bottom came in. And as far as I'm concerned, if I bought here and sold here or even here, taking a few points out of it, I've been more and more than happy. So a couple of the good signals prior to it. So LCID is a good trading stock for the volume reversal. And, this is something else that I'm sort of implying, but you should also be aware of. You're following a stock and you can see good correlation with the VRs. This is obviously, or indices. It doesn't have to be an individual stock. Obviously, you want to pay more attention to the ones that have, that work really well. If this works really well, obviously you're going to be looking for the next signal and trade that vehicle. So it's something to keep in mind as well. Not to say the VR won't work in any situation, but it may work in some stocks, indices better, and you'll just migrate to those. Palladium, just want to throw that up since we're talking about the various markets. I don't know if we have a, no, we don't. We have silver next. I thought I had a daily chart. So this is the weekly chart on Palladium. You can see that despite all the push for Palladium with the electric vehicle market and so forth, it's done well over the last couple of years, but we did generate some negative VRs this past summer. And Palladium took a big nosedive, but now just reversed. We're on the weekly charts, 2 positive VRs again. So you're back in a buy mode here for Palladium, even though we had negative warnings that it was going to come down for a while. And way back here, this is going back to 2020, negative VR on a weekly chart before a big decline. And some positives came in and it uptrended for several months. So good signals on the weekly chart here. That's why I'm showing you Palladium, because this is something you may want to take a look at as well. Everybody wants to know about silver. Of course, we talked about gold a few moments ago here. Most recent signals, a little negative there a couple days ago. Even though the stochastic seems to be in a little downtrend down here as well. There is a little gap here as well in this SIVR. This is the, not SV, this is my favorite one, the SIVR, not the SLV, which I guess most people trade. Good correlation, positive VR here, it rallies for a couple days, negative VR starts to pull back, negative VR pulls back for a couple days. And if you don't get a signal, you can use your other indicators. I mean, and not every move is going to have a VR attached to it. I mean, I love to say every rally, every decline started with a negative and positive VR. Use the ones that you get. I mean, some terrific ones back here, but it doesn't mean you're going to see on every move. And there are periods of time where you may not see a volume reversal come in, and just have to be aware of that. Or you look at related stocks like an individual silver stock or another ETF like SLV, see if perhaps you're getting it somewhere else if you're not getting it in this one. Okay. Tandy, of course, I'm a big proponent of the solar stocks. So 2-3 years ago at the World Outlook Conference up in Vancouver, I said, "Yeah, buy all the solar stocks you can." I remember First Solar was trading down in the 30s, and now it got up to about 115, 120. But this is the ETF for the solar group. So I keep an eye on this because it gives me a good sense of what's going on. And you can see there's some pretty good correlations on the signals here on TAN. Negative VR here. This past August, drops for a little bit. Negative VRs here. Then finally we get some positive VRs and have pretty much all the way up until we saw a little top here in early November. Dropped for a few days, and another positive VR came in for another trade. But good correlation on the TAN. And again, even though I'm a bull on solar stocks, and I think they're terrific, we trade the signals, and solar turns down for some reason, and the bull market is over. Hopefully we'll get some good confirmation here. This is the weekly chart on it. I'm showing you the daily chart. So the weekly chart, you had huge moves here, as you can see here in the last couple of years, with confirmed by positive VRs. But again, the most recent one is a little negative here, even though we had a positive several weeks prior to that, -1 prior to that, dropping before the positive came in. So I guess a little tad cautious here on the solars, even though I'm more big picture bullish. But that's the weekly and daily signals. Okay, can't talk about the market unless we talk about Tesla, right? I remember, was it again 2 years ago? I think the stock was $400 or $500. I predicted it might go to 2,000, and it went even further than that. But bottom line is, we're looking at a daily chart here, and it's very volatile, as you know. But there are some nice signals. The most recent, right off the top, when we hit over $1,200 negative VR, and we actually took a 150-point trade in it was it a week ago when it came off that top on that negative VR. So put out a sell signal saying, "Hey, we got a trade here." Actually, I was hoping it was going to get down about 910 or 920. It only went to, I think, 980, 990. Didn't quite get to my optimal number, but that's generated through other, breakout points and previous highs. How I generate that number, you read about it in my newsletter. But bottom line is, there are some nice signals here, as you can see, and with the volatility of Tesla. I don't know if you're in it for 10 points on a trade or 150, but we do get some nice correlation here for little moves. I believe this is the daily. I don't know if I have a weekly chart. Yeah, okay, so we did put a weekly chart up here. And all I can see, there aren't that many signals, but I see what I guess you would call one bad signal. We had a negative VR in August, and this was on the weekly, and it didn't really follow through to the downside, but all the others were positive. And then, of course, the negative came in here, tied to the big top just from a couple days ago. But you can see here's long periods of time where Tesla didn't generate what I would define as a positive or negative VR. So except for using other tools, or you're just bullish on Elon Musk, there weren't many clear signals here. So let's see, I'm going back. I'm going too far here. Sorry, folks. Let's see here. Let's see, Tesla. Okay, we're getting toward the end. All right, so URA, this is your global X uranium. That's what URA is, but the chart is actually lithium. I apologize, I mislabeled this one. That's why I hesitated. So this is global X lithium. Lithium, of course, has been the big play with electric vehicles and with Tesla and so forth. So we have some interesting little signals here. It's something that I've used for some of our short-term trades. Positive one about 5 days ago. We had a negative one before that, 2 of them, and we came down a little bit. So there were little trades on the lithium, but the most recent one has been positive. Scan the chart, you'll see some pretty good correlation on the negatives, on the positives. One here, this one did not work. I would say I just have to blow it up a little bit. But if you don't get some follow through, you're out right away on that one. Where would you get out? As I mentioned a few moments ago, if I got negative VR, assuming I shorted it there, I would keep a stop on the bar before or the high of the day before. So that would tell me that I'm wrong if it takes out that high. And that didn't actually happen for a couple days later. So you might have been able to get out even on this trade if you see where I'm pointing on the screen. So here we go. And then UUP, of course, is the US dollar, which surprised everybody. Well, actually surprised everybody. We saw gold rally for a day or two when the dollar was rallying. And one of the big rules that I followed for many decades is that you don't like to time markets together. In other words, because the dollar is up, I don't want to assume that gold is going down or commodities are going down. You have to look at each chart and evaluate each market separately. So some people got caught on that rally in the dollar, thinking that gold had to go down when it actually went up that 1 or 2 days. But the bottom line is what we got here. So you got a daily chart on the US dollar, and the most recent signal was a positive one back here, about 10 days ago. And the dollar still seems to be in a little rally mode here, though I wouldn't chase it here. I would be buying, if I bought it at all for a trade, it'd be down here on the signal, of course. So a decent correlation on the dollar, as you can see in some of the signals here. We got a little day or two follow through here, a day or two follow through to the upside on the positive, several days to the downside on the negative, like a 1 day positive, then a little mixed signal here, positive ER up for several days, and so forth. So good correlation with the ER with the US dollar. And I think this is the weekly chart. On the weekly chart, it actually looks even clearer if you're patient to trade on a weekly basis. Negative ER down for several weeks, positive ER up for 4 or 5 weeks, negative ER down looks for about 10 weeks, positive ER, and then another one just a couple of weeks ago. So for the weekly traders, some really clear signals here on the UUP long US dollar. That might be, one more we have on the chart. XLA, can't forget talking about energy and oil and so forth. Again, this is a weekly chart, good correlation here. Positive ER several weeks ago, negative ER, this goes back this past summer before the oil stocks took off. And as you can see here, some nice correlations with the positive ER. And there's a negative ER, only went down for another week, and then a positive came in. But for the most part, some good correlation on the signals here. I don't know if I have a daily chart here. Let's see if I put one up. No, I didn't. So here we are back. These are the quick views of some of the major markets that I was asked to try to present. And again, MetaStock, here you are with the toolkit, my newsletter. If you want to take advantage of the newsletters, and I am offering a special code, 50% off, 2021 half off, 2021 half off is the promo code, Jeff. So take it away. If you want to look at some individual stocks, we can go from here, or ETFs. Hopefully I didn't take Jeff away from his from a break or something.
No, I'm here.
Okay, good. Okay.
Where would I go? Well, and we have internet now, which is actually a bonus as well. So Mark, let's go ahead. Can you kind of, so let's put the slide up about the 20% off, and I'll type that in for people. So VR20, vrtrader.com, right?
Yeah, VRTrader.
Okay.
Okay. I had this for Ray, a good friend of mine. We had a code up for him when I did a webinar for him. His name is up on the screen, but yeah, it's 50%.
I know Ray.
Yeah, Ray lives down the block from me here in Scottsdale. So originally moved.
Oh, he moved out of Michigan then.
Yeah, about 4 or 5 years ago. He has great parties. I love his parties.
Oh, cool.
So anyway, I met Ray decades ago when I was a floor trader on the CBOE. I ran into some of the financial astrologers down there, which are still very good friends of mine. You know, Arch Crawford and the whole group of them, and Ray is in that group. And I just love partying with these guys. I love listening to what they have to say, and they have some real meaningful stuff. Though I'm not an astrologer, I love just listening to them. But anyway, Ray's down the street. We have some good parties. But yeah, we do have an offer on VR Trader. Any of the newsletters. And focus of this presentation is more the MetaStock platform for the indicator. But if anybody's interested in the newsletters, it's 2021 half off, and you just enter that in the promo code SLOT on any of the subscription forms.
Let's do a couple questions. Mike Pascal wants to know Mike P wants to know, on the daily chart, does the VR indicator show up during the day or after the close?
Okay.
So
it depends on what time frame you you plug it in, but yes, it comes in during the day after VR is formed.
Okay. And I'm not. Yeah. Okay. Is it a possibility that goes away? Like, is it price dependent? Is it based on the close, or is it a volume condition?
It's based on whether it's a rally day or a reaction day. You're right. If it's during the day and it becomes a key reversal and it fails, it would come up as a different signal, correct? But you can put up charts, you can put up 5-minute charts, you know what I'm saying? You can play with it during the day too. Best to wait to the end of the day, okay? Best to wait to the end of the day.
Yeah, okay, cool. Thank you. Here's an interesting question that I'm going to let you answer, Mark. The question is as a reminder, all analysis is for educational purposes only. We're not recommending you buy our specific instruments. Why do the organizers repeat this over and over?
Well, because they have, I don't know if people think that the SEC is going to come down on everybody. I don't know.
It's the promo. Yeah. It's the rules, yes. So, like, we're not here to give you legal or trading or investment advice. There's a lot of things that we don't know about you in terms of like how much capital you have, what you're risking. I don't want you to think I'm making a recommendation at all today that you should buy stock XYZ at this price, because what works best for me and Mark may be a completely different scenario for you. And we're not trading with you. We're not licensed to give you that kind of advice. And that's why, at least I'm not, Mark might be, but that's why we keep saying that it's legal rules. It's compliance reasons. So Vasila wants to know, what are the two lines at the top, the EMA or the SMA?
On the charts?
Mm-hmm. Correct. Yeah.
The blue line is the 50-day and the green line is the 200-day.
Okay, thank you for that question, Vasila.
I'm so simple, it's sort of disgusting because I just keep it to the basics because I just want to get a relative sense of where the big moving averages are. Things tend to become self-fulfilling in the industry, and a lot of traders love a stock or index if it's above or below the 50-day moving average. I want to know where it is just as a point of reference, but it's not part of my decision other than just seeing where other people are looking at.
Okay. Jean-Marc wants to know, what is the promo code?
2021 half off. 2021 half off. I think you have to type it in lowercase. I think that works better. Somebody said they had a trouble with it. Okay.
Kaylu was wondering if you could give some background on the VR indicator.
Wow. Okay.
That's a pretty broad question, so you can go anywhere you want to with that one, Mark.
Okay. Okay. I tell you where it all started. I was living in Miami. This is where I grew up. And I ran into a fellow by the name of Roger Cole, C-O-L-E, who became, I guess, my mentor in the stock market. He passed away back in 1980. Claimed to have known everybody from Bernard Baruch to the founders of every brokerage firm in Wall Street. Apparently, he worked on the floor of the New York Stock Exchange when there was a chalkboard and you had to post prices manually. I mean, even before the big tape came into existence. I guess ticker tape existed back then. So anyway, he was sort of the creator of the volume theory. I've expanded it over the years, but he's the one who introduced me to volume theory and technical analysis. And one of the first rules, this is going to hurt the compliance people, but one of the first rules he said to me, he says, "Mark, you sure you want to get into this game? It's run by the biggest thieves and crooks in the world." He said this to me, and I thought he was just an old guy who was eccentric and crazy. But look at all the scandals we've seen over the decades. Things that have happened from Bernie Madoff and everything else that's happened. So he wasn't too far off in saying, "Be careful, Mark. You really want to be in this industry." But that was one of the first things he said to me. I must have been 23 years old at the time, or 22, when he taught me this stuff. I'm 73 now, so we're talking 50 years ago. But bottom line is he was sort of my inspiration. Then I went to the floor of this Chicago Board Options Exchange, traded there for a few years, the Midwest Stock Exchange, and I really saw the application of volume in the pits, because you would see volume precede price. You see traders come into the pits, buy stuff, nothing is moving, and suddenly the thing starts to move 10 minutes later or the next day. Unfortunately, a lot of front running occurred. Brokerage firms would come in, buy. We're standing in the pit, they're buying, nothing is happening. Next day, unfortunately, a research report comes out from the firms that were front running their own research reports. So on, interesting stuff as a floor trader, believe me. So when activity come in, somebody knows something or something's about to happen, either up or down, and that reinforced what Roger had taught me in the years prior. So that's pretty much it. I went all over the place since then, working through research of a couple brokerage firms, doing a lot of media work, and I tell you, Jeff, when the gate opens in the morning and the horses come out, this is what keeps me alive. I just enjoy the game.
I love trading. Let's see. Vasilis wants to know the stochastics. Is it fast or slow? And I'm going to guess that it's 1233.
I was 533.
533. I was close. Okay, 533. I'm going to type that out.
You can play anything you want. This is just something I put in there because it seems to work for me. The faster, the better if you're trading, obviously. Ideally, if we get a positive VR and the stochastic is turning up, I feel better about it. Same thing with a negative VR. If it's starting to top out and roll over and you get a negative VR, that indicates momentum and volume is confirming your trade. So this is something that I've used over the years and been pretty good to me. I say this to everybody listening that I'm a survivor. I consider myself a survivor. Okay, I'm still doing this after 50 years. I'm still here, enjoying it, making a living doing it, and the closest thing we have in life to a crystal ball, folks, is the stock market.
I have a question for you, Mark. I need to know the answer to this. What is hanging from your ceiling right here?
Okay, I thought my would come up. It has my V in it. You wouldn't see the room. We actually had a break. We had a flood, and the ceiling broke at that spot you're seeing right here. So it's a tape just taping up until we get the ceiling plaster fit.
Oh, okay. I thought it looked like some sort of like a model car. Or something. Oh, I see it now. It's a hole. Okay, well.
It's a hole. We actually had a hole. So it's hard to believe that in Phoenix you can actually get rain. So this is my little office there. For some reason, there was a leak in the roof right above me. I mean, I have a 6,000 square foot house here, just letting you know. But for some reason, this particular room got a leak above it, and we're not fixing it because we're going to redo the whole roof, which is starting in a couple of weeks. So I figured until you fix the roof, why fix the hole?
Yeah, no. I thought it was something hanging up there. So, that's it sucks when the roof goes out.
I should have been in a different spot. I should have put this out in the kitchen or something, right?
No, you're totally fine. It's cool. That's a nice thing about working from home, or you get to learn about people. Like, for example, I didn't know you had a bad roof right now. So, anyway, Lou says,
Don't send any rain down from Utah, please.
Yeah, right. Just you need a couple weeks, right, to get everything straightened out. Lou says, I'm on vrtrader.com. There are many newsletters. Which are your best and most popular? Give him the 1 to 3 best ones. Platinum?
Platinum, number one. That's the most people subscribe to, the platinum, because we cover everything in platinum. So we could end having a crypto trade. We could end up having a cannabis trade. We could have a gold or a resource trade. Anything could be in platinum. That's the longest existing letter. So that would be the first choice. Second would be the metals and resource letter, because we cover everything. You can have solar in there, gold, uranium, lithium, agricultural commodities, all kinds of stuff. So the second most popular one is the metal resource letter. And coming up fast is the blockchain letter. That's what's going on with crypto. There are very few blockchain letters out there, and I'm getting a lot of subscriptions on the crypto. They want to know what we're thinking about the various, coins and which ones are moving and so forth and so forth. So we have that's gaining momentum. So that would be something to consider. Long way to go in crypto, Jeff. I don't think it's anywhere over yet, even though we're in a little correction now.
Let's see. Marcia says, thank you for explaining the ceiling. She was wondering too.
We ripped this out to a very human level, right?
Yeah, right.
The only thing missing are my 2 dogs, which are outside the door now waiting to come in.
What kind of dogs do you have?
Okay, I had a little French English bulldog called Doug. He was my favorite dog of all time. He's adorable. And then we've lost a couple, and then we have a little Tibetan Spaniel. So he's a little brown spaniel. Those two are running around the house right now. We gave away a poodle to one of our cousins, and we had a lab which passed away, a couple years ago. So we're definitely dog lovers.
Yeah, we have a retriever right now, and oh my gosh, he's a puppy though, and then man, you forget how much energy
He's
they
going to take over
have.
the house. He's going to take over the house.
Yeah, okay, let's see. Vasilis wants you to talk a little bit more about ease of movement. Actually, the question precisely is, what is ease of movement? So maybe that's the best way to answer that, is talk a little bit more about what ease of movement is.
I'm not an ease of movement expert, Jeff, so I don't know if I can really answer that a question. Honestly,
that's a great answer. Typically,
that's not one of my specialties. No, I think I'm sure there's one of your other guests who are really into that.
Okay.
Ease of VR is working. If I get a positive VR and it takes off, that's ease of movement for me. But that's not the definition.
Let's see. Kaylee wants to know: Can I bundle? Can I get a bundle if I buy all 3 of your newsletters?
Email me. We'll talk about it. We'll work something.
And what's an email she can get a hold of you on?
Best would be mark.vrtrader@gmail. mark.vrtrader@gmail.com.
Okay.
I really don't have a bundle, but if you want to do something, we can work something out. Sure.
All right. Do you have time?
I want you to sign up for MetaStock and buy my indicator, because it's the only place, one of the only places you can go to get it. And Jeff is terrific, and he'll help you through the setup process. And if you don't have it, you got to have it. I'm sure you should
definitely get the indicator, but you should definitely get the subscriptions as well.
Yeah. Okay. Scratching each other. But seriously, we're here to talk about the VR, and I really think that's what people need to have. So.
Yeah, VR is good. Let's see. I think we have a couple minutes. No, not Marcia. William wants to know if you can look at Disney, which is a stock I haven't looked at in a few days. So I'll be interested to see what that.
Do you see this screen? Do you see this screen?
We can see your MetaStock. Yes.
You see that? Okay. Let me see if I can pull up Disney here. See what we can find. Sequential, attach, close. Okay. Load up a little bit. Anyway, so we're looking at Disney on a weekly chart. Let's look at the daily chart. Okay, wow, let's see here. Well, it's funny because look at all the negative VRs that we've seen in Disney here all summer and whatever, even though it's been sort of holding up the market and like back here, there's been predominance of negatives in it. And what I would say to you right now is you got a downside gap in the last few days, last 4 or 5 days after they came out with some lower earnings projections. I sort of remember that. So you could easily rally back up and fill that gap, I suppose. But would love to see a positive VR here, which we don't see yet. This is on the daily chart. But you can see here another positive VRs did get follow through afterwards. So the ideal scenario would be a positive VR. If one would form here the next day or two, then I would trade it up to that gap. And that would be just a trade for me. I'm not making any long-term comments about the thing. Let's look at the weekly chart, see if it gives us any more insight for the weekly. So yeah, the most recent one on the weekly chart is a negative, and that's because of that sell-off that we just saw. So you can see there seems to be more negatives than positives here. I would right now I would just say wait for a daily VR and hopefully a weekly VR, because the weeklies seem to have some again, it's how well does it work for Disney here. So at the moment we have to wait and see. We had negative here a few weeks ago. It did come down. Then you had a 1 week positive, and then it flipped back to the negative again. There's a lot of mixed signals here in Disney. So I see a couple good ones here for a few weeks down. Here are a few weeks up on a positive, but definitely mixed. So I would say right now I focus on the daily one and wait to see if we get some positive. And hopefully that would be I'm glad they're bringing it to my attention because I was looking at that gap myself. You can see here, there was an upside gap about 10 days ago, a little upside gap. You can barely see it. I'm pointing to it. And sure enough, it came down and filled it. So my gut feeling is it's good at filling gaps, and you might see a rally back to that 170 on a trade. So let's see if we get some positive volume. The stochastic, what you're looking at the bottom, you're starting to bottom out a little bit. So that could be another sign that we should keep a close eye on Disney here for a trade. That's about all I could say on. I'm not in it right now, but when it did break, that's caught my attention. I wish that I was shorted, but I wasn't. So thank you.
Let's see. I think we have time for 2 questions real quick. Kaylu wants to look at PYPL. And while you're doing that, do you have an opinion? Dinesh wants to know if you have an opinion on equivolume charts.
Equivolume?
Mm-hmm.
Oh, well, Richard Arms was one of my best friends. Fortunately, he passed away. He lived up in Albuquerque. I used to hang out with him. Toward the end, he wanted me to sort of take over his stuff, which I didn't have time to do, but it's terrific stuff. Richard was one of the innovators in the volume industry. I would say, if not the leader, from going back decades. So he has several books out, and I would definitely take a look at his stuff. Obviously, I'm prejudiced because I use my little VR, which tends to a little short term, but he's got some terrific work. So I don't know where you have it on MetaStock, Jeff. Do you have Richard's stuff on?
Mm-hmm.
Okay.
We do. Yeah, absolutely.
Yes.
He was such a nice guy too.
Oh, wonderful. We spent hours talking about the time I stayed at his house and spent time with him, but he was one of the great mentors of our industry. I mean, part of my life experience has been I got to meet the greats of the industry in these past 50 years, from Joe Granville all the way to Richard Arms or Bob Prechter, or all the top names in the industry I've come across, met, or spent time with, which is a great honor. Even was it Richard Lane or Dick Lane? I forgot his first name, who created the stochastic indicator in Chicago. I met him years ago. There's some of the real, geniuses of our industry. I had fortune, and Greg Morris and his work with regard to candlesticks, and having spent so much time. And in fact, Greg Morris did the intro to my book, The Trader's Book of Volume. But I respect all the work he did with candlesticks, just meeting and working with all these great people. So long-winded response. I love Dick Arms' work. Now, as far as PYPL, you want to look at that, right?
Yeah, let's take a quick look at it.
I don't know if I can pull it up. I have to do a symbol search.
I told PY. Actually, just hit cancel. There. Go ahead and close this out. Yeah, perfect. Now just highlight the chart.
Yeah.
And just type in PYPL. That should bring up a list of symbols that start that way. And then .o. There you go. PayPal Holdings. The .o is the one you want to grab.
Right there, right? Right.
Mm-hmm. You got it. Select instrument.
You're good.
Although we didn't get the VR template on there, though. Sorry about that.
No, give me a second. Attach this. This how you do it on this particular screen. Okay. Well, there's some pretty good correlations here with the VR. I can tell you that much. Little mixed here now. Here at the bottom, you got a gap. Maybe that'll be filled. But look at the negative VR before the sell-off. Positive VR for the rally. Just had a modest effect here. Nice trading signals in the last couple 3 months of the darn thing. So where are we? This is a daily chart. I don't know. I don't have a lot of confidence. It's a gap down here, a couple negative VRs. I would want to, before I buy this thing, I would want to see some positive volume. It seems like it's double bottoming here and trying to bottom a little bit. Let's see what the weekly chart looks like. Most recent signal is negative for the last several weeks, counting back 1, 2, 3, 4. Before it broke, there was some negative volume. Honestly, I would have stand aside until I got some positives in here telling me it's a buy. If you're looking to short it, it's already down a lot. This is just a watch for me. It's already broken. There's a gap that could be filled on a rally here. It's already down from 310 to 200. So my gut feeling is try to post some type of bottom down here. Probably some bad news story. There's a gap. But let's wait to see some volume come in to confirm a trading bottom. That's where I'd be on this one.
Perfect. Mark, we're out of time. Can you believe it?
We filled the 50 minutes, Jeff. Thank you so much for the opportunity.
No problem. Thank you, Mark. Appreciate it. I'm going to talk a little bit about your add-on. I do want to say thanks for spending some time with us, telling us a little bit about your dogs and your signals and your newsletters.
And my roof. And my roof.
I was going to, and your ceiling, yeah. I swore that looked like something hanging up there, and I'm like, is that a model car? What am I looking at there? So, in any case, I want to say thank you for coming in. It's always a pleasure to have you. We'll see you again soon.
Thank you, Jeff. Thank you.
All right. Let's go ahead and kind of do this. And while we're kind of transferring over, what I would like to do is I would like to get some information. I'd like to see if we can get the control room to chime in a little bit here.
Unmuted.
Room. Kelly?
I'm here.
All right, very good. Before, let me go ahead and make sure I'm sharing my screen. Let's go ahead. We're going to do a drawing. Are you ready to do a drawing?
Oh, I love drawings.
Okay. Well, let me see. I do have a brand new list of people that have registered for the Traders Conference at metastock.com/tradersconference.
Traders-conference, you mean?
Traders-conference. And what I need from you is I need you to pick a number. And the number needs to be anywhere between 1 and 12,300.
See, I'm kind of liking that 12,000 number, so maybe let's go 12,060.
Okay. Let's see. And then that would be... Whoops. Hold on just a second. That would be a Hudson V in South Africa. Notice I did not give away a last name this time.
Good job.
Now, do you think we should tell Hudson what he's won?
I think you should. I think it's pretty exciting to hear what people have won, so I would like to hear what Hudson has won.
Have you heard about a software called MetaStock?
The award-winning software?
Yeah, like it's won like 28 years in a row.
That's amazing.
Yeah. So we're going to give him 3 months of MetaStock, absolutely free. Do you know what else we're going to include? I bet you can guess.
Learn MetaStock?
We're going to give him 3 months of Learn MetaStock. So that has hundreds and hundreds of videos on just how to use MetaStock. I would say that that website is so valuable that when I start a new sales guy, that's where I send him. Do you want to know what else we're going to give him?
Should we give him some Zenith too?
We're going to give him a software program called MetaStock Zenith. MetaStock Zenith, let me tell you a little bit about that, Kelly. MetaStock Zenith was developed by Thomson Reuters. They spent over $1 billion getting it out. It was built as a competitor to Bloomberg, if you've ever heard of that little company. It's supported by 3,000 reporters in 300 different news bureaus globally. It's the same quality data that you would get if you went as a hedge fund and then subscribed to data. Do you believe that?
That's pretty amazing. I'm pretty excited for Hudson.
All right. So Hudson, what we're going to do is when I get a second, I'm going to send you some information about how to kind of claim your prize. We will need to get a little bit more information from you because we need your address just so that we can fulfill exchange requirements. So I encourage you to kind of get everything installed and running. It's a great software program. I've been using it for 25 years. Kelly, I thank you for the assist.
You're welcome. Thank you.
All right. Oh, and I almost forgot. Let's talk a little bit about the volume reversal toolkit. Mark was showing kind of the indicators and basically the experts and the signals that are getting in there. It has the VR reversal 2-day, the directional, and the sequential. It's a really, really good toolkit. Basically, the subscription for VR toolkit is $99. And what we're doing with that, it would be perfect to pair with like a new MetaStock account if you're getting a new MetaStock subscription, because you can buy 1 month and get the second and third month for free. So you can give us a call at 800-882-3040. You can visit us online at metastock.com/sales-chat. You can even sign up at metastock.com/conf promo if you'd like. Want to say thank you real quick for everybody that's here. It's been a great event. I'm very, very happy with the way things are going. I want to thank all of the people that are watching. I hope you're enjoying this as much as I am. We appreciate your being here. Hey, and if you're watching on YouTube, take a second, hit like, subscribe, and you can even ring the bell to get some notifications. It does help quite a bit, and we do appreciate it. So let me go ahead and talk a little bit about our sponsor, CMT Association, this time. With CMT Association, they've been sponsoring the event for a few times now. They're a great organization to work with. They work on accreditation of actually brokers, hedge funds, and institutionals. They also do a bunch of courses that are designed towards the retail trader. They focus on risk management, systems development, portfolio management, and behavioral finance. You can find more about the CMT Association at cmtassociation.org. You can give them a call if you want at 646-652-3300. I do want to say thank you to CMT and Stocks and Commodities for both being sponsors of the event. We appreciate it. It helps us get the word out, all that kind of stuff. So thank you very much, both of you. Our next presenter is a good friend of mine, Vince Fora. Vince, hold on just a second. All right, don't worry, it's not the Rona. Our next presenter, Vince Fora, has been working with MetaStock probably 5, 6, actually 8 years now, and that thing is not going away. Vince is a very good system designer. I very much like how Vince explains stuff, his kind of approach to money management in the markets. And he developed some really good systems inside of MetaStock. He's always a great presenter. Vince, how are you doing today?
I'm doing great, Jeff. Thanks for having me on. How are you?
I'm doing great.
Good. Excellent.
Let me go ahead and make you the presenter. Yeah.
Let me turn on my... yeah, there you are. How are you?
I'm doing well. How are you doing?
Good. Let me...
We can see you well. I'm going to mute again. This is not... I can see your screen.
You can? Excellent. Awesome. Okay. Great. It's been a great... I'm sorry?
I'm going to turn the time over to you. I'm going to go cough.
All right.
It's all yours.
Not a problem. Thanks again for having me on. It's great to be here. I've been popping in and out throughout the week on some of these presentations, just checking in, and there's been some great information, but I'm certainly here, happy to be with you to display my victory method, which has worked out great for myself in the last a year and a half or so since we brought this to market. It is based solely on technical analysis, but it's been working really well, and I'm glad to share it with you. Before I start, just a very brief background on myself. I've been involved in the markets for, about 35 years now. It's been a long time. I actually started out just creating my own charts by hand, but now we have these great platforms like MetaStock with all these fantastic tools and indicators that we can use. So we've certainly come a long way, and I'm really excited to be a part of it. So let's make the most of the hour that we have together. What I'd like to do is give you a brief explanation about what Victory is, how I got started with it, how I use it, how I hope you can use it yourself. But I want it to be as interactive as possible. So by all means, if there's a symbol that you want to see, that you're trading now, that you're thinking of trading, that you've traded in the past, whatever it is, type the symbol in the chat box, and I will bring that up, and we'll review it together. I hope to go through indexes, a bit of Forex. We can look at futures, stocks, of course, ETFs. This works on any market, any time frame. So you can use it whether you're a day trader, a swing trader, a long-term investor. The only thing that will determine how you use this is the time frame on that chart, right? To use a 1 minute, a 5 minute, a daily, a weekly, a monthly, it all works very, very well. So let's get started with what you're seeing here on the screen. First of all, this is a chart of the S&P 500 doing quite well. Beautiful trend in place, lots of momentum, and I'll explain how I judge momentum in a moment. But we are about to break out to fresh new all-time highs once again. And on this chart, you're seeing a number of symbols here, including these green and red arrows, the green and red circles or dots, as I call them, and the occasional exit flag and even a yellow bar every once in a while. So let's start with the arrows. Those are the initial trade setups. Now, the very first thing I want to tell you is that the intent of victory is to allow you to trade with trend and with momentum. That's when the odds are in our favor as individual traders, trying to navigate our way through these markets. When we trade with trend and momentum, we're going with the flow of the market. So if we can identify who's in control, be it buyers or sellers, and then hop on board and ride that wave, our chances of success increase dramatically. And that's what victory does for you. Now, the intent here is not to take every single trade setup. That is not the intent here. I will explain the ones I prefer to take and how I would like you to use victory. Now, when you get a copy of victory, there are a couple of training classes that come with it that will explain it in much more detail. But I'll make it very simple for you here. So throughout the hour, you'll see exactly how you can use this. So along with the arrows and re-entry dots, we call these re-entry dots because the same criteria that came together to create the initial trade setup, for example, this green arrow here, the same criteria has come together again here whenever we see a green dot. The reason we mark it as a dot instead of a new arrow is because we are already in a trade. So this means if you miss the initial entry, you can enter here, or if you're more aggressive and would like to add to your trade, you can do so on every subsequent dot. Okay, now, when we're in a trade, the bars get colored all the same color depending on the trade. If it's a long trade, they will all be green. If it's a short trade, they will all be red. And we do that for a very specific reason, to help keep you disciplined and not get scared out of a trade. A lot of times, we get into a trade, it starts to go our way, everyone's calm, everyone's happy, we feel invincible, but as soon as we get one or two red bars, suddenly we start to question ourselves, we start to rethink our initial decision to enter the trade. We might be worried that we can quickly give back our profits, so we end up a lot of times getting scared out of a trade. If we color the bars all the same color, it just helps to keep us in that trade. We also have a fantastic tool called the Expert Commentary, which I'll show you near the end of the presentation, that will also help you remain in a trade. Now, a lot of times you'll see a trade flip from green immediately to red. That does not mean you go short immediately. It just means you exit that prior position. Sometimes you will go short immediately. Again, I will explain all that. But from time to time, we will see an actual exit box pop up, followed by a yellow bar. That means there is no long trade, there is no short trade. It's a time where you should not be trading this particular market. Okay. Now, you also see this blue line. I will hover over it so you can see what that is. It is a moving average. It is the 20-period simple moving average, not exponential, not weighted. It is the 20-period simple moving average based on the close. And that's what I use to judge momentum behind a particular stock or market. You'll notice that a lot of times price will move away from the 20, come back and bounce right off it, move away, come back and bounce right off it, and it'll do that over and over again. One of the main reasons for that is that the 20-period simple moving average is probably one of, if not the most widely used moving averages in the industry, both by professionals as well as individual retail traders like me and you. So there are a lot of eyes on that particular moving average from day to day. And what we really want to look for is a slope, because it's based on the last 20 bars. What it's doing is it's looking at the last 20 bars and it is averaging that out and giving you a level. So it makes sense that if the last 20 bars, we're averaging higher and higher prices, that you would see a slope in the upward direction. If prices were dropping over the last 20 candles, you would see a slope lower. And if price was basically flat over the last 20 candles, you would see a sideways moving average, right? A flat moving average. So what we want to focus on are markets that are trending very clearly in one direction or the other and have significant momentum. In other words, slope. So the higher the degree of slope on that moving average, the better it is for us to trade in that direction. So the setups we want to focus on for victory are the ones that happen along a sloping 20-period moving average. So this area in here, for example, the green arrows, the 20-period is sloping higher. It's telling us buyers are in control. Prices are moving higher. So these are definitely trades we want to take, both the green arrows and the green knots, right? The red arrows, we do not want to go short. We want to use those as exit signals. Reason being is, for a short trade, we want to see a red arrow or a red dot along with a down sloping moving average, right? We want prices to be headed lower. So we want to go with the flow of traffic there. We want to ride the way down. The ones that are in here, and you'll notice a lot of times during periods of consolidation, these sideways moves are where the moving average is flat. You will see many signals back and forth, right? We want to avoid just about all of those. Now in the training, we'll go into detail of how we select which ones we trade and which ones we don't, but I'm going to make it very simple for you and ask you to use a trend line. Whenever you get a consolidation period like that, all you want to do is mark the highs of the consolidation phase, right? You also want to mark the lows. You can clearly define a channel when that happens, right? Some are a lot easier to mark than others, but basically all you want to do is connect highs to highs and lows to lows. It's that simple, and then wait for a breakout. So for example, price was going sideways all throughout this area. Now suddenly we get the 20 period starting to slope higher, and now we get the green arrow, and there you go. And now price actually moves, right? In here, moving average was flat. Yes, we had a lot of green arrows, red arrows, but there was no slope to go along with them. So in other words, we couldn't really say we had any sort of trend. We weren't making higher highs and higher lows, nor were we making lower highs and lower lows, right? The easiest way to read a trend is if you follow the high pivots and the low pivots, and you're consistently making lower highs, right? From one high to the next high to the next high, it's lower and lower. And, the lows going lower and lower, obviously you have a downtrend. If you're making higher lows, right? From here to here and then to here, and higher highs, then you're obviously headed higher. So that's how you can easily tell the direction of the trend. And then the slope of the 20 is what we use for momentum. During a flat period, you have neither. You do not have higher highs, nor do you have higher lows, nor do you have a sloping moving average. So it's easy to spot and easy to avoid. Areas like this are where most traders lose their money. They get chopped in. They get in, they get stopped. They get in, they get stopped. Get in, get stopped. And you want to avoid that. You want to take the trades with the highest probability of success. And if we go back on any clear trending market, you will see trade after trade when the moving average is sloping and we're making higher highs and higher lows. You can basically enter anywhere along there and make some money. But what victory does is pinpoint those areas where we get a retracement and then we're about to kick off a new move, right? And so you get in at an optimal time and you just take that stair step higher and continue to bank those profits. Now, I'm going to go through numerous charts. I'm also going to give you several trade ideas today. Again, they're not recommendations, not your financial advisor. I'm just simply demonstrating victory in the types of trade ideas that it provides us day in and day out. And running a scan earlier this morning, there were several that showed up on today's scan. So I will use those as examples for you. And again, I will look at, you know, commodities, stocks, ETFs, you name it. I'll try to give you a broad scope, but you let me know if there's anything you want to see. I just noticed Michael is here. Michael, I haven't seen you in a while. Great to have you on. Michael's been at so many of my presentations. Really appreciate it. So let's get started. By the way, this is the S&P 500, not a daily time frame. I just want to show you quickly how you can use this on any time frame. This is the weekly. So if you're more of a longer term trader, right, these signals expect to be in the trade longer, but boy, oh boy, do you get some really nice signals. But the same criteria that I spoke about on the daily time frame, you want to look for on any time frame. So what are we looking for? We're looking for higher highs and higher lows, right? That's a trend. We're looking for slope on the 20-period simple moving average. That means we're trading with trend and momentum. And we want to wait for our entry signal, in this case, green. And when we look for a long entry, right, a green arrow, what do we need? We need a sloping 20-period moving average. The higher the degree of slope, the better. So we could have a slight slope, right, an even better slope, and then a very dramatic slope. So the higher, the better. About 45 degrees, which I would look at to be less than this, actually. About 45 degrees is what I would call significant. So something like this would be very, very significant. And you can see how well this works out over and over again. If you got in here, a monster trade, right? Pulls back, you have a chance to get in if you weren't already in, or add to your position. Again, another monster move. Pulls back, another entry move. We exit, keeps us out for a couple of days or a couple of weeks while the market sorts out itself out. And now we get a new entry and it followed through immediately and off we go. So just fantastic moves. If we look at the monthly chart here, and I won't go from one extreme to the other, you can see that whenever you're trading with trend and with momentum, that slope, you get some incredible trades and very simple, very easy to remain in those trades, right? You really don't get scared out on the longer term charts anyway. Very easy. Now I'm going to go from one extreme to the other. We're going to go from a monthly all the way down to a 1 minute chart. Okay. Again, it works the exact same way. If you look for those trades along the sloping line, you know, even on a 1 minute chart, they happen over and over again. Now we're going through a consolidation. So what should we do with a consolidation? If you're following this market this afternoon and you're following the 1 minute chart, we're obviously going sideways here. I would mark the highs, mark the lows, and your first clue will be the slope on that 20. If it starts to slope one way or the other, it's giving you a heads up that it is about to break out of that channel. And if you get a breakout either above the highs here or below the lows, followed by a new trade entry in that direction, and the 20 is sloping, that's the trade you want to take. But again, I'll go further back and you can see up or down, you know, it works just as well in either direction. But you only want to take the trades that have everything we talked about, right? Trend and momentum. So the signal along with slope in the direction that you are trading, right? So in other words, this red here, this red here, these ones, you do not want to go short. You want to use those as exits, but the moving average is not trending downward, right? For a short, it's trending upward. So it is the green arrows you want to look at here. Let's look at the Qs, the NASDAQ 100, same thing. This is a 1 minute chart. Similar looking chart here. Let's go to the 5 minute, right? Again, there are periods where you're going to see sideways action, right? But those are opportunities. When you see it go flat, and I should actually, let me draw this a little higher. You do not want to, when it's flat, you do not want to take these symbols, right? You do not want to trade those. You want to sit and wait for a move outside of that range. Now, and an easy way to do is connect the highs to the highs and connect the lows to the lows. But you can see it popped out here, right? It even retested it before going higher. Now, there was no symbol right here. We were already in a long here. Not that we would have traded this. That's not what I'm saying. We don't enter here. But if you're green and it pops out here and their slope, right? And their slope, that's when you want to trade. Because if it popped out and the 20 was still flat, not a good trade. So now the flatter that moving average, the more aggressive it is, meaning the more risk it carries. So I like to stick to the ones with just the dramatic slope. Okay. But so we saw 1 minute, 5 minute, you know, again, we go back to daily, weekly, monthly, it all looks great, right? Market's doing very well. How many of you traded Tesla recently? An absolute monster move, right? There it is. Now, we never know when these moves are coming. Let's not kid ourselves. None of us know what tomorrow is going to bring in the markets. But what we do know is that when buyers are in control, price should go higher. When sellers are in control, price should go lower. So all we're trying to do as traders is identify who's in control and go with that flow. Again, here, we had that slope on the 20 throughout here, right? So by default, just taking these symbols, just by looking at that slope and going with the system, we would have actually captured that move, right? Just like back here. This one here, even higher probability of success, right? Look at that degree of slope. Incredible, right? And any one of these entries would have resulted in a great gain. Now, the other great thing about Victory is, and this is one of the things I should have mentioned from the beginning, one of the reasons why I created Victory, as opposed to Veracity and some of the other systems I've had, is I expected more volatility in the markets. So I wanted something that reacted very quickly to changes in direction. So because of that, by default, when a trade does not go your way, it gets you out of there very, very quickly. So if you got in on any one of these, yes, it moved ahead briefly, but it immediately turned around. In other words, that trend ended and it turned around, but it got us out immediately. So any loss there would have been very small. So I certainly don't want to give you the impression that this is 100% successful. It is not. You will have losses here. Losses are just a part of doing business when it comes to trading. But if you follow what I'm telling you here today, which is only focus on the areas with slope, right? In the direction that you are trading, you will have far more winners than losers, and your winners should be greater, much greater in many situations compared to your losses. Your losses should be kept small. Now, there's always the chance of a gap against us on use. You can never quite get rid of that, but it's rare. And normally, you know, these losses are kept small. One great example, and I should go back to the chart of the SPYs. You remember the start of the pandemic last year, February, March of 2020, right? If we go back to that, let me bring that in here, right? So we were long the markets there, but you know, when it turned around here, it would have gotten us out of that long very quickly. Now, would we have entered short here? No, we would not. Why? Because the moving average was not sloping lower. But after that first move lower and that initial retracement, we got the re-entry done. So this is where we enter and capture at least 2/3 of that move, right? It worked out great. And then from there on, it's just been a climb higher. It's been amazing. Now, so I showed you different time frames. Let me show you different markets. For example, crude oil futures. So we looked at index charts. Here is a futures chart, right? Oil, oops, what happened there? Let's see, V1, continuous. There we go. Works the exact same way, right? And when you have a market that is in favor, meaning there's a lot of people talking about it, clearly trending in one direction or the other, you get some amazing moves. And usually before a monster move, there is a consolidation, right? So if you look back on oil, right here, little flat area, right? You mark the highs, you mark the lows, and you wait for a break. And then even if you don't trade the break, you don't have to try to guess exactly the point where this is going. Just look, draw those lines and wait for price to come out of there, and then wait for that next entry, whether it's an arrow or a dot, and just make sure that it's in the direction of that slope, right, on the 20-period moving average. And you know, you enter anywhere here and you're making great money. We go flat again, then we have another up lane. Now here, we kind of turn around, right? Once we trip this low here, we turn around, we now had lower lows. When we put in this pivot high, now we had lower highs. And what else did we have here? We had a lower slope on the 20-period moving average. So now we get a red arrow with a downward slope. That's a valid entry. Works out nicely. We pull back, we have even more dramatic slope. We have a red dot, that's a valid entry, and we go for another ride. So it really is that simple. Trading does not have to be difficult. We as traders make it difficult. Our psyche makes it difficult. If you just follow the flow of the market and are on the right side of the market, even by fluke, you'll do well, and you'll capture some monster trades. What you'll find is when you go back at the end of the year and look at all your trades, a handful really have made the bulk of your profits for that year, because these types of runs like this will far and away make you way more money than those quick scalps that we see throughout the year. So this is what you want to look for, a dramatic slope on that 20-period moving average. Let's look at the chart of gold. Now, when we look at gold futures, right, it's been pretty choppy. This is a really ugly chart. But even on an ugly chart, you get some great entries if you focus on the ones with slope, right? This is chopping back and forth, but within here, the ones with slope actually work out quite well. Now, you know, if I had a choice of trading a chart like crude oil or the SPYs, that's very smooth, very clean, compared to something like this, of course, I would choose the clean chart. But there are still opportunities here. And one I want to point out to you with gold is on the monthly time frame. Right now, gold looks like it has a beautiful cup and handle type formation. I'm sure there's been other speakers talking about charting formations. This is one of them. Here, think of a coffee mug, right, that you hold. Right? It has the cup and then it has the handle on the side. That's what this is. So you put in a high, you pull back, you make some sort of bottom formation, you get right back to that high, stop, and then you pull back slightly and then go back to take out that high. So this is the cup and there's your handle. Now there's two types of entries on a cup and handle, an aggressive and a conservative. The aggressive would be to look for a trend line break along the series of highs throughout the handle portion, right? So right here, and look at that. Not only do we have a green arrow, we also have a dramatic slope on the 20, and we're popping outside of that trend line. That looks like a great entry. Now, this is a monthly candle, so we do need to let that candle close. One thing I do need to make you aware of is that these symbols can change while a candle is still open. So if you're on a 5-minute chart, for example, right, and you're on the most recent candle, if it goes up and you see an arrow, and then price comes down throughout that same 5-minute period, the arrow might disappear, right? But once that bar closes at the end of those 5 minutes, that symbol is there for life, okay? And it works the same on a daily, weekly, monthly. So we want to wait for this monthly candle to close to confirm this, but this right now looks like an amazing entry. The more conservative entry is to wait for a break of the absolute high, right? So again, it's further away, but it is a more conservative entry. But it certainly looks like gold is about to head higher here, okay? How many of you trade Bitcoin? Let's look at crypto, right? Works exact same way. There's Bitcoin against US dollar. Now, Bitcoin can be choppy, especially on the daily chart, right? But if you focus on the area with slope, you still catch some pretty good trades, right? A lot of chop. And, you know, the other thing you can do, mark the highs, right? And look at that coincidence. I don't know. It's just technical analysis. It works incredibly well. If you just use a trend line, attach the highs to highs, lows to lows, and wait for a breakout, right? You can take those too. Now, this is more aggressive. Not a trade I would take because the moving average is not sloping in the right direction, right? I would rather take this one where the slope is very much in my favor. Here it's against me. So similar move, but I really don't mind that I missed that because I'll be catching the ones with slope. It just puts me at ease. It's just a much easier way to trade. There have been a few stocks this year that have made monster moves since the pandemic lows. Crocs probably being one of the best there. And let's go to the weekly, maybe that'll highlight it more. Yeah, see, since putting in a pandemic low here last March, look at that move on Crocs. And there's been a number of stocks like this. Look how easy it is to trade that. So am I mad that I missed this move here? Not really, because I caught every other one from here, right? So don't worry about the ones I miss, worry about the ones I catch. And again, if you focus on the ones with slope, that's what matters. Let me see if there's any symbol requests. If not, I'll just keep going. Let's have a look at TCSO here, Tractor Supply. There's a company I was talking about a lot over the past year. And again, if you focus on the entries with slope, right? One here, one here, one here, here, and now recently here, a few more in here, you know, easy, short trade right here. Now, the other thing I want to let you know is you don't have to. I mean, it's a great idea to follow the signals, you know, perfectly, meaning you enter here, right? And you might want to add here, here, and here, and then exit here. That's the ideal situation. But we all know that things can change from day to day. So if we got in here and then again here and here, and we had a substantial profit going, we may want to start scaling out or taking some of our profits, you know, and leaving the rest to ride. It's always good to take some profits off the table along the way, just to secure those profits and then leave a piece for the rest. You never know when there might be some news, you get a gap against you, or there's some sort of black swan event that drives the market lower, anything like that. But you know, don't be shy to do that either. But try to follow the rules as much as possible. Now, the retail sector looks like it is one that is come back to life now. If we look at the retail sector here, XRT, this is the ETF. And you can trade just the ETF if you want, with some great trades when you focus on slope, right? But we went through a real nice run last year. And then all of this year, we've been pretty much flat, right? Very, very flat. Now, if we mark the highs, consolidate, and the lows, this is what it looks like. And we recently got to move out of there. Now, one thing you should know about consolidation areas is they can be frustrating, sure, to watch this, you know, day after day or week after week, just kind of trade in a range. But it should excite you, because the longer it goes on, the bigger the move should be one way or the other when it comes out of there. What you want to do with these is identify more or less the start of that channel and draw a line until the breakout point. And the length of that line is more or less the length of the move that should happen when you come out of that channel. So either to the downside, in this case, if we broke below here, we would have had a monster drop, right? Something similar in size. And now, since we broke to the upside, the move should be similar in length to the upside. So it looks like it's just at the start. And if you look at some of those retail stocks today, for example, Macy's, right? Look at that. It had gone flat for a while, even here recently, but now we've already had 2 signals with some real nice slope, and it's getting sharper and sharper, right? Look at Kohl's, right? And it's starting to go as well, and it's just about to take out that high. So we'll probably see, an even bigger run. And you can see when these move, right? They move. We have Abercrombie and Fitch today. And look at that. We have a green dot today. So, and we have a slope. And it looks like we're about to take out the highs. So let's look at the weekly. Confirm there's nothing to the left here, nothing but blank space. That's what we love to see. Why? Means no resistance overhead, right? It has a clear path ahead. If we look at monthly, now we see some resistance further back, right? So you always want to look at the higher time frames to confirm whether or not there is going to be any resistance or support ahead, right? But in this case, you can see the dramatic slope on that 20 on the monthly and the daily time frame here. This looks like the start of a bigger move. So keep an eye on the retail sector. And what I would suggest, what you can start with from a day-to-day or week-to-week process, sort of looking from the top down, start with your index charts, right? Look at the Dow Jones. Sorry, that's not it. Let me, DI8, here it is. Right, look at the Dow Jones and ask yourself, are we headed higher or lower? Right now, today, so far, we're going to pull back and, maybe an exit here out of this long. You look at the S&P 500, right? And it's looking pretty good. You look at the NASDAQ 100 and it looks pretty good. So overall, fairly good. Then you want to break down by sector, right? So we looked at the retail sector. We could look at energy, XLE, for example. We can look at XLF for financials. Just go through a list of those and you'll get a sense of where the overall market is going and which sectors are hot and which ones are not. Because if you get, say, a setup like this on a sector chart, so financials in here, right? Then once you see this trigger, A, you can trade XLF, but B, you can go into Goldman Sachs or Morgan Stanley, have a look at those charts and make sure that they have setups with slope and you want to go in that direction, right? So let's look at a few others here on both sides of the market, actually. ATKR here, there's another dot right along an upsloping 20, right? Looks pretty good. And look what came before it, right? Consolidation. Can't tell you how many times, how common this is, right? Mark those, mark the lows, wait for a break. You don't want to take it there? Not a problem. Wait for the first pullback. There's your entry. Off it goes, right? Very simple. Let's look at Wesco, WCC here. Same thing. Consolidation, right? Consolidation. Mark those highs, right? And we can carry it across if you want. Okay, I didn't draw it perfectly, but you know what I mean. Mark the lows, wait for a break. If they had broken below here, if the 20 was sloping lower, then we'd go short. But look at the slope on the 20. We enter here, make money. Pulls back, we enter here, making money. It really is not that difficult. Look at Eli Lilly, right? Any of these with slope, just over and over again, right? So, you know, why is it that you see this over and over again? there are so many factors that drive the price of a particular stock or a particular market, right? But all those factors out there, whether it's the Fed, job report, inflation, you name it, who knows, news on the individual stock, right? Earnings. There's so many things that it's impossible for us as individuals to gauge all of those data points and figure out the direction of a particular market or stock. So the easiest way for us to play in this game is to identify when buyers are out buying sellers and when sellers are out selling buyers, and go with the flow. It really is that simple. On the short side, Pinterest has been, getting beat up pretty badly for a little while. And here we are again today, new entry. Look at the slope on that 20, right? So if we go to the higher time frames to look to see, is there any support nearby? Where there isn't much, is there? So there is still room for this to fall. So Pinterest looking like it wants to continue to fall. MHK, I think, had a short. Mohawk Industries. Yeah, there it is, right? So do we have slope? Yes. Red dot, off we go, right? Weekly time frame, is there a lot of support? Not much. So, and when you clear a series of lows like that, so we're just about to break below a series of lows like that, we usually get a flush. So that's pretty good as well. SRCL. Let's have a look. There you go. Another very, very clean. Look at the dramatic slope there, right? When we've had slope in the past, right? How have they worked out? This one didn't, but look at this, the size of the loss here, minuscule compared to other gains, right? And now, that's looking pretty good. One more on the short side, FUTU here, Futu Holdings. Right? Beautiful slope lower, right? This one has been sold for a while here. So over and over and over and over again. And now we're getting another chance at this. Let's raise the time frame. Look to our left. Is there a lot of support? No, there isn't. And so this may continue to fall, right? Now, so I've shown you, crypto, commodities. Well, let's do a couple of currencies, and then I'll show you the expert commentary tool as well as the scanner that comes with this, which is fantastic. Allows you to find setups in no time. So again, some issues depending on volume. This is the USD CAD pair can fluctuate, right? Some issues are a lot more volatile. Some are not very liquid, etc. You still want to focus on the areas with slope. It's that simple. Focus on the ones with slope. Ignore everything else, right? And let's look at JPY against the US dollar. So the Japanese yen against the US dollar. See if there's anything there. Now look, consolidation, right? You get the breakout, right? Above the highs, it pulls back. What do you have here? A green dot. More importantly, you have slope, right? And off we go. So you sit through here, you ignore all of these, and you pounce on this one, right? You jump on this one. It may have been a break even, may have been a small loss. Now here, do we take this one? No, we don't. We have a flat 20. We ignore. We continue to sit and wait. If we had taken the ones with slope back here, we would have had 3 nice winners, right? That simple. Quickly, let's look at Microsoft. Yeah, Microsoft. The reason why it came to mind is Microsoft went through a lengthy consolidation, did nothing for a while. But was it worth the wait? Sure it was. And will continue to likely go up from here. Now, let me show you a couple of quick tools that come with this. If you look at the top left of the screen, you click View, and you go to Expert Commentary. Here, it brings up this box. It talks about trading wins and myself and victory a bit here. But the more important part of this is how it relates to what's happening on each bar here. If you look to the top right, there's this little triangle that defaults to the most recent bar here. And we happen to already be in a trade here. Now you can move this triangle over any bar by clicking on it, right? Or by using the arrows on the top of this expert commentary window, okay? So if we go back to here when there was no trade, you won't see any writing in between the paragraphs. If I move it forward and we now are over one of the, well, that's the exit, let's go one more, there we go, over the arrow, it'll populate some text in between these paragraphs. Now, it colors the text the same as the bar. So if it's a long trade, it'll color it green. If it has to do with a short trade, it will color it red. And so here it's giving you a heads up that the victory system is currently signaling a long opportunity. Now, it'll also go on and give you a brief explanation of the kind of option you might want to consider if you trade with options. But as we move forward, as every new candle is created here, and we'll move it ahead one at a time, it'll also identify a stop level. So here it's telling you that you might want to consider selling if it closes below 293. So that if you can't be in front of the screen all day, every day, and you want to set your stops before you go to work or before you go out golfing or running errands, whatever it is, you have that number there. Now, if we move it ahead, one more bar, you'll see now it's 293.22, and we move it ahead, and now it's 293.87, etc. So it will continue to update that number bar after bar until it gets to a point where it's either going to exit or switch to a red arrow, and it will tell you that the long opportunity is over. Okay, so really it holds your hand throughout the life of the trade, and that's what I love most about it. Now, another very, very important part of this, if you go up here to the top left and click the letter P for Power Console, come down to the third tab on the left, Explore. Up here are all the different strategies that have been programmed into MetaStock. They're in alphabetical order, so you want to scroll down to the bottom. There are mine, the Voras. Now, for the Vora Victory, there is the Vora Victory tab right there. And there's also the Vora Victory Re-enter. Now, that slope, Jeff Gibby recently added a couple new scans titled Vora Victory Filtered and Vora Victory Re-enter Filtered. What he means by filtered is he's filtering it by slope. So he's only looking for the trade opportunities that have a significant slope, okay? And I'll show you that when we run the scan. So then you go down here and you select which market you want to scan. There's just about everything here. I'll go to the index constituents and say, pick the 30 stocks in the Dow Jones and maybe the 100 in the NASDAQ, okay? Then we go to the right here and we pick our time frame. You can select whatever time frame you're trading. I'll stick with daily. Here's your confirmation box. It's telling you what you've selected, okay? And so then we click Start Exploration. Now, I have a lot of things running on my laptop here, but you can see that we've selected 126 basically, and you can see how quickly we're going through there, right? We've already finished one. Now we're doing the re-entries, and we've done them both. So just like that, we've found some selections. Now, the victory, the original victory scan, Vora Victory, means the actual arrows, red and green. The re-entry are obviously the dots, right? On the arrow side, it really only identified one here out of those 126, which was pin dual dual, symbol PDD here. If we highlight it and click Open Chart, you're going to see here that we have a short opportunity. So at that point, you can judge the slope and do the rest of your homework and have a look at this. If we look at the re-entries, we have a few more. Now, if you look at the titles up here of the different columns, there's long and short. Some have a number 1 and others 0. The ones with number 1 are the actual setup. So in other words, out of these 3 stocks, 2 are longs and 1 is short, right? But you can click on these and sort by that. You can sort by closing price, right? Ascending or descending. You can sort by symbol, or more importantly, you can sort by slope. So the higher the number, both positive and negative, the better. So the higher the positive number, that means a slope higher. The higher the negative number, it means slope lower. So, you know, the filter that Jeff put in here was we wanted to look for a slope of 5 or greater. All right, nothing below 5. So it's identified 2 to the long side, 1 being NVIDIA. So we can look at that. And there we go. We had a bit of a gap up. Now, I generally don't take the ones on a gap. I want my entries to be closer to the 20-period moving average. Whenever price moves away from the moving average, it tends to snap back. So I want it closer to. So I would personally skip this one. Let's look at NXP. That's a little better, right? We have slope. Price has been consolidating. We have slope, and now we have a green dot. So that looks good. And Peloton to the short side, right? Do we have a dramatic slope lower? Yes, we do, although it is further from the 20. But you get the idea. In a matter of seconds to a few minutes, depending on how many instruments you scan, you will have a list of trade ideas. And let me tell you, there will be plenty to choose from. So, as I said earlier, there are 2 recordings that come with the indicator. We had classes where we taught our students how to select between one and the other. So on a day where you might have 10 or 20 trade ideas, how do you select the 1 or 2 highest probability trade ideas, right? That's what we go through. So you won't, there won't be a scarcity of ideas. Let me tell you, there'll be plenty. It's your job to look through them and find the ones with the greatest amount of slope, the least resistance, etc. So let me see if there's any quick questions, and then I'll hand it back to Jeff. He'll let you know how you can grab a copy. I see a question here. By slope, do you mean the 1-day percent change in the 20? No, it's not a 1-day percent change. There is a full formula behind it. Me and Jeff spent many days working on that. I don't remember exactly the formula behind it, but it looks back more than 1 day. I'll tell you that. But it is a calculation on the slope of the 20-period moving average. Great. Okay. So Jeff, if you're there, I'd be happy to stick around for questions, symbols, whatever you like. But if not, I'll pass it back to you, and you can let everyone know how to grab a copy.
Yeah, absolutely. Let's see. One of the big questions that we had was, how can you show us how to scan for signals? I'm like, well, if he doesn't show you, I'm going to show you. So, but you did. You covered that really well. Mm-hmm. A lot of questions. Does it work intraday with QQQ? Maybe you could quickly, because we are running out of time, but quickly look at the QQQ.
Yeah, absolutely. And intraday, let's look at a 5-minute again. Any time frame. You know, you're gonna have your quiet periods during the day, and you're gonna have your trending periods. I would suggest being patient enough, waiting for those trending periods. But whether it's a 5-minute or a 1-minute chart, you know, it works the same. You're gonna get those ebbs and flows in the market, and that's what you want to focus on. Some of the stocks that make up the Qs, the NASDAQ 100. So, you know, the Apples, Amazons, Microsofts of the world, they're actually great to trade on an hourly time frame because they move a lot, but there's some, you know, very strong sustained trends in one direction or the other. So if you have time to sit in front of the screen every day. In the hourly time frame, the Qs trade very well on the hourly, as you can see here, very clean, very easy to trade. And the securities that make up the NASDAQ 100 on the hourly trade very well. So the Teslas and, the Apples, these are not small moves. These are actually huge moves within a few hours. So you tend to hold sometimes a day, sometimes two, but it's usually between a half a day and 2 days that you're in a trade. So you can also trade these with weekly options very inexpensively, but stand to make a substantial profit.
Okay, perfect. Emmanuel says, do you know how accurate the system is?
Well, we can't put an exact percentage on it because it varies from time to time. I mean, if you look at the markets, there are periods of the market that are very flat and others that are trending. So it depends what time frame you're actually going back and researching. But I can tell you what my success rate has been with the ones with, if you stick with the slope like that, your success rate is well over 70%. Sometimes it's 85, 90. But one thing I want to tell you about, don't get hung up on those numbers. You don't need a very high accuracy rate when you're trading the right way. Meaning, if you're keeping your losses small and allowing your winners to run, which is what Victory helps you do, actually. If you look at, if you're taking this here, you follow the rules, you're out immediately. Very small loss compared to a big win. You can be wrong way more times than you're right and still make a ton of money. But I certainly have had many more winners than losers, and the winners being bigger than the losers. So
respect your stops.
Yeah, judge for yourself. When you grab a copy, go look through hundreds of charts, thousands of charts, and you'll see how consistent it actually is.
All right, Vince, I think that we do have Akhil. I am going to show you the answer to your question real quick, just to know exactly where it is. He wanted to know if you could scan 195-minute charts. I'm going to show him exactly how to do that. For you, Vince, always a pleasure. I really appreciate your coming in, spending some time with us. Great job today, as always.
I appreciate the invite. Always love doing this. Thanks again. It's been a great event. As I said at the start, I've been popping in and out, looking at some of the presentations. There's been some great material, and there's many more to come. So really happy to be part of it. Thanks again.
No problem. Okay, prepare to be ejected. Thanks, Vince.
All right, no problem. Take care.
Okay. All right, let's go ahead and change things over a little bit. No. Should make me the presenter. Okay. I'll go ahead and show my screen. I did promise to show you kind of where that is. If you are in the scanner, all you have to do here, I've got the scans that I want to run ready. Right here is where you select your interval. So if you click on daily, it's going to obviously scan for a daily chart. If you go into custom right, now if you just click on this, you'll see 1 minute, 5 minute, 10 minute, 30 minute. Obviously 195 isn't an option right here. But if you click on custom, you could say, well, I want to do minutes and I want to do 195 minutes. That's all you have to do. You can just run it from there. So when you do select that, it's going to say 195 minutes, and you can go ahead and run the scan. Now, with scanning intraday charts, the one thing I will say is you can scan anything that you want. You can scan any number of charts that you want. But typically, what's going to happen when I push this button is it's going to go run the scan, and then it's going to come back to me with the results. So your internet connection speed is going to play a big role, and the number of stocks that you've got in there is going to play a big role too. So what I'd strongly recommend that you do is, if you do want to do intraday scans, maybe limit it to maybe the S&P 500 or the Dow, or and I can send you instructions on how to do this. I have them all written up. Make a pre-filter scan that you run at the end of the day one day that just basically filters out the price you want and the volume requirement requirements and do just a scan to make a list of the things that you want to scan real time. Anything you can do to bring that down, that number, is going to make it even faster for you. So, but there's the option for you. Very good. You're welcome. Absolutely. Dinesh says that was a nice presentation, training your eyes how to. Yeah, Vince does a really, really good job. I particularly like it when he kind of talks about, don't trade more than you can afford to lose. He has some really good nuggets in there. He was using the add-on that we helped him build here, the Vora Victory method. It is an add-on that many of the staff here use. He showed you how to do the scans. He showed you the commentary. It does a really, really good job. And he does a really good job showing the ways that it uses the MetaStock Expert Advisor and the tools. And, it's a very, very full integration into MetaStock. And it's been a very, very popular product since we released it this year. With it, you're going to get detailed commentary breakdown. You're going to get expert alerts. You're going to get full market scanning for the triggers, the re-entries. And we did go in and add the new filtered scans, which I actually like the most. And it does have system testing as well. The product on this normally costs $1,997. It's a one-time cost. We are also going to do that at a huge discount here at the conference. So $995 is the price that you'll pay. That's going to include MetaStock Real-Time subscription if you need it. We're going to give you a free copy of MetaStock Real-Time 30 days, to be clear. We'll include the data that you need to run it. One of the things I did want to show you as part of that purchase, on our download page, you're actually going to get a bootcamp slide. And I actually think I can show you this real quick if I maybe. Oh, my webcam is in the way. Let's do this. So right here on the downloads page, there's a couple of sessions. There's a first session that we did that's about an hour, 26 minutes. The second session that we did was about an hour and 8 minutes. They do cover a lot of the same stuff, but we like both of them, and we decided to keep both of them on the downloads page forever. So these were recorded live. Vince did a really good job of kind of navigating and talking not only about like the add-on and how to do scans and stuff like that, but what to look for in the slopes. You get this as part of the actual exploration or a part of the package, if you would. Again, we're going to back that with a 30-day money-back guarantee. That gives you a really good risk-reward ratio. If you like it and you keep it and it helps you find good trades, well, great. It should pay for itself. It's trading software. Take advantage of our offer. Give us a call at 800-882-3040. You can chat online with us at metastock.com/sales-chat. And you can also order online at metastock.com/conf-promo. Akhil, you're welcome. I'm happy to show you anything you want to see here. So it's a great product. Give it a go. See if you like it. 1-800-882-3040 will get you set up for that. Okay. Let's do control room. Be ready. We're going to do another drawing. I do want to say thank you to Stocks and Commodities for sponsoring the event. Stocks and Commodities is a great magazine. They've been sponsoring the conferences and the summits that we do since we started them almost a decade ago. We appreciate it. They are a great group of people to work with. I want to say, if you subscribe to MetaStock today, or you can get 5 free issues of Stocks and Commodities part of that subscription. And if you spend more than $300, if you buy the Victory add-on that I just showed you, you're going to get a 2-year subscription to Stocks and Commodities that's basically given to you by them. We didn't pay for it. It's just something that they do for the purchasers as part of the sponsorship package. So again, they're great sponsors. They do a great job of actually supporting us and all that kind of stuff. So let me go ahead and get the control room involved here. Kelly, can you hear me?
I can hear you, and I'm here.
Are you ready to play your favorite game? Pick a number.
Number roulette. Let's go.
Yeah, let's go for it. What number you want to go with this time?
We're going up to 12,500. Is that right?
Yes.
3,807.
Okay, let's do that. I'm really glad the first time, if you go watch some of the older conferences where we would do this, I would sit there and just scroll until I found a much better way, a more efficient way to do it this way. Now, I'm going to give this guy's last name out His name is Richard Trader.
Well, what if that's really his last name?
That's an awesome last name. How could I not give out that name?
That's true.
So Richard, I'm sure it's his actual name too. Richard, though, we do thank you for registering for the event today. We appreciate you doing that. You might be interested in terms of the prize that you won. And what we're going to give you is we're going to give you Marina. I don't know if you saw yesterday's session. We had Marina in Marina the Trader Chick. And she talked about a day trading course that she does. And she did a really, really good job. We're going to give you a copy of that course. Marina's going to give it to you absolutely free of cost. So I will be contacting you, Mr. Trader, with information on how to take advantage of that. And just to confirm, probably get your real last name as well while we're at it. But congratulations on winning that. I'm just going to make a note of that real quick.
And while you're making a note, I'll tell him congratulations as well. Congratulations,
Yeah.
Richard.
And if your real name is Mr. Trader, I'm sorry, I just violated your privacy. All right. Real quickly, we're going to say thank you to CMT Association for sponsoring the events today. CMT Association, great organization. They've been working with us for 3 events now, but they are really easy to work with, really good. A very well-reputed organization. They work with some of the top brokers and banks and work on kind of accrediting their brokers. Let's say it that way, accrediting their brokers. You can find out more about the CMT Association. It's at cmtassociation.org. You can give them a call at 646-652-3300. Well, speaking, and then of course us, MetaStock, we've been rated #1 in our price category by the readers of Stocks and Commodities magazine 28 years in a row. We talked about scanning and testing and the commentaries. I love MetaStock. I wouldn't trade without it. The offer that we're doing around MetaStock today is if you buy 1 month, you will get 2 months for free. So buy 1, get 3 free. You can do that at metastock.com/conf promo. If you have questions, if you want to get more information, 800-882-3040, metastock.com/sales chat. It's been rated #1 28 years in a row. Try it out. If you don't like it, you can cancel. It's not a lifelong commitment. So in any case, there you go. I love it. I actually use it every day. I'm looking at the time saying, okay, time to do my scans while we get John started. John is a good friend of mine. I think he's in Australia. He runs a company called Acorn Wealth Corporation, which I believe is based in Canada, but you'll notice that John has a very Australian way about it. He starts talking. I love John, though. He's a very, I think we have a bit of a picture from 5 or 10 years ago for John here, though, but he does a really good job I remember working with him on a lot of indicators, and he does a really good job. We haven't had him in here for a while. It's good to have him in here. I need to invite him in here more. So, John, how are you doing today? Let's go ahead and turn on this microphone. And we will, John? He's in here. Hello, John. John, I do see your audio is connected. I can't hear you at all, but I can see your screen. What I'm going to have you do is unplug your microphone, plug it back in. That's the easiest way to fix things in GoToWebinar, if you can hear me. Let's see. How about that?
Hey, guy, can you hear me now?
Yeah. Okay, good. I know we're starting you a little bit late. I don't want you to worry about that. If you feel like if you need to go a little bit long, feel free. We have a little bit of a shorter day today, and we're running about 10 minutes in the readers. So my apologies for that, but it's okay if you need to go an extra 10 minutes. We'll be okay.
That's a dangerous news you're giving me there.
Yeah. Well, also you're the second to last, so that if we need to run longer with Peter, we can too. So it's okay. You're down in Australia right now, right?
I am. I'm here in Queensland. We are looking forward to getting back to North America, though. But we leave in December. But looks like we missed a lot of terrible weather in Canada.
Well, that's good. You might want to wait till March, from what I understand.
We may want to. That's right.
Yeah.
I do see you have my old picture. It looks like I've gained a couple of extra pounds since that one, but still very much the same.
I was thinking you looked like such a child in that picture. You look good. I like the beard too. I think it looks good. I am going to get out of the way. I know we're running late on time. Sean, welcome. Thank you for coming. And it's
my
your turn.
absolute pleasure. It's always a great pleasure to work with Jeffrey and everyone at MetaStock. We've known them for donkey's years, it feels like, and such a terrific platform. Thank you everybody for being here today. We've got a really special presentation. It's on my favorite topic that really kind of ignites my passion about trading, which is how we predict explosive moves in stocks by focusing on the smart money and the insiders. And to me, enjoying your trading is a big part of what we do, right? Trading isn't just about money; it should also be something that you enjoy. And following the smart money and the insiders is something that makes trading particularly exciting for me, and something I'm very passionate about. And so that's today's topic, and it's all about keeping things simple and breaking down into what are the small things we can do that will really move the needle the most. And so just to get started quickly, of course, in terms of a disclaimer, again, there is no guarantees with any financial investment, whether it's property, options, futures, stocks. There's no guarantees with any financial investment, so I won't make any silly guarantees to you today either. My results are not typical. I've been doing this for over 20 years. We will talk about some of the customers' results, but again, we do not ask them to verify their bank statements or send those in via email. Most people lose money trading and investing. Again, there's an old saying about 90% of traders lose 90% of their money in 90 days. So today is all about how do we make sure that we're in that group of that 10% that's consistently making money. We'll obviously, I think insiders is a big part of that. And of course, any positions discussed today may be being held by myself or the other contractors and employers of Acorn Wealth. So with that being said, give me a 1 if everyone's ready to talk about how we have fun and make money as well in the market. I'm sure that's what you came here for. Give me a 1 in the chat box. We'll rock and roll. All right. So, as Jeffrey said, look, we've been around for a while. We started in 2007. We've trained over 5,300 students to this date. And what we've been teaching people ever since we really began comes back to really 3 core pillars. 1, finding stocks with incredible insider backing, big smart money accumulation. 2, timing those trades by looking for high probability patterns, using those technicals to confirm the best entry point and where we want to get in, and of course, just as importantly, if not more, when to get out. And so those are 2 really big important parts. But the third piece to what we do is set and forget. And this all comes back to the idea of having systems and rules. So we used to run a blog called The Traveling Trader, and it was all about just trying to create automated set and forget trades so that you can really do it from anywhere. If you know exactly what you're looking for, and if you understand the rules of the patterns of where to get in, where to get out, the entries, the exits, the stop losses, where to take partial profit takes, all of those things can be predefined. And when you start to have a system that is automatable from a day trade all the way to swing trades and investments, to me, that's when investing also starts to become very exciting, because your money is now truly working for you versus doing what a lot of people do, which is get glued to the screen and end up spending a lot of time that they didn't necessarily sign up for in the beginning when they got into trading, end up spending a lot of time glued to the screen. And so this isn't just about finding insiders and great setups, but also kind of how to claim your life back and be able to really put these systems into play. So that's what we're all about. Now, the problem that I ran into when I first went down this avenue early on in my years, the problem that I ran into is that I really got stuck into kind of analysis paralysis. Who's been there? Or who's there right now? Hopefully that's a problem that you're solving over the course of this week with MetaStock. But for me, analysis paralysis was and having too much was one of the issues that I had early on. I had about 30 indicators that I'd studied when I first started trading. I bought myself, all of the great technology. I had 6 monitors. I had subscriptions to, like 10 different newsletters. I had, I looked like a pro. If you were to walk into my office in my first year of trading, you think, wow, this guy must work on Wall Street for one of the biggest hedge funds. But the fact is that all of these screens, all of these news feeds, the live TV on at 24 hours a day on the Business News Network, I wasn't making any money. And so despite having all of this, I didn't really have a set of rules that was consistently working. And so what I had to do was really kind of get away from the noise and the analysis paralysis and figure out what was the most important thing that was really going to move the needle. And this is where I met my mentor, Strathy. Some of you who've been around, who've worked with us over the last 20 years would remember Strathy. He started Acorn with me, and unfortunately he passed away a few years ago at the ripe old age of 82. But he was a legend. And one of the first things he told me was, you've got to get rid of all this clutter. You've got to focus on what's going to move the needle the most and be efficient. And so this comes back down to the discovery of some of the really powerful systems that we put in place going through that. And so I'm going to talk through those rules and those systems now. So the first rule number 1, and this is the golden rule on how we find explosive moves in any market, is by following the insiders or doubling down on the smart money. So this is where it gets really juicy. And even if you think that you're not smart enough for technical analysis, maybe you're in your early stages where you're still learning some patterns, you're still learning about price action, things like that. Even if you're in that boat, what I love about the inside is it gives you a way to jump to the head of the line kind of thing, where you can immediately put some high probability in your corner with any trade or investment that you're looking to get into. That's what I really like about the insiders. So what I'd like to do is share a little bit of a story with you on how this came about, because this was one of my biggest losses. A lot of traders will talk about their biggest wins. I want to start out by telling you about one of my worst losses, and this was early on in my trading days, and this is where I basically just started to really put my best foot forward in terms of bigger position sizes. I was making some money. I was really proud of myself. I was doing great. And then all of a sudden, one day, I'm sitting here in a little pub in Vancouver, in Canada, and right there next to me was a table full of about 5 or 6 guys, and they were dressed in the bright, shiny Armani suits and the gold Rolexes and drinking the best champagne. They looked like they were celebrating. And I, as a young guy at the time, I could just smell the money oozing off of them. And I thought, gosh, well, these must be guys that I want to know. And I, kind of shuffled my way in and asked what they did. And they started talking about their company's stock and that's why they were celebrating. And so I was instantly intrigued. And I thought, okay, maybe this is my big ticket. It's all about who you know, not what you know, right? So they told me how great things were going and how they expected this thing to soar. And I said, oh, really? Well, gosh, I mean, how much money do you think I should put into something like this? And they said, well, Johnny, and they're grinning ear to ear. And they said, well, Johnny, how much do you want to put into a stock that could go up 1,000%? And I thought, right, all of it. So I went home thinking I'd found my meal ticket. And I put all of my account into this one stock. Amateur mistake, right? But hey, I did it. I was greedy. I was thinking about how many millions of dollars I was going to make over the next 12 months on this one trade. And sure enough, almost the day after I bought it, the stock plummeted all the way down to 10 cents, and eventually going lower, and my stomach going with it. And as the problem that I realized, a few weeks later, is that as I was buying and loading up the stock, it turned out those same insiders, the CEO, the chief financial officer, the chief technical officer, all these guys that had been telling me how exciting this was, they'd actually been dumping their stock at the same time. They had liquidated almost 100% of their position while I was buying in the open market. So I realized that I'd paid for their Rolexes. I'd paid for their champagne, their suits. I was the sucker in this equation. And as bitter of a pill this was to swallow, I'm glad I had this experience, because it opened my eyes to the games that are played on Wall Street. And I'm glad I learned that lesson early on. And what this experience did for me was light a fire under my butt to never make that mistake again. And crazily enough, they then loaded up on the stock when it bottomed out and made God knows how much more money as it went back up. So this is the kind of game that goes on. And again, I had to admit that I led myself to this slaughter. I let my naivety and innocence kind of blind me to the truth of what was really going on. I was the proverbial innocent lamb that was getting eaten for lunch. And so fast forward years from that point, we'd now opened Acorn. We opened Acorn in 2007. We've been having a ton of success with patterns and probabilities and these type of more technical setups. But what we were noticing is that a lot of the trades that we'd find purely based on technicals, would take off, and we would get out of them at a 10 or 20% profit. That was about our sweet spot that we were targeting in our first initial years, was about an average of a 12% move over 3 weeks. We were doing extremely well at that. But then we would come back and look at a lot of these setups and notice that they'd gone up, 100%, 200%, in some cases 500 or 1,000%. And we thought, we're really leaving a lot of money on the table. We're doing all this research. We're finding these great trades, but we're leaving a lot of meat on the bone. And so this is when we went back and studied, hundreds, if not thousands, of our recent alerts, and said, what's the difference between the ones that really only go up 20% and they're just short-term trades versus the ones that really go for a tear and go up those kind of much more considerable explosive types of moves? And what we found was this presence of insider activity. The stocks that had gone for these terrific runs, especially in some cases in the biotech or the mining industry and things like that, there were situations where we'd see the CEO and CFO buying, 100% more, 200% more, 500% more stock in their own company with their own money. And this tended to be a common situation behind the really juicy moves. And in the same case, looking for shorts. I remember a situation where we were looking at a very well-known drug company, and one of the big ones, and they were just weeks away from an FDA approval, and the chief medical officer and several other insiders had sold 60-70% of their stock. And we thought, and the thing didn't pass FDA. The thing dumped overnight down about 30-40%. And again, so not just for longs, but also in these short examples, these insiders were playing a big role before some serious downtrends, which, of course, was the lesson I learned early on in that terrible experience in Vancouver. So let's take this back and talk about how this relates to some of the recent market conditions. How many of you here, for example, got hurt by the 2020 crash? Put a one in the chat box if you either missed, if you got hurt by the 2020 crash or missed the buying opportunity at the bottom. I'm sure a lot of you did, right? So there's one group of people that didn't. So as we went through that experience, just remember what was in the news was full of emotion, right? Markets are plunging, billions of dollars are being lost a day in market cap. worst crash since the Great Depression. All of these kind of really emotionally charged news articles. But again, while you're reading that news and potentially selling at the bottom and things like that, one group of investors didn't miss any of this opportunity. And that group of investors, of course, is the insiders. If you take a look at the insider activity in the market before the 2020 crash, you'll actually see that the insiders were selling in very substantial quantities, especially when you compare that to the amount they were buying. So as you can see here, this is the sectoral breakdown across the market. It's the graphical representation of that. Of the 90 days before the market crashed, the insiders were selling in droves. So what did they know? And then when the market bottomed, bottomed out, they bought back. In fact, it was one of the heaviest amounts of buying that we had seen in the market for over a decade, that they bought back in billions of dollars. And this actually happened, I think it was about 3 days off the absolute lowest the market actually went. Amazing, right? So they not only got out at the top, but they got back in pretty much at the perfect time that you could have. And does anyone want to take a guess at when the last time in history was at that point that we've seen this level of optimism, this level of instantaneous mass buying? Anyone want to take a guess at when the last time we've seen that type of activity was? March 2009, at the absolute bottom of the global financial crisis. So as terrifying as the news may have been, in both these, of course, very terrific drops, if I can use that word, the insiders nailed it, and and good for them. Now we could say that this is unfair. I would certainly say that the system is rigged, but again, this is something that we can piggyback off of to use the visual analogy here, and so when you hear the word insiders and insider trading and so forth, this often has carries with it very negative connotations, because a lot of people think, well, isn't insider trading illegal? And some types of insider trading is. If you were to go down to the golf course and play a round of golf with your buddy, and your buddy was a CEO of XYZ company and said, oh, things aren't looking so good, we've got some bad news coming, and you were to go off and sell all your stock, or vice versa, buying stock before something you heard, that type of insider trading is illegal, and the Exchange Commission does not like that, right? And that's called blue collar crime, or sorry, white collar crime, and that's kind of the Martha Stewart type of story. But legal insider trading happens all the time, and it's due to a loophole in the trading exchange rules, which allows insiders to take advantage of buying stock in their own company as long as they have a written plan that they've given to their broker. But this written plan is very loosey-goosey. It's a very gray area. It can be changed at any time, and it allows for insiders to really be able to exploit buying their own stock at seemingly very interesting times. This happens all the time, and their activity is publicly reported to the market, right? So it is out there. And again, this is an article from Bloomberg that was talking about this loophole that some are demanding to be closed. This was just from about a month ago. Here's another article from Reuters. Again, executives game the system. SEC targets corporate insider trading loopholes with potential rules. They're trying to close this loophole because it is a big one, right? But as they talk about in the same article, there's a very long runway before any such changes would take place. And the changes that they're suggesting would take place are still allow for a fair degree of ambiguity. So that is one of the opportunities. This exists specifically in the US market. That's where we focus a lot of our trades. And of course, the type of information that insiders can exploit is broad, is wide ranging. That insiders know about new product launches, mergers and acquisitions, new big customer contracts, litigation or court cases that are being resolved, new medical breakthroughs, FDA approval. I mean, I love the pharmaceutical space because of that explosive potential. And so when I see a pharmaceutical company where you got 4 or 5 insiders buying, millions of dollars worth of their own stock at the same time, and also when they're buying, 100%, 200%, 300% more of their own stock, which shows huge conviction. It's not just a couple shares; they're doubling or tripling their holdings in one transaction. That kind of activity, to me, it illustrates that they know something might be happening. They're certainly expecting to make a lot of money, and that type of personal buying suggests so. And so does the research. This isn't just something that I came up with overnight. There's a lot of research that's been done on this. So, for example, from the Wharton School of Business, that says that investors may can reap by imitating insiders exceptional profits. University of Michigan, insider purchases have abnormal returns. Harvard and Columbia says insiders make market-beating returns when trading before big events are announced. Wall Street Journal, insiders have a persistent edge. And Peter Lynch, there's no better tip-off to the probable success of the stock. So I know this sounds like an obvious question, but just ask yourself, who here wants to make exceptional profits, abnormal returns that beat the market with a persistent edge that give you the best tip-off to the success of the stock? All right, give me a 1 in the chat box, or a hell yeah, if that's what you're looking for. That's what I'm looking for. I want a persistent edge. I want abnormal returns. I want to beat the market. And what this does is it changes the way that we used to do things to a better way, in my opinion. Because if we start out with this, right, what we used to have to do is, we used to have to chase the headlines. Again, I had the news on all day long. I had all these subscriptions. I was reading, researching, putting a lot of time that I didn't have to into my research. So you chase headlines, you buy a stock, and then you cross your fingers, hoping that bad news doesn't come out, hoping that there's not some kind of black swan event with this company that, boom, comes out of nowhere and the stock suddenly shoots down. It also, and when you're in that mode, when you're buying a company with kind of a without confidence and crossing your fingers like that, often then you can limp into positions, right? How many times have you maybe got into a position, but because you weren't so confident, you didn't take the position size that you really wanted to, and then of course the thing skyrockets, right? These are the kinds of things that by tracking the insiders, we are able to really overcome in a lot of ways. So a great example of this, really, really, really good example of this exact point was oil. Who remembers $0 oil? Give me a 1 in the chat box if you remember $0 oil. So, what's the number one rule of investing? Buy low, sell high. It don't get much cheaper than zero. It doesn't get much cheaper than free. In fact, oil did actually go to negative values. That's better than free, I suppose. But the interesting thing about the $0 oil is we all saw it. But how many of you traded it? How many people in here missed $0 oil and didn't do something about it? Right? A lot of you. This is, and I don't blame you. It seemed almost too good to be true, right? And so, what are people worrying about? Why didn't you act on free oil, $0 oil? Well, maybe it was happening so quickly that you weren't ready for it. You didn't have a system or a set of rules on how to take advantage of that and exploit that. Maybe you were concerned that. What stock would you buy? How would you find it? And if you did buy a bunch of oil companies, that maybe you're concerned about the risk that perhaps they were about to go bankrupt the next day and wouldn't survive that lull and how long that oil could stay at those prices. Maybe those were concerns of yours, and those would be valid concerns. But what we did, tying back into the smart money, the insiders, was we went out and on the day that oil hit $0, we started running our scan looking for the most powerful patterns with massive insider buying. Because what insider is going to come out of a board meeting where the CEOs and CFO are saying, hey, look, $0 oil, I don't know if we're going to be able to survive this. This could be the end if oil doesn't recover here quickly. What insider is then going to leave that meeting and go and buy millions of dollars worth of their own stock? Better still, have 7 or 8 insiders do the same thing, right? So this to us was a very powerful way to instantly find the ways to take advantage of this move. TTI is the one on the screen here, and is a great example of that. They were in oil and gas extraction. They were completely off the radar, but behind the scenes and behind the news and behind the fear, insiders were loading up. We had 7 directors buy stock in their own company as oil was crashing. In one case, one of the directors bought 982% more shares. That's a lot. That's not rolling out of bed and saying, hey, honey, I might buy a couple of extra shares. They felt very confident in their stock, and they expected to make a lot of money, and they did. This is where the insiders loaded up. This is where we alerted it to our clients at 92 cents, and then that rallied 470% further. 470% move with a very high probability pattern with very high conviction buying. Another one of these was CPE. Same process. We scanned for this on CPE, and this was terrific. We had $3 million of insider buying from 3 important insiders right after oil crashed, right? Not before oil crashed, because that wouldn't be so relevant. But after oil crashed, they loaded up and they banked an 1,100% move on CPE. That was one we alerted again and again and again. It was the gift that kept on giving. And again, this is one of the emails from one of our students who traded that. Again, from Rob. Just a quick note to let you know I'm loving all your recommendations over the last 5 weeks. I have a large trading account now reserved for a pending house purchase, so I'm only trading with 40K. But my return on 40K over 5 weeks is just over 25%. Most of the trades are already house money trades. I'll talk about that in a minute. Today's 26% move in CPE allowed me to cash in a quarter of the purchase, keep them coming. I wish I'd traded more. And again, CPE was one of them. CDEV was actually the one that I bought. This CDEV was my favorite because I like a bit more risk. I'm a bit more of a risk taker. So I liked CDEV because it had the best upside. This one, again, same process, same pattern, insiders buying after the crash, the VP, director, chief financial officer all bought. They bought $20 million worth right at the bottom. And that was from another 2%, another 10% owners. And from there, CDEV went up 2,136%. This was the one that I bought and was in and out of it actually quite a few times. And you can see that actually from our trade alerts right here. There was our first alert, April 7th, 2020, 31 cents. Target momentum, second target momentum. It shows the stop loss at $1.12. That's obviously because we raised that a long way after it had already rallied way past those first few targets. CDEV again, we then recommended a second time on August 4th at 93 cents. We then alerted it again at 79 cents, again at $1.07, again at $5, again at $7. There was about 5 different entry signals we published on this as it ran all the way from 30 cents to $7. This is a great example of where you get that nice combination of the insiders and the chart patterns, and that is how we can find a new way, a better way to get directly to the truth of what's really going on. Because when these insiders are buying, in my opinion, that is the most direct and most honest truth you can possibly get for fundamental research. These are the experts. There's no one that knows the fundamentals of their company better than the insiders of that company. And so if I'm looking for the best possible edge or tip-off or fundamental research. I want to go direct to the source and see what the ones that know are doing with their own money. And that is what can make trading simple and very enjoyable, because when you uncover one of these, it's very exciting. It's you just can't wait to see what happens. It's but that's what the system is in a nutshell. Who here thinks that's awesome? Is there anyone having a light bulb moment? Right? It's common sense, right? But common sense is one of the least common senses we have. But to me, that is the quickest and most powerful way to find potentially explosive moves in the market. The next step then is, once you find them, is to automate that. And this is just as important as finding a good trade is also executing it properly, right? So I have a question for you guys. Who here wants to spend 8 hours a day in front of the computer to make trades? Who here wants to be stuck in front of the screen all the time, right? I don't. I love trading. I love investing. I love the stock market, but I don't want to spend 8 hours a day doing it, right? I got into trading to have more time, to have more freedom, to call my own shots, you know what I mean? I didn't want a job in trading. I wanted my money to work for me. So, I don't have a traditional job, and that's what I was looking for. But the number one reason that I really like Set and Forget is it does give you the ability to not have to stay in front of the screen if you don't want to. If you want to, great. But for me, that's not what I really wanted when I got into investing. So, and the other thing with Set and Forget trading that's important for me is that I'm humble enough to admit that I'm an emotional trader. That's one of my weaknesses when I first got into trading. And so, it doesn't take much for me to get my adrenaline going. And so if I'm staring at my computer all day, watching my trades take off, I'm just asking for a disaster to happen. I'm going to get too aggressive. I'll get a case of fear of missing out, perhaps. I'll throw my rules right out the window, and there you go. You're making mistakes in a hot minute. That's me, and I understand that. You've got to recognize where your weaknesses are. So I wanted to eliminate that. I wanted to eliminate the potential for an emotional trade out of the equation. And so to combat this, what I needed was a system that was not just going to give me back my time, but also kick those emotions to the curb. And that's where Set and Forget execution really comes in. And it's so easy to do. Because when patterns are done properly, you can calculate your entries and exits, your stop loss, your partial profit taking targets based off the black and white rules, and all it, so that the execution piece is just simply running your scans each day, each week is how I do my scans. I scan weekly for the biggest insider setups, and then we program those in on the weekend and let it go, automate it. And so there's a structure to this, or as I like to call it, rules, systems. And that is what allows you then to be able to truly trade from anywhere. For me, that's important because I travel so much and enjoy life. That's what I signed up for, was a way to let my money work for me and let the system do the job. So all of this is all automatable, as I said. Let's look at some more examples of this. So this is, I'll show you examples of longs and shorts, but Kirkland's is another great example of something we were able to really soar in 2020. It was one of my favorite setups. Some of you may remember this one, but Kirkland's is an example of a Set and Forget insider setup from the Fallen Angels pattern. And essentially what this is, it's a very, very powerful system where you get a downward channel that breaks down and does kind of a swoop, a bit of a ski jump underneath. It's actually one of the top 4 patterns that we trade. It's in fact about 70% of my long-term capital versus short-term. My savings, my retirement account, my tax-free savings account, 80% of all my long-term larger money are all invested in this type of pattern. It's the strongest momentum system out there, and it's called the fallen angel. So when we see this downward channel and the ski jump underneath, this is where we alerted it. So very, very high probability momentum pattern. Again, you can see this one ran from, it was $2.23 where we alerted it at, ran from 223 to over 30 bucks, so over 1,000% move. But what was special about this was not just the pattern, not just that potential for long-term momentum, but what gave us confidence in it and what got us very excited about it was the presence of the insiders. Because once again, as that pattern evolved, 6 insiders purchased between $1.50 and $2.93. 6. These are the guys and girls that know the company inside out, and they're loading up. So that was very encouraging, and of course they were right. You can take a look at something more recently. This was a CERE, Serval Therapeutics. This was a stock that was in a falling wedge and then flagged. This is a very high probability pattern. Right? A flag is actually, so fallen angels are the #1 highest probability momentum system out there. Flags are the #1 highest probability breakout pattern. So there's different patterns for different kind of markets. And if you're in a sideways market like we were in for this year from February all the way through till October, the Russell 2000, for example, didn't break a new high or a new low for 9 months. Because it was sideways and choppy, not the best market for momentum. What you're looking for in a sideways choppy market is aggressive breakouts. And so flags are perfect in a ho-hum boring market like we had this year. So flags are ideal. So we were scanning for flags almost every day. CERE was one of them. Very high probability, quick aggressive breakouts. And as you can see, if you just measure the distance from the flag, what this told us was that if CERE pulled back to support, which is where we alerted it at, we should have a very likely target of this amount, and we could then pre-program the entry right down at 22.50 as well as the target and automate that. And look at how well that worked. That was the alert that we did on the stock, but it also had massive insider buying. As you can see here, Perceptive Advisors. I mean, they were buying millions and millions of dollars. You had later last year, you had 30 million, 100 million. Big accumulation, which suggests that they see an incredible amount of value in that. And once again, there's the alert from our website, $22.48. The first target we had at $29.87, and that rallied all the way up to the best case scenario of around $40. So that's kind of, again, that set and forget piece of when you have very specific rules and ways to manage it, you can let these things run. And sometimes they can run a long way. And this is why this is not just for me a short-term trading strategy. I use this for my trades that I'm in for a week to 3 weeks all the time. But I also use it to identify stocks that I'm holding as longer term investments. This is a great example of one. Now, I'd have to say, unfortunately, I missed this one. I was fully invested at the time that we alerted this one. But it is just, a lot of our students did get into it, and it was and it was brought to my attention by one of my friends, who's also a student of mine, of ours, and he said, "Have you seen Sava recently?" So SAVA, Cassava Sciences, is another great example, but looking at things in a longer term perspective. Because Sava was one that we had alerted back in December of 2019. Once again, this was a fallen angel setup. Okay, so there's great potential for momentum. Now that can be a short-term momentum trade, as it was when it first started to rally. Went from around $2 to 10-ish. Right? Nothing wrong with a 400% move, especially given that it was over a month. But what made this special was beyond that short-term potential, there was some significant buying from the insiders. and they didn't sell after that first 400-500% run. So they bought, the CFO bought, the president bought, the CEO bought, one director bought 177% more. So very high conviction in that kind of percentage increase, purchasing for $932,000. Now, I'll show you then what happened longer term. Again, they didn't sell. They loaded up and actually kept buying more. And that stock, as some of you may know, now went from a very much unknown, untalked about, diamond in the rough, something that most people wouldn't have even batted an eye at when we founded it too. And now it's a stock that's all over the mainstream media, and you can see why. It went from $2 to $120. As a long-term investment, that's fantastic. Right? Kind of like CDEV, that the oil companies we talked about that have had that kind of crazy run. To do that crazy math, just to give you an idea, as an example, if you for every $1,000 that was purchased at $2, that would be worth $59,000 at 120. And those insiders, again, that one particular gentleman bought $932,000. So this is why insiders are something that that are very near and dear to my heart, and a very important way. A crucial way as to how we find setups that can have this type of potential. Now, not every setup's going to work out, obviously. I don't think I wouldn't be listening to any strategy that said they had 100% win-to-loss ratio. But what's great about this, especially if you're using the rules of set and forget that we teach you, is we place our stop losses very, very tightly underneath our entry point, so that if it doesn't go the right way right out of the gate, we'll usually cut our losses. I think our average stop loss is about 5%. So when we're taking a trade, whether it's momentum or flags or whatever, our average stop is usually about 5% lower than the entry signal. But the potential for a reward is incredible, right? You don't need to be taking crazy levels of stop loss risk for the potential for bigger gains if you are picking those correct entry points and have the right risk management strategy. Okay, so very quickly, does it work for shorts? Absolutely. So I'll just show you a quick example of how this works in the short setup. I don't want to belabor you with too many analysis paralysis, right? But I do want to show you how well it works for shorts, because throughout this year, there have been a lot of examples of divergences between some booming stocks. There's been some amazing plays, but there's also been a lot of underperformers. There's been almost just as many dogs this year as there have been superstars. Once again, if you do track the Russell 2000, which I do a lot, the Russell 2000 didn't break out from February all the way through till October. It was a sideways consolidating market for all growth stocks, pretty much. And so there were a lot in that group. There were a lot of big breakouts, a lot of breakdowns. And so this has been a year that perhaps some of you experienced less than stellar returns, right? This is a year where you really had to have your skills fine-tuned on how to find the gems and how to avoid the dogs or short the dogs. This was one of these short setups that we found, which was on GRWG, which is growth generation. Now, in growth generation, director, pardon me, frog in my throat. The director, CEO, and president sold $20 million worth of this stock right around $45. So if this stock was going to go from $40 to $100, do you think they dumped $20 million worth of stock? Right? It doesn't guarantee it's going to crash, but do you think they would sell that much if it was about to double? So by seeing that significant insider selling, high percentage, big dollars from 3 key insiders, that told me, okay, if I'm going to short this, the risk that this is going to skyrocket is probably quite minimal, because why would they sell if it was about to skyrocket? This doesn't make sense, right? that was part one. Part two, can you spot the pattern that then formed on the stock? Head and shoulders. And a head and shoulders is the number one highest probability pattern to indicate the top of a market. It's how how we predicted the 2008 crash was a head and shoulders. The bottom of March 2009 was an inverted head and shoulders. So I've talked about momentum, fallen angels being the best momentum strategy, flags the best breakout strategy. Head and shoulders are the best pattern, highest probability pattern we follow for the top of a market or the bottom. So really cool. And we saw that pattern, that very high probability pattern right here. And so there's the insider selling. Again, in some cases, the chief operating officer selling 100% of their stock, everything, selling everything. And so there we go. We alerted that as a short around $40, and that dropped all the way down. I think that just hit $20 a couple of weeks ago, hitting that best case target. And that's over a 50% decline from where we found that at. So this is the again, insiders and smart money setups in a nutshell. Now, I'm going to fast forward a little bit because I don't. I know we've got a little bit of extra time here, but I want to get to talking about some of the questions that are being asked. How do you find these, and so forth. So let me jump over to that. So just quickly, I wanted to reiterate what we've covered today, because it is about keeping it simple. It's because when you keep it simple, it's fun. And when something is fun, you're more likely to do it consistently. And the more consistently you do something, the more money you typically make. So the three key rules. As rule one, it's not personal, it's patterns, right? Patterns are very, very important. Insiders alone don't make a great trade. It's the combination of having a very powerful pattern that gives you the timing, that gives you the rules of when to get in and out, and then combine that with doubling down on the insiders, looking for that incredible high conviction, large insider buying activity from multiple insiders behind the scenes, and then automate it to take your emotions out of it and let the strategy do the work. So my key question to you now is, if you followed these rules, if you only traded the highest probability patterns, if you only traded flags, fallen angels, and head and shoulders, and eliminated any other trade that didn't fit that high probability pattern perfectly, and if you only traded those patterns that not only had that, but also had 4 or 5 or 6 insiders buying at the same time in triple-digit percentages and in million-dollar quantities, if you made sure that was there as well, and then if you set and forget your entry and exit rules and let your rules do the job and not micromanage it, do you think you could make more money in the market? Give me a 1 in the chat box if you do. Right? I do. I believe that this is one of the best ways and simplest ways to get a significant edge in the market. And remember, all the research seems to agree with that as well. So how can you get started? The golden question. Well, we've put together a smart money trading bundle for MetaStock. I love Jeffrey. I love MetaStock. They've been so awesome. We've got indicators developed in MetaStock. It's an incredible platform. And so we put together a very special bundle for you today to kind of celebrate that relationship and this very special week-long event. So what you're going to get if you decide to join us today is firstly the Smart Money 101 course. Now, the Smart Money 101 course is a foundational course that covers everything that we've talked about today. It talks about oscillation versus momentum patterns. It talks about which are the highest probability patterns to trade, how to identify the correct pattern, how far back you have to go to draw the correct trend lines, how to draw the correct trend lines, whether you're connecting the wicks or the lows, whether you cut through candles or not, what time frames to look at. I think I mentioned that already. It's awesome. It's 4 modules long, and the great thing about it is it's on demand, so you can watch it as many times as you want. You can start watching it right now over this weekend because there are some really cool setups happening at the moment. And that's going to get you started with, again, everything that you need to know. It covers everything from the foundations of charting to how to scan, and the final module is it will actually teach you our insider scans themselves. Really big bonus there. it's going to go in and actually give you the same scans that we've used to find all of these setups that I've shown you. You'll have access to that, and it's incredible, and you have that for life. There's no ongoing fees. You have that scan for the rest of your life, and it is that you can access and run. And that's again how we found all of these setups. That's usually $19.97 on its own. You can go to our website right now and buy it for $2,000. But that's going to be included for free with this package. The second part is the insider alerts. And this is, especially now, there's a lot of really, really good setups happening. The Russell 2000 broke out just a few weeks ago. And ever since then, all my favorite kinds of trades are doing really, really, really well. We've had a watch list ready for months. Anyway, so this is where you get off to a very quick start. We send out 5 trade alerts per week. Again, I usually send them on the weekend because that's where I do the majority of my research. And we set and forget our entry, the target, the options we may be considering. Everything is all preset and forget. And we break this down in a video that's about 5 minutes long. Sorry, more like 10 minutes long, going through each of those 5 setups, what the pattern is, how we found it, the rationale behind why we like it, what the insiders are doing. We even go into who the insiders are. We'll look at what their track record has been over the last 20 years, being involved with that company and other companies. And we'll look at every insider trade they've made that there is history on and see, do they have a uncanny ability to always get out at the top and always get in at the bottom? So we'll even go and rank those insiders as well. We go all those levels of through the research to find the very best trades that our scans can find. And that's going to allow you to get out of the gate running, hitting the ground running, essentially. That also comes with trading room, right? So every Tuesday, Thursday, we run a live trading room, running the scans live in front of you, because that's how you can learn. The best way to learn is to see it being done live, right? And so on top of the course, you'll also see us applying these rules, practicing these rules, and finding new stocks right in front of your eyes every Tuesday, Thursday at 4 p.m. Pacific to 5 p.m. Pacific. Those are recorded and uploaded to the portal right after we finish those sessions. What else do you need? Well, you've also got a coach. So coaching is a, getting this right is such an important thing. And I think, Robert Kiyosaki said, if you want to learn something, the best way to do that is to learn from someone who's been there before. My coach, Strathy, I probably wouldn't be trading still. My life would be very, very different if I hadn't had that mentor for me 20 years ago who took me aside and made just a couple of key comments, but they were life-changing comments. It got me from a cycle of losing to a cycle of winning. So I think coaching is important. You don't have to use it, but the clients that do rave about it. You'll have your own one-on-one coach that will work with you for the entire time that you're with us, so that if you ever have a question, you want to practice your scans, you want to practice your charting, or if you just want to help getting things set up on your charting platform, whatever it is, there's a coach there to help. Skype, text, email, phone call, screen sharing, however you want to communicate, we are there for you. All of that's included. And on top of that, our smart money indicators are all also set up for you as well. We have an amazing smart money indicator in MetaStock that is that Jeff and I worked on years ago, and it's still my favorite indicator that we use. And I use it on every single trading decision. And access to that indicator is also included, as well as our smart money market indicators. So as a very special offer for everyone here at MetaStock, again, to celebrate today and to celebrate that relationship, that is all yours for only $397. So the link to get started is acornwealthcorp.com/insider. acornwealthcorp.com/insider. And again, it's a tremendous value. Everything I've talked about there is included. And I mean, it's a tiny investment for something, that knowledge that you'll then have for the rest of your life. So whenever you go into buying a stock, whenever you go into potentially going into a short, you never have to wonder what's really going on behind the scenes, in my opinion, because you've got that confidence by seeing the only people that know what they're doing with their own money. And that's what we look for, and that's what we specialize in. So I hope that answers all your questions. There might be a couple of minutes left in our overtime, but are there any questions popping up there in the chat box, Jeffrey? That
there's a lot of ones.
A lot of
Hold
ones.
on. Yeah.
Well, here we go. If you see the value in this, guys, give me one more one.
Let's see. But we did have somebody say, hasn't SAVA been in the news for about data manipulation regarding their Alzheimer drug? And I did actually go look up that story. And yeah, they've been in the news for their manipulation of their Alzheimer's drug. So there's a news story if you want to go click on it. We did have a question earlier when you were talking about excessive insider buying. And Marshall wanted to know if you specifically, what do you consider to be excessive insider buying when you're looking? What gets your attention? Is the actual word he used.
Great question. Because that is important, because there's a lot of websites out there and stuff that'll talk about insider buying, and you have to eliminate 90% of that noise. Because firstly, what we want to avoid is option exercising. So if insiders are buying simply because they're exercising options or some of the things like that, that's not so important. So we're looking for when insiders are buying stock in the open market. That's the first thing. The second thing is we're looking for high percentages. So if I'm seeing 50%, 100%, 200%, high double digits to triple digit accumulation, which means what percentage are they increasing their previous position by? That's really important. And then the dollar size. So ideally, I want to see a C-suite executive, like CFO, CEO, 10% owner, buying 60, 70, 80, 200% more, and investing a good chunk of money at the same time. I want to see that happening across multiple directors and at the same price or lower at the same price or higher than the price we're looking to buy at. And that's kind of the perfect storm. And that's what the scan finds for you.
Sue Helly wants to know if this is applicable to USA stocks only, because they're located in Australia. And then I thought of that while you were starting, and I was like, what is it over in Australia? Like, is it 7 a.m. over there right now?
It's 7 a.m. Yes, I was up at 4.
4 a.m. is the worst time to do webinars, I think. I've got up at 4 a.m. to do webinars targeting Australia, and that's the worst time. Does it work? Go ahead.
I was going to say, I knew I hear your lovely voice, Jeff, so I was bouncing out of bed at 4.
Yeah, you're like, you just couldn't wait, could you? Does it work on ASX stocks? Does it work in Australia?
Yeah, you can. When we're looking at stocks on the ASX, and this also applies for Canadian as well, we certainly do look for the presence of insider buying or selling. The Canadian markets also have this also as free available data that you can see that's reported. The scan works more efficiently in the US market because of the way that the data is sourced. But if you are buying in an ASX or Canadian stock, we'll show you how to get that data and look it up before you ever make a trade decision. So the scan specifically works for US stocks, but that's just one piece of it. The education, the training, how to find the insider data, what we're looking for, that applies to the ASX and Canadian as well. So you can. The short answer is yes, you can apply it.
TJ wants to know if the purchase includes a lifetime access to the indicators in MetaStock.
Jeff, if you're okay with that, I'm okay with that.
Yeah, okay. That sounds good to me.
Absolutely.
One last question I think we have time for. Is it insider buying and selling to be, does insider buying, selling have to be disclosed to the SEC if it's done on the same day?
They have 3 days to report it. So if the insiders have loaded up, they typically, sometimes you'll see it reported the same day, but the rules are they should report that within 3 days. So that's when and again, insider trading isn't a timing mechanism. I've seen situations where insiders have bought there's a stock that I'm looking to buy on Monday, actually, where the insiders have bought huge amounts of stock, but they bought it at prices that are about 30% higher than where the stock's at. So when they bought it, the stock was still kind of in momentum downtrend. And only now is it finally starting to turn around and looks awesome. So yeah, we don't need to buy on the same day that the insider buys. There's usually a few weeks window before the timing becomes perfect. So but the answer to your question is usually about 3 days. But what we'll wait for is then for the pattern to confirm, and that's where we get in. That's how we manage our risk and set our targets.
Perfect. And that's the end of the questions. So let me go ahead and do this. Thanks for coming. It's good to have you here.
Absolute
I appreciate
pleasure.
your time, as always. And I'm counting. I'll turn on my camera and I'll count how long it takes for the control room. They're getting faster. So, John, great to have you. We appreciate it. We'll see you again soon. All right, let me go ahead and get a little bit resituated here and present a control room. Should we do another giveaway?
Control room here, ready to give another giveaway.
All right, let's see. Let me pull up the spread. Well, actually, I think I'm going to do this in a different order this time. Oh. Let's go in and let's say what the prize is, and then that way people can get excited about the prize, and then we'll tell them who won.
I like it. I like this this change in protocol.
Okay, so I'm going to give away the Sunny Bands for MetaStock. Do you know Sunny Harris was here yesterday, right?
And did an incredible presentation.
And she showed her Sunny Bands for MetaStock,
yeah, the Sunny Bands,
which
yes,
she just finished designing.
Cool.
Yeah. Do you remember how they were different than Bollinger Bands?
Well, I would tell people if they want to know the difference between the two, to go watch Sunny's video.
To watch the recording. Should they like and subscribe while they're watching the recording?
It's an awesome video, so they should like it and then subscribe to get notified about more videos like it.
Yeah, they should definitely like and subscribe. Okay, so the prize is going to be the Sunny Bands for MetaStock, created by my friend Sunny Harris. And let's get a number. So the range again, just to remind you, we're going to go for anything between 1 and 10,400.
Let's go with 789.
Ooh, that's a low number. Okay. And the proud owner of Sunny Bands for MetaStock is Jim Hosick.
Jim H, you mean?
Jim H, yes. In
H.
The USA. Jim will be contacting you in terms of how to take advantage of that. And yeah, I did mean Jim H. All right. So, thank you very much, Kelly.
You're welcome, and congratulations, Jim H.
who we did not just invade their privacy of. Want to say thank you to Stocks and Commodities for sponsoring the event, the CMT organization for doing it. A quick question for the audience. How many people, I'm curious as to how many hours of sessions you've watched so far this week. So if you'll chat that in the chat or in the YouTube chat, I'd like to see that. And while you're doing that, let's go ahead and talk about CMT, and then we'll get geared up for our last speaker. So, all right, CMT Association. Awesome, very good. Thank you for supporting the event. Sponsors, CMTassociation.org to find out more information about their accrediting program. They do work with a lot of, let's say, high net worth frequent traders, banks, institutions. They also have some individual courses that they've put together for individuals that are interested in trading. They specialize in risk management, quantitative systems development, portfolio management, and applied behavior finance. So anyway, I haven't seen anybody post any time yeah, in terms of how long they've been here, but I do hope you're enjoying it. I do want you to actually say how long you've been here, if you've been here for how many days you've came, about how many speakers you've watched. Let me know in the chat. We are, of course, MetaStock. We've been showing all charts in MetaStock. We've been talking about how you can use MetaStock as a prospecting tool to help you find better trades. I might have mentioned it, but it's been rated #1 in its price category for only 28 years in a row. I love MetaStock. Oh, I missed the market close today. I use it every time I trade to scan, find opportunities, see what I want to do with markets. You can also use it to test trading ideas. We do have our patented forecaster in there. By far, and I'm biased. I love working here. I love the software. I love the environment here. I love the culture. But I'm also very proud to represent the company. 28 years in a row, it's been rated #1. The offer that we're doing so that you can try the highest rated software for 28 years in a row is if you pay for a month, we're going to give you a second and a third month for free. And that means if you do it today, you're going to go December, January, February. You'll be running MetaStock until February 18th. 1-800-882-3040, metastock.com/salespchat, metastock.com/conf-promo. All right, very cool. Our next, nope, that's not it. Let's go a little bit further there. I was a little bit back in my presentation. Our next presenter is Peter Dala. Peter Dala has a lot of history with MetaStock. He created a product that was very, very successful called the FX Traders Advantage. He just recently kind of rekindled the relationship with us. He's been using MetaStock, but he's been working kind of on a new program called Magic Trader that he released. I think it's been about, I'm going to say 14 months that it's been available. It was in beta for a little bit, kind of a limited release. We released it, if my memory serves me right, which is almost none of the time. We released it back in January, the Magic Trader product. It's a really, really good product. I enjoy the way that it kind of color codes things and kind of helps make it easier to see what's going on in the market. Peter does a great job. I want to welcome Peter here today. Peter, how are you doing? And this is, hello, Peter.
All right, how are you?
Good, good. I was wondering if we're doing very well. How are you doing?
Thank you for having me today. Thank you.
Of course.
And thank you to Kelly to arrange this summit. So let's get started.
All right. I just turned the presentation over to you. So
I thought you were reading disclaimer, I guess. All right. You're aware of that we started late, so am I allowed to go a little bit over?
Yeah, of course, dude.
I don't rush myself. All right.
Yeah, you're fine. Don't feel like you need to rush. Don't feel like you need anything like that. We're okay. You're the last speaker, so.
Yeah. Which screen are you seeing it?
I am not seeing a screen yet, but now I am seeing the presenter view of your screen.
All right. So.
And I can show you. Let's see. There's 2 ways to change it.
Yeah, we're changing it.
Okay. All right. I think yours is 8, if I remember right.
5.
5. Okay.
Yeah.
I have it written down actually right here. So,
right.
All right,
So,
Peter, we can see the right screen.
Okay, perfect.
And if you have any, I'll be right here if you need me.
Okay.
I'm going to get out of the way.
All right. Thank you very much, everybody, for coming in. Okay, my name is Peter Dalal, and we appreciate what MetaStock is doing it. So let's get started. So today we're going to talk about a couple of topics. We're going to talk about disclaimer after this because all the disclaimer. I want to briefly telling you that disclaimers are a couple of them as per the lawyer's advice, but we're going to read important points out of that. Copy of these disclaimers are available to you through MetaStock, or you could go to themagictrader.com site. The disclaimers are there. Also on Facebook, there are disclaimers. And if you ever communicated with me, you get every email you get it from us, because that's required by law. Nothing I could do about it. And we are registered also with the federal government. So today we're going to talk about the goal of this webinar. We're going to talk about magic ingredients. Then we're going to talk about Magic Trader, how it was designed, a little bit about my daughter and I. Then we're going to talk about bullish and bearish believers, what these things are. You can't search that because these were newly invented first time in entire world. We filed for patents. So a lot of things look unfamiliar to you first time, but once you understand it, you will be fine. Because I like to invent new things instead of copying others. And this way we stand alone, right? Different than others. And what I learn on a Wall Street, I represent through my inventions. And also things I learn from smarter people than I do. So we incorporated many of my real-time experiences into this software. So a retail trader like yourself can get benefit of all what I learned. And there are thousands of secrets I learned in last 30 years. Some of them nobody wants to talk about it, and we somehow hide behind all these symbols. So let's get started very quickly. I'm not an investment advisor, neither I'm a security attorney or any kind of attorney, or I'm not an accountant. Trading is risky. Only genuine funds should be used in trading. Should not use borrowed money. Trading, as I said, is risky. Any trading of any security, you are going to lose money, and we cannot guarantee any kind of profits. Also, it is true, there are some strategy, you could lose more money than you invested. So you have to be conservative instead of having gambling style. Just like previous guy told, you can't put money in everything. You got to risk manage correctly. Now, CFTC rule 4.41, my company is registered with CFTC. Later on, I'm going to give you my ID number because that's we're supposed to disclose. So we try to follow what lawyers advise us. So in CFTC, the important point is all trading programs falls under stimulated kind of category, and they are hypothetical in nature, and they are not typical. So what you're going to see today cannot be 100% reproduced, and we cannot guarantee you any kind of performance guarantee or losses. According to agency, we have to balance profit and loss all the time. So if somebody's telling you you could guarantee making 100%, I would rather them to check a little bit with the regulators so they don't drive you crazy. Now we have this software with the options. I often talk about options, including we're going to talk. We have plenty time. After me, there is nobody speaking, so we could go a little bit higher. We could go a little bit more on time. And if we have time, we're going to talk about a little bit about options, how you could trade with Magic Traders. But options are very risky. Some of the strategy, right, naked calls, naked put, unlimited risk. So you could lose more money than you invested. You must read these characteristics and risks in standard options. Now, I just heard a couple of days ago that there is another supplement they release, OCC, after 2018. So we'll get a copy. I just want to mention to you there is some changes which I have not read yet, but if you get hands-on, please read it. Now, as far as my company is concerned, it's not investment or any kind of advisory company. We took exemption, even though I'm registered. I am not advising anybody on a personal level. And trading is risky, and please consult your own investment advisor, even though after getting Magic Trader. Now we have a lot of patents, claim, patents pending, patent already in examination. We have trademark, service mark, all kind of stuff, intellectual property. Please do respect that. Now, this particular law came within previous administration about copyrights, streaming copyrights. So please respect that. It's a felony charge, so it's not worth it. Now, this is our NFID from the form 352991. We are registered with CFTC, which is Commodity Futures and Trading Commission. And we are not making any kind of guarantees here. And trading is risky, as I stated before, lack of liquidity in some of the instrument. You could get stuck in that. So you got to see the risk factors involved in all securities or any kind of futures or anything you're trading, including cryptos. Now, we have some people in the audience will be talking about Magic Trader, I guess, if they are there. Their testimonials are also hypothetical. Even it is true, they cannot guarantee that you're going to make money with Magic Trader. Some people say, you are here to talk about your software, but by law, we cannot guarantee any kind of performance also. Now, the most important things what I learned that like we want to cook something, so we go to the kitchen, and how it's going to make it feel good when we test it. So we go in a kitchen and you add salt, pepper, and whatever. So you need some ingredients to get a good feel out of it. So same thing happens in trading. You got to find certain ingredients which make your trading experience the way in which you feel the direction it should. And Magic Trader has more than 5 ingredients, but the most important quick learning is the one I'm going to talk today. And as the market is bullish, and I spoke to Jeb, he said, everybody wants to go to the moon. So we primarily want to focus on bullish side. That doesn't mean the software does not work. I like to short the market, but in last few years, it's very hard, right? Because market pullbacks are very shallow. And if you are not experienced trader, you could get stuck in there. That doesn't mean you cannot short, but the premiums and everything is different because everything going in a bullish direction. So we're going to talk about bullish direction also, a little bit about bearish direction. Now, the additional goals of this webinar is to eliminate technical analysis time. I'm not telling eliminate all the technical analysis. Don't do misinterpretation. There are a couple of speakers, I was listening to them. They got a good stuff. So we are not here to knock other people down. But what we trying to do, and this idea came from my lifestyle I'm living since I came, multiple businesses, right? That's in our blood. Nothing I could get, rid of it, because that's the way we were born. When I was born, my father had 16 businesses. So this is the way we were trained mentally to have more than what probably we could handle. But we have a system. I'm an engineer. So I work with the system and still be more effective. But we are going to show you how you eliminate your technical analysis time with these 5 ingredients. Then the biggest thing I learned on Wall Street was I was reckless. Let me be honest with you. I have money, so I could take any kind of risk. But I was trained by smart people. I cannot do those things. Even though you have $1 million, that doesn't mean that you got to put all $1 million in 1 or 10 trades. No, you can't. You got to learn the risk management. My first 8 years of prop trading, this is what I had to learn by my undesired way. My manager put me in a spot that you are reckless, you are a gambler, right? You have money. That doesn't mean you got to put all this risk in 1 or 2 securities. So they took away my rights to trade more than 100 shares. So I wake up and my wife was trading next to me. She's also a trader. Some people don't know. She's probably a better trader than I do. So basically, I wake up and in 8 months, I had a total transformation of my thinking within trading desk, right? How they are as a professional do trading. And it was very hard lesson initially because I had to control my emotions. So the biggest problem I had was emotions. And my first 8 months, majority time, I had to learn how to control emotions regardless how much money you have it in pocket. Very, very hard lessons. But I was fortunate. Some of the traders like Linda Bradford Rasky and Christian, everybody helped me out. So become a better trader actually. We're gonna use two ingredients and one catalyst for trade entries and exit. I'm gonna show you. So it's not only five ingredients by hard and fast, you got to have it, but there are other ways I'm gonna show you also today. So you can't miss the opportunity. That's the whole idea. Then we're gonna show you how I scan these five ingredients using a wonderful tool MetaStock has given, and that is working very, very fine for what we're trying to do here. Now, is the same slide arranged a little bit different, and I want to introduce you. What are those five ingredients? We all know about the kitchen here. So what is happening on a Wall Street side? So let's talk in the middle first. In the middle, there is a thick vertical line, right? Then there is two lines parallel and third line dotted line. And there is a triangle, right? Then there is a thin line, which is also vertical line. And this is the ribbon, but we call them as the horizontal time risk or ribbon, whatever you want to say. Either of that is fine with me. That's related to the time risk while you are trading. So that makes all five ingredients. And what I did, I gave the number 1, then 2, 3, 4, and 5. And 2 has 3 lines, so that is 2A, 2B, and 2C. In real trading life, in reality, this vertical thick line is the actually direction line in trading. Then this is part of the health indicator. We did it from scratch and we filed for patent, and it is called health indicator. So it's just like a cardio you doing with the doctor, right? And they check your heart and whatever it is, right? So or CAT scan. So I always wanted to know, it looks good, NVIDIA going to the moon, but what is internal looks like in reality for their security? I want to know what is going on inside, not outside, so I could manage my risk. And this is why the whole health indicator was developed from ground zero. It took me 6-8 months to do it, right? And it was very tough for me to do it because I'm not a programmer. And I don't want to tell Jeff my secrets. Don't take it wrong way. I already give it to MetaStock, so it doesn't matter. But at that time, I had to file for patent, and we got to keep secrets. So basically, these 3 lines is in a health indicator. Then there is a green spike, which is a vertical triangle dotted. That is a bullish entry spike. So you could practically enter. Then this is a thin line, small one, which is a pure health line. So sometimes, right, what is internally, you try to do interpretation. So whole juice about inside is represented by one line, right? So of course you need parallel lines and all other things to meet, but this has overall health of a security, whether it's in alignment or not. So I wanted to know quickly instead of being a doctor, because I'm in a rush, right, all the time trading. So I come up with this idea. And horizontal time risk, as I stated before, all the risks related to time are incorporated within this ribbon. So this is what it is in a nutshell. And this is one strategy. It's universal, right? Trade with anything you want. As long as you have this in your favor, you have more chances in your favor to do a right trade, but no guarantee. Now, let me introduce you Magic Trader a little bit design side and what going on. So always we care about as a trader, dollar sign, right? Price, price, price. But in reality, most of the people, 95+ percentage people who are trading, they forgetting the risk part. My first 8 months, which I feel very uncomfortable, right? With these managers shouting at me, you are a gambler, taking too much risk. You have no idea, right? And one time he showed me the door. If you don't want to risk manage, don't come back. It was the reality. I had to change. So basically, this software is designed based on the risk of the security. And I discovered not 100, not 200, not 500, much more than those which I have some documentation I showed to people in training in my alert room. There are a lot of hidden risks. Traders don't even have a clue about it. So long story short, this software is risk-based software. It took, after giving my whole what I did to a MetaStock, it took them more than 14 months to even prepare this Magic Trader, and it was a complex according to Jeff Evie. And it is a complex software inside, but you don't need to learn all these things. Keep it simple. Now, we identify the risk, we analyze the risk, right? They control the risk. Risk transfer is big thing because this is what make me very happy. I could see the fight between bulls and bears, and where is that line where power is transferred from bulls to bear or bears to bull? It is very important in trading. So my drawdowns are very low. So we figured all out, right? And we have called black candles and a black ribbon, and that's where the fun takes place. Then software has an inherent capability of doing several designation, 3.1, 3.2, 3.3 on a scale of 1 to 6. So we could also find the right entry to reduce the risk in trading. And software does all the risk assessment by itself, right? So the whole thing is all about risk in this software. Now, another thing what I learned, that I want to get in there when there's a least amount of drawdown. So I don't have to worry about sleepless nights and this and that, right? So I was one of them, cannot sleep sometime when you take a $10 million position, you're scared, right? Practically, you are worried. How about 20 million? Another scare. So I did not want these sleepless nights. So what we did, we figured out what are those lowest risk for bullish side and bearish side, and figured all out. So that's called the pinpoint entry. Question to many people have been asked, right, in different webinars. This software works on only stocks? No, I really started this software real-time testing with Forex. Then I was trading futures. So that was my next victim to try on futures. Then everything else. And the break came in. One of the guy I know for a lot of years, right, told me that his son is a fund manager in Bernstein, and everybody's losing money. You have this invention. Can you help him out? I said, of course. So in 15 days, he was positive. So I really did not knew with this software, I could do portfolio fixing. And we figured out, right? And I invited him to my house. In 15 days, he was smiling from negative, a lot of money negative. And he was only one in that bad timing for Bernstein. did positive in his portfolio management. So I really realized the power of Magic Trader on an institutional. And since then, we got involved with institutions, advising them or doing all this stuff for them. Right? And I had a fun for many years. And then eventually Kelly really made a decision we should give it on a retail side. So that's the history. So basically it works on every single thing, including crypto, right? We have done on a mutual fund too. I used to do those things when back in days when we started. There's a company in India, right? They had a mutual fund. So I was advising them, one of the biggest mutual fund company in India, using Magic Trader. And I spoke to India about that too. So Magic Trader substantially cut down the time to analyze your trade. And this is what I was looking for, more time with my children. So it is helping me. I reduced a lot of my responsibility, people running business for me, right? And so I could trade. That's the idea. Now, basically, what we discover as an inventor, new thing, I wanted to know when really people believe in pulling the trigger, not talking, just the second they pull the trigger, we want to know cumulatively compared to buying and selling where the actions are in a real time. That's what we wanted to know. Who believes in really going long and who believes going short? So this way I could trade the direction where the balance is more, right? So that's what this believeness concept came in. This is, we wrote the definition while patent filing, right? And this is a new concept when really people believe in pulling the trigger. So we figured all out. Somebody will say, oh, artificial intelligence. I could claim a lot of artificial intelligence. At the end of the day, we got to produce it, right? You could name anything you want. But bottom line here, people really believe, and that's what I want to know. Because as a trader, I want to go long when the people are majority going in that direction. And I want to know within fractions of seconds. And Magic Trader helps us to do so. So Magic believers. So you are one of the believers. Every one of you are believers. One day on the bullish side, one day bearish side, or in between. So bullish believers believe in higher prices. So we are willing to pay higher prices. There is no free ride on a Wall Street. If trend is your friend, then you got to pay the price. If you are going or looking to go on a top of the mountain, then you got to carry your weight. And you got to believe in there, right? So we're going there with everybody else. So we're going to pay the price, either getting tired or paying more money. Nobody wants to pay more money, trust me, including me. Now, I wanted to know what is that line where on one side everybody's going long, other side they're going short. And I wanted that line of sand, and it is true. My 6 months as a being non-programmer, right? I had no clue, right? I fall asleep when I read MetaStock formula primer. I said, I can't do that. I got to just jump into that. And I do believe that Jeff helped me one little formula. And then I said, all right, I'll take care of myself from that point. Little simple thing he showed me. I had no clue, right? I never wrote MetaStock formulas. So 6 months it took me to figure out this particular line, green line, 6 months. And then very immediately I created a line where I want to put a stop. So I don't need to worry about trailing stop, this stop, all kind of stuff, fancy stuff we use on a Magic Trader, OCO order. They keep it simple for a little guy. They have enough to learn. Right? So we don't want all this stuff. Simple thing, if it closed below this red line, we are closing the trade. If it closed above the red line, we closing the trade. And that's it. It's not a big project. You got to make it. So anytime prices are flowing above this green line, risk we are taking to go to the mountain, right? We're carrying the weight, and possibly we could fall, right? So if everybody's going, we're going. So what is that line in a sense? This is the green line we call as a magic line. And this line has nothing to do with all the lines, right? You are used to, has nothing to do with that. In fact, every time frame has its own unique lines. Because what I discovered, you can't use the same line practically. And this is based on a beliefness. So it has nothing to do with it's totally different design, right? And it's very simple. And this magic line has their own magic. People who are using, they will tell you they have their own magic. So basically, simple way, if it is above line, right, we're going to the moon. If it is below, we're going down. So risk is up. So people sell up the market. So you could short it for education purpose only. Right? Otherwise, I will get in trouble. No advice. Now, sorry about the traditional indicator. I was one of them teaching for Thomson Reuters. Jeff, Kelly, and everybody was with me for city after city and teaching people this thing. It is great if you have too much time. I don't have time. So do everybody else. So I said, hell with everything else. I'm going to make it simple. So I don't need to use, that doesn't mean we disrespect them, right? At one point, I taught them for months and years, but it takes so much time to analyze all these things. And I wanted to have it simple way. So I could do other things and spend some time. And it is true today after 6 o'clock, and people in my alert room knows after 6 o'clock, lights are off. All right, I will be sitting here doing something else, but no business kind of things. Unless Kelly calls me, then I'll answer because I love him. It is true. I answer those people's phone, but that's beyond business. They are my friends. So basically, that gave me a lot of freedom, Magic Trader. So analytical time, right? Magic Trader does, and I do trading. That's it. So basically, we created this thing. I should put copyright thing is underneath, right? Somebody help us, right? So my team helping us. So there is a little color candle here. And I said, wow, we're going to talk about it in a little bit, right? So no disrespect to any of the speaker here. My problem was the time, and I figured out how to eliminate all this traditional technical analysis, timing. Let me speak about my daughter and I, right? We won't take much time of yours. My daughter, Surbi, right? Since she was 9, she was involved in all kind of businesses. So you will see a bunch of things here because these are the businesses we run. So my children are trained at any given time. Employee don't do things right. They jump in and rescue the mission. That's their job is, and control the money, right? Because I don't have time for all this stuff. So basically, don't get intimidated. This girl, age of 9, exposed multiple businesses at the same time, look, just like I did with my dad. So she has a long understanding of many businesses, and Kelly and Jeff have dealt with her, so they could tell that this girl has all the experiences, right? And she has a Series 3 and 34 license. She got married, so now she's working for Goldman Sachs. So a little bit about me. I've been trading before even I came in here. I was a long-term investor, right? Buying shares in India in a good companies like Reliance and or good companies, Dala, right? Elecon, those kind of things. And when I came in here, I got involved. I said, I got to have one of Wall Street presence, right? So I learned a lot of things. And I gave my money to the bad money managers, and that also motivated me to become a better trader because I knew they don't know good job. People in my alert room, I still have few of them left, right? And they don't listen. Trust me. I have a license too. So I know what they're doing, and I can't handle this. What they when with day trading. So I fire many of those, and I got my own license, and I did not want to be a broker because that's not in my blood. I wanted to trade with the institutions, do partnership with them. And I wound up doing some, right? So I never was a broker, but Series 7, everybody get that license, and otherwise they don't let you do too many things. So that's why I had a Series 7 license. I was structuring a deal, many things behind the scene, right? Formation of Citigroup. Before that, I was involved from day one in a travelers insurance company acquisition. So I learned mergers, acquisition, then trading, and meeting all these geniuses on their real trading days where they don't let you come there. For ordinary people have no access to those. So I really learned a lot of things they're doing it by being there. And then I started trading with them. So basically, I had a lot of fun. And institutional trading is different than prop trading. People don't know that. And how institution placing orders and how they short the market, how the institution really move the market, I witness it's sometimes scary. You're talking about 10,000 shares, that's a joke there. They come with a truckload. Now let's talk about 5 ingredients, right? So we are again going to talk more in detail about 5 ingredients. You already seen this. So the whole purpose of this webinar for you, by the time you go home, you already know these lines. And if you have gone to the high school, these are the only lines you should remember out of everything you learn there. So this is green vertical line or a green crayon. So at least we learned before high school, but let's give people benefit of doubt. Thick vertical line, it is a direction line. Then 3 parallel lines. One is purple, one is blue, one is dotted. That's bullish health lines. Then green spike, it is a entry spike, which is a dotted triangle. And pure health, thick, no, thick is a thin line, but it looks thick here. But you're going to see on a chart. So thin line, and it is small, and that is a pure health. So internal health is looking good. And green ribbon, which is controlling all horizontal risk. In reality, as you go more and more spending time with this trend, risk is higher because prices are going higher. Common sense, right? So the risk getting higher. So let's talk all 5 of them on a chart. So what we did is the same thing, but how it will be looking on a chart. So any given time, you could identify them. So we're going to talk about bullish direction line, number 1, ingredient number 1. That's the line we saw on a paper. That's the line here, right? That's the vertical line. That's called direction line. And this whole thing is called health indicator, right? Or health window, because every pan, MetaStock says window. So it's a health window. And we call this thing as a spectrum. So while design phase, I always in mind, I like right space, I like ocean, and I wanted to create a software which has favor of both. So in my eyes, these are all different color of fishes swimming in ocean with the different tags, right? So one is a goldfish, one is a bluefish or whatever, right? So this is how I see it. And the whole thing is like galaxy. So that's how this software was designed, right? There are 9,800 and some components in there. Scary, but you don't see them. So what you see here is only candle and little symbol, but behind that, there's a mile-long formulas exist. So don't get intimidated. They all have a risk purpose there. And you don't need to worry about learning. You focus on your 5 ingredients. So let's talk about ingredient number 2. So you are on high school lesson for a Wall Street trading in practical life here right now. So this is the health window we talk about it. These are those 3 parallel lines. One is a purple right here, one is a blue line, and there is a little thin dotted line. The idea here is it's a zero line. As long as two parallel lines, which they teach you in high school, what is parallel line, two lines have an equal distance. So those two parallel lines should be about zero line. That's about it. You got to learn it in all the whole health indicator, right? And the vertical line we already talked about. So they exist here. Ingredient 1 is here, ingredient 2, right? Let's go to ingredient number 3. Ingredient 3 is that dotted triangle we call as a spike, or is also, in this case, bullish entry. So you have entry clear. When you get your access to MetaStock, it is not what you see on traditional MetaStock triangles you're seeing probably. This is designed a bit different, and the base is important. We call anchoring. So then risk is fixed, right? That doesn't mean that you cannot trade with half of that. So we scan it and it shows half, right? Health is doing good, right? I'm in, right? And there is a lot of tricks there. You don't need to learn all, but I'm just warning you if it is happened. Oh, triangle is not there, but you could still trade with that. It's a little risky, but from experience, I take a shot. But in your case, you wait until it gets anchored. A little bit less money is good, but it's anchored, that means it's secure, right? So it's a matter of at the closing of the bar or at the open. That's what it makes a difference in your bottom line. So don't get confused. Just simple. In your case, you could enter here when it's anchored right here, where my arrow is. So this means all will line up at the same time. Number 3, that's a pure health. So in this particular chart, it is there. So we are in. So out of 5, 4 are in. Parallel lines, vertical line, triangle, then little line, vertical line, pure health is good. Internals of whole health window is good. We don't need to be a doctor. Now the famous ribbon, which is horizontal time risk, it is in green, right? Green, green, green. So all are good. So we are ready to dive in. And suppose we dive in here, look what happened. This is how it works. And this is the line in a sense. Oh, Peter, it's not clear. All right, to enter here. Peter will enter here. You could enter here. Doesn't matter to me. You still went there a little bit higher. In this case, few dollars from 14 bucks to 17. This is not bad in 1, 2, 3, 4, 5 days. So in here, you don't have to do too much analytical work. 2 parallel lines, vertical line, triangle, this vertical line, everything good to go. Either you go here or here, not going to make a big difference, right? Less money is okay, but you are scared, okay, then go here. The software allows you, right? And this is one of the things was bothering me. I leave money on a table so many times on a traditional way, but the arrow came in, I missed it. I don't know what to do. This symbol telling me here, we're going to the moon. The circle here, number 3, is a forecasting tool, which Jeff permitted at the last moment. I really wanted to make life easier, but some people say it's overwhelming, but it's telling you we're going to the moon, so why not? But if you don't want it, turn it off. That's my stance on that, instead of you getting overwhelmed. But this is to help you. If you miss the boat, or here also is telling you we're going to the moon. No guarantee, but it is telling you. Did it? It does, no guarantee. This is where people missing the boat. I'm serious. This software was designed by real trader, real institutional trader for institutions. And later on, we're giving to you guys, so you could make a few bucks. But these tools are valuable, priceless to the institutions. Priceless. They're betting millions of dollars on this symbol. So why not? But if you want, you could turn it off. So as a reality, we have to also worry about going short or market going down. So these ingredients work the same way, but in opposite direction. So let's see very briefly. 1, 2, 3, 4, 5, all 5 ingredients. Opposite to vertical green direction line, here is a red line. Here is 3 parallel lines, but in this case is below zero line. Below zero line, but they still need to be parallel in order to take the entries. This is the red spike, which is an entry spike. We're going down. Pure health internals are no good, right? So we short this or we buy put options. And this is horizontal time risk for bearish believers. And that's about it. If you see that, and you don't need to be a rocket scientist to figure it out. So in my honest opinion, once you recognize high school stuff, you don't need to be a fancy trader. But what is happening, the traders in my alert room now, they want more and more and more and more, because I started revealing all the secrets, right? And I wasn't going to tell this thing. We have technology. You're chasing all these meme stocks and every damn thing. We don't need to do that. My software tells you before it happens. If somebody's in this audience, they are eyewitnesses. Please write here so Jeff can later on talk about it, or he could read these things. So they're eyewitnessing these extraordinary things. Jeff even don't know. I have it, but I have a fun doing it. So we going extra mile, a little edge over the next guy. That's what you need, right? Because everybody's going bullish, but your risk is low, and this way you could make more money with the lowest risk. That's the whole goal of the software. People can sell every courses they want. We are not selling courses. We make people real-time traders. That's my goal is, and we are doing it. Now, the other thing, 5 ingredients, but you could take 3 of them or 2 of them and add something with that. And that's where a lot of secret stays within these candlesticks. So this is yellow bar. This is a turquoise bar and a black bar. Black bar is the place where transfer of the risk takes place, and institutions are there. And I'm showing them real-time proofs, including this morning, right? It is amazing to see those things, right? And Gamma squeeze also happens around that time too. Not all the time, but I witness it where it happens. It's funny when it happens. So turquoise bar has its own behavior, right? We call them catalysts. We teach you what these functions are. Yellow bar is very famous. It's not the same yellow bar you see on other people. We are having yellow bar since 17 plus years, right? And it is in a pattern. So people cannot do things what we can do, right? And we have patterns. So long story short here, this yellow bar, right? It was harder for some of the people in MetaStock stuff to digest. I have tons and tons of proof institution coming in at that time in real time, even dark pool, and we have timestamps on that right from CBOE data. Can't make things up. When they take option position, we know, right? So these are not just colored bar. They have significant. It was designed to warn you that no more their direction. We are going bullish, and it's the lowest risk entries. Get in there. You don't need to analyze. The bar is there. There's a method to the madness. We're going to teach you all, right? Get in there with the lowest risk, then the damn thing takes off. And same thing with turquoise bar. And it is coming many times over and over again. When a trend, this gives me new opportunity to get in there. So you cannot compare this yellow bar with anybody else bar, because these are specially designed yellow bar for a lot of institutional pages. How I know? Because I was one of them. So MetaStock did a great job. They allow me to give you guys 39 plus Explorer. So any way you want to slice this thing, you could slice it. So for our purpose, we are going to use Find Ingredients Explorer. So we could find them. And for 2 ingredients and catalyst, after the release, they were nice enough to add this one. Kelly and Jeff gave me permission. So that helps traders. And we want to give you more stuff to make life easier in trading. That's the goal here, not to overwhelm you. So you start with few things, make some money, and then you could go and use other things, right? And as you can see here, different time frame, right? Magic lines. Daily is different, 60 is different, 240 is different. Why? Because mathematically it is supposed to be done that way. But people adopt traditional stuff. They don't want to go through the pain. Me as an institution trader or a prop trader, I want more accuracy and wanted to design something which shows me believers, not the traditional lines. That was the purpose, to show believers. I spent 6 months nonstop and painful and sleepless night to find those lines. Just think about it. And it is also true. I did not know what the hell I was doing because I'm not a programmer, but I figured out. So this is the Explorer. This is what you get from MetaStock. I didn't design this. Only we put the formulas between 12 columns and filters. That's it. But MetaStock designed this. So this is not ours. We're using as a platform to find the trade opportunities. So same find ingredients, same symbol. Direction line, bullish. Then health, the health indicator on the top is bullish. Spike, right? Green spike here, right here. Then green pure health is here, and green ribbon. And this is the same way on the other side. It's a bearish guys, right? And volume, because technically I don't trade with the volume, but lately, because we have technical trader coming in, back in days, volume is the king. So we'll respect the king. So we put while releasing the volume. Magic Trader was designed for Forex when there is no volume accurate data. And I traded since 1999. I started Magic Trader in 2003, 2004. Then we finished tradable, what do you call, expert, right? And started using it. So I did not use volume until this release, to be honest with you, on a Forex side. Because we don't have a real volume data anyway. So it's all useless. But in stock side, yes, it is true. Large volume helps traders. So we are here to help traders, not to challenge or have some kind of ego trip. Simple. If they like it, we have it. I wish MetaStock put 10 more columns here, so I could put more stuff. So I don't have to do, instead of 40 Explorer, I will have only 30 Explorer. I will still want them to put 36 anyway. Because more I see horizontally is better as a trader, right? In my front of my eyes, like a big Excel sheet. So hopefully they do that one day. So basically here XPE, EXPE came in. So we're going to talk about that chart in a minute. So what I did is to simplify for new guys. I took this information, enlarge here, and again get you that theme in the last 20 minutes you got used to, ingredients 1 to 5. So you can't miss that. You have to understand that. So this is kind of enlargement here, and the same kind of drawings here are 5 ingredients. Not a big kind of new things we put it in here. Same thing, repeat. That's what Jeff says. More repeat you do, more they understand. I understand it. So we explain that way. So what happened? Let me go back so people don't forget that. So one of these security came in a 5 ingredient scanner is the EXPE. Right. So what we did is we put that information on 11/5, the same date. You see again, because there are people get lost. So where that came from? 11/5 is the date the 5 ingredients came it, right? And we scan it on 11/9. But MetaStock has a beautiful thing, right? So this is the date 5 ingredients started lining up, 11/5. So this is what the chart look like. Vertical line, two number twos, which is those parallel lines, the value has to be 4. So this purple line is 4, and 2 is the blue line, value 1, and they are above 0. So you could put imaginary lines that are horizontal, or you could wait another day to get an entry, right? Pay a little bit more price. Now, as I said before, the spike is here, and it's not anchored, but health is there, this is there, and this yellow box. So the thing I talked about, one of the catalysts and 2 ingredients are good enough to take the entry, right? Sometimes it may not work it. So you wait for a day after, you pay a little bit more price. Experienced traders in my room jump in here. 5 ingredients matches. Major 2, spike is on its way, direction line is there. So 3 plus catalyst. Let's go. So this is what it is, and this is after a few days, which are 5 trading days, 1, 2, 4 trading days, not 5 trading, 4 trading days on this chart. So tech guys say, oh, it's a double topper, but we look at that PB symbol. Minute it comes in, you got to get the hell out of that, because then we know main risk reversion concept of the magic line. Eventually, they will come next to the magic line. I am out. I want to make money. So instant here, when you and I, as a trader on an institution side, we were trained. Take all the trades between 3:45 to 4 o'clock and go hedge completely, equally. All right. So we place an order, right, around 3:45 to 4 o'clock. So from that point of view, right near to the closing time, let's assume that I entered at $182.17 right here. Now you got to trust the software and close your eyes. But we are also looking into this, or we stayed in there, next day we stayed in there, and it made and failed here. But PB sign came in. So make believe that you exited around that price. So what was that price? Theoretically, 195.85, right? Some tacky guys will take double tops and failure of that or whatever. While taking the profit, you don't need to wait for close. No, because money is there, take it. That's my whole idea about this market. However, you could take a ride until spike comes in like this, but I don't have patience in this market. I really see the volatility. Money's on a table, put a tight stop. You don't need to be hero. People say, oh, put the tight stop here, but put it on table, and it said pull back can bring it here. So now you made money, or maybe lost a little bit if it comes in here. So I am the first one to get the hell out of that. Or the tight stop just underneath. Then if it goes down, and you could always re-enter. And this is the nature of this market lately. It's so screwed up, right? That doesn't mean there are no opportunities. This came from the opportunity a few days ago. But me as a practical trader, right, I will take the money or always re-enter, right? That's my, so I don't like to be day trader, but kind of screen trader, I guess. So I could make few bucks. And I will tell you, I like to trade options and with the spreads. So as I told you before, here it says buy the call option. What happened here? It moved $13. Suppose it's a delta is even $56, so $600. How many days? Roughly, okay? So you got to see the option prices too, but I'm just calculating hypothetically. How much work did you do? You buy call option and then get out here, right? And you buy, I like to buy in the money, right? So these are the option trading. We are not here to teach you that, but the software does things for you. Right? So you got to understand that. And option big bull under the catalyst, that means we're going to the moon, no guarantee. Right? So you got to see through it. Some people are overwhelming. What is the overwhelming here? It helps you to make your decision very quickly. You saw the bull. Who cares how the bull came in there? It says call option, right? That's it. We are, instead of buying security, I buy call options. So I got to put less money and better reward. That's my goal. And I, in this market, buy call options. It's not like I don't buy. I like to do spread. Then I could stay a little bit longer. When it pulls back, I'd buy one leg back and I'm back in business again. So my cost is low. So those kind of strategy I do use. And we discuss those things in my alert room. I spend a lot of time because at the end of the day, less money from pocket, because there are so many traders in my room, they are not kind of rich guys, ordinary guys. They can afford to put $40,000, $50,000. So they like to do this kind of thing. So I teach them how to do it. So I love options too. Software has a inbuilt. So we exited theoretically 195. So don't get nervous about this. It's a self-explanation here. Dotted line goes top of this candle or whatever you say, right? Some people use bar. So that's the high. So theoretically, 182, you take it up from 195, leaves you $13.68 for 4 trading days. Do the math. We don't need to, again, according to the regulators, these are all hypothetical. It's not typical. Not every trade will be like that, but just give you an idea. You find ingredients, catalyst, you put the trade, close your eyes. That's it. But we cannot guarantee it's going to happen. So let's repeat again on another HB, and it came on a scanner in a room. So I put it in here. So same thing, vertical line, right? 5 ingredients. One of them, vertical line, which is a line on a 1014 direction line. Then 2 parallel lines came in, which is purple line equal to 4 value, as I said before. 1 for blue line and about 0 line, meeting the criteria. Third criteria is a vertical spike, green spike. Yes, it's meeting the criteria. Then fourth is this vertical lines, pure health. It came in here. So the fifth is ribbon, meeting. On top of that, it has a catalyst, yellow bar. It can make things up here. You will see, and people in alert room will tell you, when things are right, it lines up by itself. Everything is perfect risk lineup. It is based on a risk, not on the price. I don't have to worry about, oh, what price is that? Yellow bar on all 5 ingredients. Time to take the action. Action speaks itself on a day 7, right where it is. A little bit higher than this. As long as we don't lose money, we don't care. So this is as simple it gets, unless you want to make a project out of this and get confused by yourself. So traders in my room, ignore everything else, right? We took out this symbol to make it simple so I could make Jeff happy, right? How it looks like without symbol. That was the project here. So we took it off. I just turned them off, nothing else. They are there, but you don't see them. I turned them off. And again, back to the basic, right? HBAN came in a scanner. This is the real-time scanning, and you could go and check yourself, right? And find ingredients match. And the catalyst also existed on a scanner. So that's about whole thing. Magic Trader is nothing but this little thing. And you don't need to get overwhelmed. Stick with the basic and you will do good. And this is the line in the sand. Look at this line in the sand. Magic line, red magic line. Prices are above it. All the believers are on one side. Line in the sand. You can't make things up. It is right there in front of you. Everything matches when trade is right. So how much technical analysis you did? You use the scanner, you find these things on a scanner. This is how we found it. 1, 2, 3, 4, 5, and yellow bar, open the chart. It looks good, go. And that's it. You don't need to do, sometimes it used to take me 3 damn hours to do technical analysis. And by the time I technical analysis, send the broker in the night time, right? My secret email, right? And by the time he pulls the trigger, things are different. We're getting in trouble. I had it, right? Many years I was frustrated. Then it turns aggravation, right? They aggravate you, brokers. They don't listen. And these are the things I want to eliminate. And I have no time for my own children. Well, with all this gives me passion more to trade very wisely. And that's what you have to develop. Less work, more production, and keep it simple. Otherwise, Magic Trader, it is like so many types of UFO you're going to see there. I'm telling you honestly, you're going to see all the different color fish and you're going to get lost. You don't need to get lost. Stick in here. Nothing else you should do for 3 months. Then you become greedy. Why this trader made more money than I? Oh, he's using this technique, right? One of the other explorer. Oh, that's why all magic lines are matching, nothing counter-cycling each other because he used magic line scanners. Oh, I didn't know that. It was there. But you told me that you don't want to overwhelm. So what I'm supposed to do? Now, 3 months later, you go back and study that and make more money. So how about the main time frame, monthly, weekly, daily, 60 matching, and they all have things above the line in a sand. And Magic Trader Explorer can help you to identify. And we're doing that. And I keep those right as a custom list. Thanks to MetaStock, they have that provision. So I don't have to scan 4,500 security optionable. I only scan which all these things lines matching. So I don't have that risk. That's the whole idea. So everything goes in my favor. So I reduce further risk. So some people say, when we could exit, we're talking about entry. All right, so we'll talk about exit. Again, find ingredients. Number one here, parallel lines, right? Dotted lines. They all checked in. The spike came in, right? And the yellow bar is there, so we don't need catalyst. Yellow bar is there. And it's matching here, pure health and ribbon. We're good to go. Yellow bar is there, so we don't need to worry about yellow bar. Its catalyst came before everything matches. They're in a hurry. And this is different colors. Don't get intimidated. They have their own roles. In our honest opinion, and it's been proven in the alert room, we have evidences. Institution takes positions here. I could show you so many CBOE, so many dark pool entries happening here. And the software has inherited circles. Here is number 3 blue circle. It's telling you we're going to the moon. And 99, I cannot guarantee, it does work, right? But try to get in initial stage. When you go further and further, risk goes higher. Now, these are the signs. Number 6, high risk, high risk. We're going a little bit higher. It's telling you we're going higher, a little bit higher, right? But too much risk. This is the first sign, failed golden bar. It's telling you we're going to go under sooner or later, right? Then pullback sign came in. When I see this thing, I'm out. Because deep down my heart, more you go horizontal, risk is higher. So I don't need to be a scientist. I don't need to be a hero. I need to be a businessman. Risk is high. We are out. We could always come back and go back in there. Eventually, you could see here, it dripped down. Direction line came in. Right now, if you want to short it, you have the same way. Fine ingredient has to match. Then you short it, not here. Otherwise, you're going to have a pain. It did not close below red magic line. Here, the entry order came in because it closed below magic line. So this was the short entry. So while taking profit, you don't need to be hero. Oh, I think it's still going higher. It is true. One of the guy in my trading room, right? I said, what happened? You told me you were in trade and you were making good money. Oh, I lost. I said, why? I had to pay electric bills. I thought I could get more $20 and I lost all. This is lost all kind of situation happened. It closed below it and then it dropped, big drop. Why don't you be taking profit when it's on table? You could always go back using market money instead of your money. So I learned lessons A lesson tells me if money is on a table, I don't even believe some speakers will not agree with me 50% and those things in theory is good, but I believe that I take up my risk. I could always go back. I have maximum money in my pocket. I'm not letting that money go, right? And I could use that money to defend myself instead of, oh, after 50%, then it comes down and you don't know. Oh, I got stopped out, then I lost another 25%. So I'm not giving them my 25%. This is my personal opinion, right? This is what I learned on our institutional desk. Money's on table, take it. Don't wait for another day. You could always go back. That's what I was taught by smart traders, and they have a world record, some of them. They're good, pretty good. I'm not good, right? I'm not like them. I just want to be, making some money, right? We don't need to be hero. As long as I don't lose money, my capital, and everybody knows my account. I am very, very disciplined when it comes to, and we are humans. Sometimes you get carried away, but I wake up and no more, and I will make sure I get punished myself if I screwed it up. So now I go back to the basic. You're not taking risk, you're trading small, and then start again. So I learned that from my trading days. The guy punished me. You're not trading 10,000 shares, you're trading 100. I said, what are you talking about? Yes, you do. Otherwise, don't come back. So I learned that discipline and plus Catholic school discipline. So it helps me. So now I'm going to have Jeb driving this MetaStock bus, taking to somewhere to you, even though it looks like a mountain ride, but it's a smooth ride. He'll take you there, and then we'll answer your Q&A. And this is the real chart. We were in trade, I think. Go. So I said, all right. The yellow bar came in and went to the moon. Fine gradients, we could see this spike. So I said, why not we create this thing with going to the moon, right? Going on a mountain here. So I put the go chart here. So to have a fun little bit, because it gets boring otherwise. So let's Jeff drive his truck, or this is a bus here. So you could ride with him. He has to say a few things. Then I will come back and answer all this Q&A, and we will analyze, because now we got time. So we're going to analyze all the security which we want to. So I did good on time, I guess. So we got plenty of time to analyze people and answer questions here. So Jeb, go ahead, and I'll come back.
Hey, Peter. Can you hear me okay?
Yeah, I could hear you.
Yeah, we don't have a lot of questions. I think I'm happy to kind of go in and talk a little bit about it, but I think we should just hit the questions. But whatever you want to do.
Oh, then you'll have enough time for you?
Yeah, we do. Absolutely.
Because I will try to analyze some of the security beside the question about somebody has suggestion they want to analyze on chart. I'll be happy to do it.
Okay. First of all, Dakari says, I truly love the 5 ingredients, gives me clear insight. He also loves the alert room, and he says it's insane, but it exists. So Hussein wants to look at Tesla, TSLA.
All right, so let's go to Tesla. By the way, I want to tell you some 5 ingredients miracles here. I had this one, not to show you guys, but I was looking at few things. What do you call? Let's see here. Okay, let's see Qualcomm. What happened? And the 5 ingredients. Then I'm going Tesla. Look here on a daily chart. This came in a scam, right? You can't go wrong. Look at this ingredients matching, right? I'm going to enlarge it so this way people get a little bit better understanding. And this happened in front of our eyes. It's recently, 10/14. I will never forget that day. I think it was 10/14, if I'm not making a mistake. Let's see. Oh, I'm sorry. Look at here, so everybody. Qualcomm had a hard time, right? So now the bull came in and 5 ingredients. Look, vertical line, 2 lines parallel, your direction line, I mean not direction, entry spike. Bull came in, right? Then pure health and your ribbon. And immediately next day, 3 times it's telling you that we are going higher. Look here, right in front of you. I can't write something like it's going higher because this software was examined by regulators, and we came up with a compromised language. They said earlier, so you're telling earlier kind of high, no guarantee. So they says use this language, earlier high, and then you show the risk 3.2 and whatever the call or puts option. That's why we have this language. But the idea here is you got 5 ingredients match. You did not believe, and the software is telling me going higher 3 days in a row. You can't ignore that fact. Then again, it's telling me going to the moon right here too. And risk is low. So you want to eliminate this symbol? Be my guest. You will not know this thing, and I want Jeff to know this thing too. Jeff has a better idea. We'll give you the version, doesn't show the symbol. You ignore that, but you will have a fallback, the old indicators in that case, and that we will do it in a next, whatever the time MetaStock gives. So if you are overwhelmed, turn it off. You will not have these features. After this webinar, if you do it, I think I won't do that, but you could learn without these symbols and then see if there is a symbol in the same software. You will have old one, this one, and new one without any symbols. Be my guest. If Dakari is there, would you do that? You've been trading. Dakari, can you answer these people? Would you do this thing without symbol? Answer that. Jeff can read because I can't figure it out. I don't see those comments here. So let him answer. So the point I want to make it here, this was crazy stuff. Crazy, really crazy. Then these are all institutions on top of that putting money. We were short. What happened? This color belongs to institution. This belongs to all institutions, medium, small, big, whatever. They're willing to take risk on. But if you can see here, it started way before the magic line crossed. They piling up, right? So we take advantage of this whole thing. My traders in room are smart. They take advantage of the situation. And again, it's telling risk is high, little bit high compared to here, but we're going to the moon again. You can't make things up like this. It is every time we see it. And you could scan any given time. You could see, all right. So Peter was talking about, oh, you could do 2 ingredients and something else. So this forecasting becomes your catalyst. So 1 and 2 and parallel lines, that's 3, and catalyst. By design, forecasting will give you the entry. So a lot of people wants to take off the symbol, but I see it as an entry point, right? Some of the things, and I could show you many, because I grew up with MetaStock. I have most of the copies in my home. Basically, people do have multiple arrows and up and down and confusing people. Here, this gives you the risk messages. The risk is low, go higher. If you don't want to do it, then we turn it off, right? But we use to our advantage. So these are, in my eyes, low risk entries. So while you consolidating and you draw the lines of whatever you want to draw the lines, I was one of them. Oh, breakout. I don't need to worry about breakout. Let me show you something, all right? And this is where we are different than everybody. Oh, you could do here. Now, if you are buying options, everybody knows that when this damn thing breaks out, you pay tons of money. I am not interested in that. Because when the volatility goes higher, you're going to pay the price. So you could draw these lines or vertical lines or parallel lines or eccentric triangles or whatever the things you want to do. It doesn't matter to me. Oh, consolidation. But this software tells you the story. After that, which place is breaking out? It's breaking out to the upside. It's going too high. You missed the boat. That's what I learned, how these institutions were making money without coming on radar. They're accumulating the money on its positions, and then boom. So they pay less in options, they less on a radar, and they quietly make it. But they knew they were going higher. You don't know. They all knew they were going to go higher. So you and me, right, as a rookie trader, waiting for breakout and all kind of stuff. And here, because when we were on institution side, we got about $10 million worth of like Qualcomm. You can't put $10 million position in one shot. You'll be in newspaper. Everybody knows what you're doing. So they buy here a little bit, buy here, 50,000 here, 50,000 here, clip, right, 25,000. So they stay. We used to use, if you know anything, Spearlead and Kellogg's, and they had some kind of software programming level 3 they were claiming back in days, right? So they will only show 500 and we put in 25,000. Only 500 they show and they stick in, right? That's how they were doing. So it's one of the trading software on the broker side, Spearlead and Kellogg's. I think they're part of RBC Capital or whatever, right? So basically, look at here. This is a golden time to buy options. And software was telling you, call, call, call. And you want to buy call when it's breakout? Excuse me, you want to pay to the nose? No. So I don't mind. And the weekly option guy can wait. I'm not telling, right? They see a couple of signs, such as this is not a bad entry still compared to here. You're chasing the goose here. Gap open now, everybody's chasing. So this is where you and your P&L will be different than the next guy. And we teach people to come in here. That's what I want to talk. So let's go Tesla. Hopefully a couple of people get a kick out of it a little bit. How we trading. And you could trade whatever you want. Doesn't matter. Tesla. So I by design train to do look at the multiple charts so I know what the picture looks like on a bigger time scale. So I'm designed to trade that way. That doesn't mean you cannot trade singly with 60 minutes. Be my guest, software is designed to do trading by itself. By the way, these are not Fibonacci's. They are patented magic zone levels. They adapt the changes and if they are more flexible, adaptive. So Fibonacci's are static. So we got the pattern for this thing. So they forecast upcoming levels way in advance. So I just want to let you know. So let's see Tesla, what it looks like. So here, magic line never cross. So this is a bounce. So I prefer to have Tesla going a little bit higher before I take the entry. But at the same token, my neighbor, I see what institutions are doing. They're taking positions. You see here? They're taking position. Some of the consolidation going on. What happened here? Right? So basically, yellow bar. So I would rather wait for a spike here before I put money into. That's my stand. And I like to go this thing above magic line and you will get a spike here also. And weekly looked great, right? They had a blue line support and it is going or it's going to try to do test of this level, right? And what you could do, you could take these, copy and paste here. It broke important levels, making new highs. That's what it is, right? And we could also forecast it where it's going to go. But right now, as a technical trader, right, the next goal is here, ultimate goal nearest, right? And hopefully it stays above the blue line. That's the risk, right? If I had to put the stop, right, magic line is in between. So I put the stop in magic zone level or blue line. Either of them is good. And as long as the price stays above, we have less risk. That doesn't mean it's not going to come down, right? Tesla is a crazy stock. So I don't trade this stock and I'm even not too much excited about playing option too, because option premiums are out of control. So I have better opportunity, low risk. If it was here, right? Like this one, 5 ingredients matching, right? Then probably I will go here and buy the options. This was the really entry area. And my software was telling we're going to go to the moon. We did several times. Look here, going to the moon, going to the moon. And as you go higher, right, it's going to be riskier, right? So you could say, I'm an engineer. We could talk about slope and angles and everything. I could make more complicated, but it looks good, looks like a mountain. We go there. And I could give you dozens of variations on a slope and angle as an engineer. So that's what we learn. So Jeff will come with whatever. Right? I don't want to talk about anything. Start from G. Make it simple. It looks good. Look like a mountain. We're going up. That's it. And I could scan in a trading room. I'm showing them. I could scan all the slopes and angles and everything. So we are designed by that, but I don't want to make things complicated. For a single people, simple trader, it looks good. Going up, we're going up. Prices are above the green line. Don't forget that. It's risky. This is unsustainable. So that's why it drops like this. So you have to have a stomach. Am I trading this way? No, I'm not. And people in room, I have better opportunity with a less risk. And with my age, I got to see my risk management. I'm no longer young anymore, 25 years old. So I can trade so many good stocks, right, with less risk. If it was here, I feel low risk, then I will go. Any other security, any question people wants me to analyze?
I think we have time for one more question, Peter. And that is from Hussein. He wants to know if it will work on intraday charts.
We are trading intraday also. It works on intraday, end of the day, right? Over the weekend, because we're trading cryptos. I do, right? I trade only what MetaStock gives to me, plus Coinbase gives us some things. I only trade with exchanges which are recognized by regulators, because I don't want to get in trouble. Look.
Okay. Awesome. Let me talk about how people can get this.
Yeah.
Is it a good time?
Yeah, I just wanted to show them Bitcoin. Look at the famous Bitcoin. We knew Bitcoin is going down right here. 1110. Look here. What is the purpose of going long? Everybody's buying, that's why. No. We knew it's going down. Look at this. And this was the last call to stay long. Once it crossed zero, close below, all bets are off. And further danger looks like this is institutions selling it. Just wanted to show you that you could do crypto with that too. But it's very risky. Don't put too much money in there. But look at the entry. We all knew it. 5 ingredients. Jeff, you have to see this thing. Thanks to you to have at least 6 currencies, cryptos. Look at here. Yellow bar. 5 ingredients. And what was the price? Around 40 grand. We could take whole ride here. I went in there. So I will tell you, these cryptos you could plot with MetaStock. Don't underestimate. And stay with the good currency, not all the junk. You could do fun, but not the core is, in my opinion, Ethereum and those, they're not going to go away. Other coins will go away. But these people are here to stay for a while. No guarantee, but comparatively, I feel more safe trading those. And you could trade with even $20 today. You don't need to put 40,000. All right, go ahead, Jeff.
Well, I was also going to remind everybody, if you guys have symbols you'd like us to look at, or you want us to pull some charts for you,
yeah,
we're happy to do so. We are. You can always email us at metastock.com/saleschat, or you can give us a call at 800-882-3040. Hussein wants to know if you can look at a smaller time frame.
Which time frame you want to see?
Well, I guess 30 minutes. He didn't specify.
Yeah, I will do it right now. Hold on a second. So we have a template for that, but to use this time, this is what I'm going to do. Look. This is hourly, right? So the way in which it is designed that hourly will work on a smaller time frame, I think it's up to 10 minutes, utilizing the same background. So let's convert this one into 30. And it is true that each time frame has their own magic lines, but basically it's not going to make much difference from my experience for today. So 30 minutes, look. So you could see the magic line disappeared because they are not designed for 30 minutes. But you could see here, it works the same way, fine gradients and everything for 30 minutes. And it is true that if you want to trade Tesla, you should look at smaller time frame, because otherwise you're going to have a lot of drawdowns. It's a wild stuff. And if you want, look, find the ATR, right, on a technical basis, right? If ATR is more than 3, those are, going to give you heart attacks. I don't know how much is Tesla, but Tesla has a ATR, I do believe. Let me see something here. So I looked at ATR when I want to make decision how risky it is and how much stomach I have left for taking the risk. I don't know. So you could find from MetaStock ATR. It's not a big deal. So look at the ATR and decide whether you want to trade those kind of stuff, which gives you heart attack. So am I answering his question? You could do smaller time frame, unless if you have time, then I could go and pull out the template.
I think that was great, Peter. Let's go ahead. And I do think there is like about a 8-hour hard limit on YouTube. So I think we should talk about how you can get this.
All right. So I just want to tell you, ATR on a Tesla is $54.
Okay. All right.
You know what that means, right? In a day, movement average true range is $54. So if you're on a wrong side, if it's the wrong timing, it can hurt you.
Oh, yeah. There was a comment in here I wanted to read from Shamori, who also has been there's a poll in YouTube. I'm going to answer that poll, but I can't. Let's see. Shamori says she loves the room. She sees it all the time in the room. She loves being part of the room membership. So let me go ahead and do this. We are running a little bit low on time. Let me go ahead and change over to me real quick. Yep. I'm going to go ahead and show my screen. Peter, thank you for your time today.
Thank to you and Kelly both.
All right, cool. All right. And as you can see, you've got the 58 indicators. It's a huge add-on. Really, it's 58 indicators, 47 exploration, 2 expert advisors, 35 templates. Good job, Kelly. That was like within 3 seconds. 35 templates, 127 pages of manual, which is actually very thorough. I was able to kind of understand exactly what Magic Trader was just by kind of going through it. In addition to that, you can see the symbols and the highlights and the commentary that's available. We did actually sit down with Peter and we recorded a boot camp that kind of walks you through it. And that's all part of the Magic Trader Elite add-on that's available as part of MetaStock. The other thing that we kind of talked a little bit about today is the Magic Trader Consulting Education Room. With that, basically you get special webinars that Peter does 2 times a week. and he talks about stocks that he might be interested in. He talks about short. You can see kind of the list here: hedging strategies, earning strategies, market sentiment, earnings calendar, covered calls. It includes really good access to him, and people absolutely love to kind of sit down. The people that kind of go to this room absolutely love it. So I'd encourage you to try it. With that, it does very. With that. What I was going to say, and I kind of got distracted over here, but what I was going to say is people that actually go to the room, the retention is very, very high. People really like the room. So I'd encourage you to try it. We are going to do, in addition to that, we're going to include the Fundamental of Magic Traders, which is a series of recordings that we sat down and recorded with Peter earlier this year. They include the 4 modules. Those modules, I remember being quite extensive. You know, you look at the kind of the stuff that he goes through, like the fundamentals and the introductions and the dimensions of risk. I remember that Peter really underpromised on these and really, really over-delivered in terms of the amount of content and copy that was available. So this is all going to be part of a package. In addition, he does offer the magictrader.com and the Magic Trader Facebook group. All of this is available. Basically, if you were to purchase all of this separately, it would be about $2,193. And you can see the breakdown in pricings right here. As part of the offer today, we're going to give you access to that Magic Trader Elite. 3 months of that, the educational alert room, which is basically a lot of really good time in an alert room with Peter. You're going to get access to all of those recorded trainings, which is a value of $699. The access to his all his social media groups and his education portal. It's been a long day. All of that is just $599 for 3 months. So basically, if you pay $599 today, you're going to have access again until February 18th. Okay. Then during that time, you'll be able to kind of see and really get a feel. You'll be able to go through all the training, make sure that it's something that's useful for you. And it's only $599. So normally the value, as you can see, is $2,193. Now, if you haven't tried MetaStock yet, if you haven't heard of MetaStock, MetaStock has been rated #1 for the last 28 years in a row as the best software program in its price category. We will include absolutely a free 30-day access to MetaStock as part of this package, or you could also consider doing the extended trial, which we've been talking about all day long and all week long, where you can try MetaStock for 1 month and get the second and the third month for free. So the total cost here is $599. That'll get you good until February 18th. Plenty of time to kind of get really involved in Magic Trader, make sure it works well for you, and make sure you're happy with it. 1-800-882-3040, metastock.com/sales chat to kind of take advantage of that. Before we do that real quick, I do want to say thank you again one last time to Stocks and Commodities for sponsoring the event today. We really appreciate them and the support that they've been for us over the last decade, just supporting every conference, every summit, everything that we've ever kind of put together as a multi-speaker. Want to thank all of our terrific CMT. We'll take CMT first. I want to thank CMT Association as well. They did such a great job in helping us get some people here. It's a great organization. We're very, very proud of the sponsorship. You can find out more about those at cmtassociation.org. And then we'll go here. So, and then of course, MetaStock. 28 years in a row, it's been rated the best software in its price category. Helps you scan the market, test trading ideas, forecast, real-time commentary, alerts, and signals. All this starts at $69 a month. You can get an extended trial. You can get that extended trial at www.metastock.com/conf-promo. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/sales chat. So Dinesh says, thank you, Mr. Dala, for your energetic lecture. I appreciate your coming in as well. Wow, the YouTube results are in as well. Out of the people that are on YouTube, half of them, 50%, have been to all 4 days of the conference. So thank you for that. I do want to thank Peter. I also want to thank all of the presenters today and yesterday and the day before yesterday and Monday too, and the ones that are coming up for tomorrow. Kelly and I were talking about this today, and we are just so pleased with the quality of speakers that we've had and kind of the amount of information that they've been willing to share. I think it's been an amazing event. I appreciate everybody that's been involved in it, and you. We couldn't attract all these really good speakers without you coming and being here every day and being part of it. I hope it's been worthwhile for you. I hope you've enjoyed it. And I hope to see you again for our last day tomorrow. Thanks, everybody. Give us a call if there's anything we can help you with. 800-882-3040, metastock.com/sales chat. And we'll see you tomorrow.